30 points off from the session highs. Hi.
Hi, Rima, but I think the markets are still very much in green mood and green mode. And you're seeing, I mean, the good thing about hitting the peak this time around is that there's no immediate reversal, immediate profit taking, which is what had started setting in when we had the previous high, I mean, that level of around 22,800. So right now, the market seems to be in fine form. And once again, I mean, it's got a lot of different legs. So if we talk about the large cap screen, then, you know, you've got some of the major movers and shakers like L&T and Bharti. They're continuing the good work from yesterday. Heavy hitter like HDFC Bank is still on the positive side. SBI is positive. So it's still a pretty decent looking screen. Not too much of a problem out there. But one needs to watch out for the counterweights on the lower side. ITC has been a bit of a drag since yesterday. Very mixed performance coming in, though the FMCG business and the cigarettes business was on track. But still, I mean, I think because of the weakness that we've seen in the paper business and the agri business, some tweaking of those earnings estimates have happened, and that's been weighing on that one stock. So that's how it is. Let's pull up the contribution chart, actually. You will see Infosys and TCS also on the downside. So it's a very even split between the big boys on the upside and the pressure points on the downside. Right now, it's even Steven. Reliance, TCS, Infosys, they're on the red side of the screen. But you've got SBI, L&T, HDFC Bank. They're doing the good work for the bulls on the green. And I think as the day progresses, we'll know which camp wins, Rima.
Oh, absolutely. But right now, I think telecom is one of the big movers. Yeah. The way Vodafone Idea is moving, we've had multiple upgrades, But every time we had an upgrade, the target price was about 15 rupees, which means the risk reward never appeared to be that favorable, right? Because you're playing for an upside of 2 to 3 rupees. But today's note is putting the target price at 18 rupees, which means from where the stock started at 13, 14 rupees, the risk reward started turning favorable. And there were so many upgrades, right? There was Kotak, there was Citi, and now latest UBS. So now all the brokerages who had dropped coverage on, Vodafone Idea have reinitiated it with, a bullish call. But first,
I'll just, before we move on, Rima, just quick check on mid-caps as well. The mid-cap index is outperforming the frontline indices today for what it's worth, about 0.4 of an increase coming up on the mid-cap index. And apart from Vodafone Idea, I just want to point out some more stocks that are managing to find traction. Look at a PFC, which is up and about today. Some of the PSU names like GAIL, BEL, they're still finding traction. Some interesting movers beyond the volume chart. So if you look at something like a Johnson Hitachi, there's a 20% circuit on that stock. Some tremendous buying taking place today. So that's one that really stands out. Fertilizer stocks, I want to point out, perhaps it's the onset of the monsoon season, some excitement around that. But your, NFL, RCF, Madras Fertilizer, Chambal, all fertilizer stocks are up almost 8 to 9%. So that's one big move that's playing out in the mid-cap market as well. But anyway, since we're talking about a lot of the movers and shakers, let's also look at Finolex Cables. Now, that stock has been surging after the company reported a good set of numbers for the fourth quarter. Upasna is here with more details. Upasna, fill us in. What has worked so well for Finolex? Almost 17% now.
The company reported good set of numbers in its Q4 FY24. The numbers were above the street estimates. The revenue saw a growth of 14% on a YoY basis and stood around 1,400 crore, while the street was estimating a number around 1,329 crores. The revenue growth was mainly driven by growth in electrical cable segment, which contributes almost 86% of the company's overall revenues. Now, coming to this segment, the revenue saw an uptick of 16% on a YoY basis, while margins dipped 70 basis points and stood at 12.1%. It is also important to know that the share of low margin segments like communication cables also decreased from 14% to 9% on a YoY basis. Coming to company's overall EBITDA margins, they saw a downtick of 30 basis points and stood at 11.6%, while the street was working with a number of 12%, which is slightly below the estimates. The PAT saw an uptick of 6% and stood at 186 crores, while the street was working with a number of just about 145 crores. So all in all, we are seeing a good set of numbers reported by Finolex Cables in its Q4 FY24.
Okay, all right. Thanks very much, Upasna, for that. Let's move on. So that's Finolex on the upside. A stock that's reacting quite dramatically on the downside is actually Orchid Pharma, down almost 8-9%. And that's also a result reaction. So let's ask Ekta. Yeah, 9%, no sign of recovery. So let's ask Ekta what's gone wrong. Ekta, fill us in.
Well, yes, a disappointing set of numbers which has come in for Orchid Pharma. So the revenue was up only around 3.4% on a year-on-year basis, and even on a Q-on-Q basis, the revenue did see a decline. It came in at around 217 crores versus 220 odd crores. What also disappointed were the margins, which came in at only 13.3% versus 18.9% year-on-year. The EBITDA came down by around 27% year-on-year. And on a Q-on-Q basis as well, the margins were 13.3 versus 16%. That really trickled down in terms of the profitability, which came in at around 33 odd crores versus 59 odd crores. And this compares to 33 crores versus 29 crores Q-on-Q. So a disappointment which has come in for Orchid Pharma, which has been pretty much a top-down disappointment, with the margins really standing out as the key negative.
Thank you, Ekta, for that big fall in Orchid Pharma, 9% gone on that. But let's get to a corporate conversation now. Shares of JK Lakshmi Cement are higher in trade after the company reported a good Q4. The key positive was the margin expansion. We generally haven't seen margin expansion in cement companies, but for JK Lakshmi, margins expanded to 16.7% versus about 11% year-on-year. That said, the volumes were a bit of a disappointment. Volumes declined by 4% year-on-year. To talk about the way forward, we have Arun Shukla, President Director of JK Lakshmi Cement, to take a few questions, for us. Thank you for joining in. First, if you can guide on the volume front, what's the guidance on, in terms of volumes for FY25, and can you break it up in H1, H2?
Yeah, so our volume guidance is 10% plus. H1 is going to be around maybe 8% and H2 around 12%. So that is what we are targeting. The reason for a little lower H1 is April, June is not good because of the general election which is happening. And I hope that, after elections, things are going to be better in terms of demand, and hence our growth also will improve. So overall 10% plus, that is what my volume guidance is.
And so what's the pricing trend looking like? What is the current price versus the average of Q4 and your expectation as the year progresses?
Yeah, so prices, once demand improves, prices also will improve. April, June price-wise, April, May has not been so good because, January, March also prices were stable or going down. April, May also has not been good in terms of prices, and primarily because of the demand. Once demand improves, prices also will go up. From here on, I see that prices will definitely improve, and means at least 1.5 to 2%, 2.5%. That is what I see the price increase. This is what my estimation is based on the fair estimation which I can do as of today.
Sorry, sir, April, May prices, what are they currently compared to Q4 average? You said they're subdued. How much lower?
Yeah, a little subdued, so maybe around a percentage lower than quarter.
And this price increase of 1.5 to 2.5%, how soon will you be able to effect it?
I think that will somewhere, it will happen maybe once demand improves in the month of June and post Diwali. That is what I see prices will.
All right. So that's the view coming in on pricing also. Can you talk about this margin improvement that you've seen? What can you guide now on your EBITDA per ton, because you're also focusing on renewable power?
Yeah, so before that, I think I'll tell you what we have been doing for the last more than 1 year. We have been focusing on all those efficiency parameter or levers within our control. So we have done quite a bit on top line part of it, be it segment mix, geo mix, or product mix. We have also been doing quite a bit in supply chain, improving supply chain efficiency using technology. And cost front, particularly operations front, our focus was on renewable energy and alternate fuel. All these initiatives are going to, take, further, impetus and focus going forward. Our focus is to further improve upon all these parameters, particularly on cost front. We are going to improve our renewable proportion of energy. Last quarter, our renewable energy proportion was close to about 47%, and on an overall basis, last year it was about 37%. So we are trying to take it to 50% in FY25. Similarly, AFR also we have established capability to use AFR at our different integrated plant. So there also I see some kind of improvement going forward. So these are the two elements which is going to give us, benefit in terms of improvement of margins. And supply chain efficiency, of course, I think this is one thing which we have been working on this, aspect incessantly, that will continue to work on. There also, I think I see, improvement going forward. And of course, I think you mentioned about, volume. Volume, I think our volume was little bit lower on account of, some of the outsourced units which we had. Those units were not making much of a sense, so we reduced our volume from those, outsourced units. Otherwise, if you see our capacity utilization last quarter was close to 90%, and for the whole year it was, 81%. So which is, better than the average of the industry.
Mr.
So,
Shukla,
yeah.
Yeah, Mr. Shukla, sorry, so just to go back to the central question, now that you're expecting better volumes, particularly in the second half, you're expecting some stability on pricing, and your sort of your power mix is changing more towards the renewable side. All put together, EBITDA per ton, what is a realistic expectation to have? I believe your last 2 quarters, you've been around 1,000 rupees per ton. Can you just tell us where were you in Q4 and what's the projection now with all these measures?
Yeah, Q4 it was 1,049 our EBITDA, and this is what we have been working on, crossing this 1,000 rupees per ton EBITDA barrier, so which we have crossed in the last 2 quarters. Going forward, also our endeavor is to be around that only, but along with that, I would mention that we'll measure our performance in terms of EBITDA per ton of the industry leaders. We want to be amongst top 3 to top 5 companies in terms of EBITDA per ton. This is what our plan is, and for that we have put up our actions also around this.
Okay, just a follow-up question on just to understand pricing and volume. Volumes, you're saying that overall growth for the current fiscal year should be 10%. The election impact will be over and done in Q1, but then the monsoon period sets in. So Q1 and Q2, will volumes be flat, best case, or will there still be some decline in Q1 and Q2?
So Q2 is going to be better last year Q2 because some of the leftover demand will come in the month of July. August, I think, is going to be almost the same. September definitely is going to be better than last year September. So my estimation is Q2 is going to be better than last year.
Q2 will be better than last year, so we should have some volume growth. Now on pricing, I mean, can you give us some more color on the competitive intensity and again, by when does the pressure start abating? I mean, is it realistic to expect pricing increases perhaps as we get to that Q2 period when even volumes will improve, you're saying?
I think you need to look at, the capacity addition which is happening. Overall, industry capacity utilization is about, 67 to 68%. If you see, CAGR, 5-year CAGR of capacity addition is 5.4%. And demand is 5.2%. So capacity utilization is lower in cement industry, and that is what has been traditionally even before, because this industry is cyclical in nature. So July, August, September typically low, so you have a lower utilization, and then January, March, and October, March, people utilize their excess capacity. So that is what it is. So I think this situation is going to remain. And price movement is going to be dependent on the demand, progression. And typically this happens during Q1 of every year and Q3, Q4 of every year. So this is what I think that pattern will continue even going forward.
Yeah, except this Q4 was different, right? We had pricing compression, so it was a bit of an unusual fourth quarter for cement companies.
It was an aberration, yeah.
Yeah. We were talking about capex. Just a word on capex as well. I mean, there is capacity utilization across the sector. Your numbers have been trending higher as well. Nigel tells us that your capex for FY24 all put together was about 1,000 crores. What's the projection for the current year?
So current year, I think Surat grinding station we are commissioning. So we'll be commissioning around Q3 of this year. So their total capex is about 225 crore. Apart from that, we have railway siding which we are commissioning at Durg. So that is getting partially over. Maybe I think by Q2 we'll be concluding there that as well. So that is about 220 crore. So around 500 crore. That is what the capex. Along with that, some of the announcements which we have done, like 4.6 million ton capacity addition in central and eastern part of India. So part of that is going to be spent during FY25. So exact estimation I do not have as of now, but that we can kind of consider some part of it is going to be spent this year.
Okay, just a quick word. What is the current debt? Can you give us the number?
So current debt, I think our net debt EBITDA standalone basis is 0.22, right?
Okay, and the absolute debt?
Absolute debt, I'll just give you the number. I think I'm not carrying that number, but I think that is not much. Maybe it's 0.22, maybe around 700 crore or odd, right?
Okay, and any chance of a fundraise to fund the capex?
Of course, I think it's going to be in the ratio of 2:1. So we have already announced 2,500 capex for 4.6 million tons. So it's going to be in the ratio of 2:1 in terms of debt and internal accrual.
And since we're talking capex, money utilization, funding plans, is inorganic growth a route that you're considering at the moment? Anything on the radar? What's the thought process there, sir?
I think right now our focus is on greenfield and brownfield expansion, and that is what we are focusing on. But we cannot rule out some opportunity comes in which really gives value to us, and that's also fits into our strategic perspective. Definitely we'll look at that as well.
Okay. All right. We'll have to leave it on that note. Out of time, but thank you very much for joining in and giving us some idea about the business. That's JK Lakshmi Cement. Q4 has been good because of strong hold and strong control on costs. Though, of course, volumes, pricing, not the best in this quarter for this company and most of the cement companies, actually. That's been the nature of Q4. We'll take a break on that note. We'll come back on the other side and talk commodities. We'll have Manisha Gupta joining in.
Any unexpected shifts that might happen on the revenue and the expenditure side. This is actually going to add to the cash surplus that the government is sitting on. This could very well go, above 5 trillion INR, and therefore some sort of a reduction in the borrowing, could happen. Again, the details of this are likely to get announced in the budget. And as Somiran was saying, it's really positive from a demand-supply environment. So our own forecast is that the 7-year as well as the 10-year bond yields could drop to 6.75%.
We were putting out in our notes saying that there is a possibility that the RBI dividend will be significantly higher than what the government has budgeted for. And so that way, it's not that big a surprise for us. Yes, it means that the government has three options in some sense. One is that it can reduce the fiscal deficit, 0.3% of GDP, as you mentioned. What the initial thought process was that the government will do only somewhat marginal tweak to the interim budget numbers, because the interim budget itself was quite detailed. Now, with this more than 1 lakh crore extra kitty, the budget maths will have to be reworked, and it will become very interesting, and the market will keep on speculating till it's actually announced.
The pressure is building on Israel in a historic move. Not one but 3 European countries, Norway, Ireland and Spain, have announced that they will recognize an independent Palestinian state. The announcements were made in quick succession and in a coordinated manner in the hope that this will help bring peace with Israel. The formal recognition in all these 3 countries will be made.
Welcome back. You're with us on Trading Hour. Let's talk commodities. As promised, Manisha is joining in. And now, Manisha, are you still tracking the silver lining of silver? Any let up in prices, or is it still those record levels? My God, don't tell me it's already touching like 1 lakh or something in the Indian market.
Well, not too far away from that, really, Surabhi. And if you look at, if you add the GST and if you add the taxes to it, people have bought silver at 1 lakh as well. And with expectation that you could be looking at higher prices going forward. The reason I'm talking about silver today is because we are looking at strong gains continuing for the month of May. Silver is outperforming the whole metal as a sector there. And we are still holding around 30.5. The high that we've seen in this week itself has been at 32.5, and for the Indian markets, while an all-time high has been 95,000 rupees, we are holding around 93 to 94 at this point in time. So the strength pretty much has continued. Now, the reasons that the street believes that every healthy dip or a small correction also is good for buying is because you have strong fundamentals backing this. While of course the rubber from gold and the strength in base metal prices is supporting silver, but silver also, its own fundamentals have been stronger. This is going to be the fourth straight year that you're looking at a global deficit in markets. If you look at the demand that we've seen come in from solar panels, from EVs, has continued to be on the stronger side, and the street believes that millions of ounces is what you will be seeing being added to demand from industrial side of the category every year in case of silver there, and the supply perhaps will not be able to match on to with that. We also are looking at very strong strength in sense of the ETF buying that has been stronger in the international markets. For the Indian markets as well, we have seen 15,000 crores of holdings now in case of silver ETFs. Also, when you look at the gold and silver ratio, well, that stands at 70 now. It was at around almost 85 and 90 in the month of January. So that suggests that there could be some correction coming in for silver, but that also tells you that the momentum for silver can continue to be stronger. I also want to quickly take you in sense of what we have seen as average prices for last 4 years now. So, of course, 2021 was a strong year. We saw $25 as an average price. The last couple of years was around 21 to 22. But this year, until now, the first 4 months, the silver average price has moved higher to around $27 an ounce. Going forward, the expectation is that you could be looking at higher highs. For this year, we started this year with $23 an ounce. We've done 32.5 already, with the street anticipating that if holds above 32, you could be looking at $34 and $36 an ounce coming in for silver as well.
Thank you very much for that. Time for a short break. On the other side, the management of Nucleus Software Exports will join in to talk about their Q4 numbers and the way forward.
However, an angry Israel immediately called back its ambassadors from Norway and Ireland, warning that such a move will fuel extremism, terrorism and instability. With the rising civilian death toll in Gaza and the International Criminal Court evaluating the application for arrest warrants against Prime Minister Benjamin Netanyahu and Hamas leaders, all eyes are on Israel's next move. Let's try to understand why these countries have done this. Norway's Prime Minister said, and I quote, "There cannot be peace in the Middle East if there is no recognition." Spain's Prime Minister also reiterated that it's essential that the two sides, Israel and Palestine, negotiate for peace, and it's for this reason that we recognize Palestine. While the Irish Prime Minister said that Palestinians in Gaza are enduring the most appalling suffering, hardship and starvation, and permanent peace can only be secured upon the basis of the free will of a free people. So what exactly is the significance of recognizing Palestine as an independent state, and what is the two-state solution? Simply put, the Israel-Palestine conflict is one of the oldest and persisting conflicts in the whole world over who gets what land and how it's controlled. And a two-state solution hopes to resolve it. It's fundamentally about how or whether to split the country's territory between the Jewish and Arab population, Israel for the Jewish people and Palestine for the Palestinian people. Some 143 out of 193 member states of the United Nations recognize a Palestinian state, including India, that supports the two-state solution. In 1988...
Welcome back. Shares of Nucleus Software are under pressure. The stock is down 4%. Yesterday, though, it was higher by close to about 7%. Now, the top line of the company has seen a growth of close to about 2% on a year-on-year basis, and even on a quarter-on-quarter basis, growth has been close to about 3%. Margins are down on a year-on-year basis, but they have improved on a quarter-on-quarter basis. Vishnu Dusad, co-founder and MD of Nucleus Software Exports, is with us on the show now to take a few questions. Thank you very much, sir, for joining in. This is Reema here. First, if you could just talk about this top-line growth of yours. You know, you've been a company which has been seeing very strong growth. Even for FY24, you've seen about a 30% top-line growth. It's just that in Q4, the growth rates appear to have dipped. What happened?
Ours, we are in a business which is sporadic in some manner. Our top line depends on the size of the license orders that we are able to pick up. And sometimes, the orders get delayed by a quarter or so. and that is where our top line would not reflect the performance.
Okay. So how many orders have gotten delayed? I just want to understand, is this a one quarter? Will growth bounce back in Q2? Or is there a slowness in the market also?
No, I would not say that there is no slowness in the market. There is demand in the market. However, it will depend on how soon our customers take decisions, and also our pricing is also something that it is no longer the low prices at which we were selling, so our customers are taking some time to take the decisions.
So now that you've sort of raised the pricing bar for your own self, will this result in lower growth for you going ahead? Because you were a company which has seen very strong growth over the past many years. So last year was 30%. In FY23, also your growth was 27-28%. Now going ahead, should we align ourselves to a 10-15% kind of growth? And what is your own expectation of FY25?
As a policy, we do not give guidance that you may be aware of. Now, and having said that, there is no reason for us to believe that our growth numbers need to be moderated. We would continue to grow at a good pace. This is what I would like to say.
And sir, what about margins? I mean, what is the visibility that you have? They have increased quarter on quarter, but your peak margins, I believe, are closer to 40%. So what are the cost pressures at play? And given what you're saying about pricing, what can one expect on margins?
Margins would be directly dependent on our top line, because our expenses are kind of built in, and the quarters or the year wherever the top line is better, we look forward to better margins.
But is 40% a distant milestone now in the past? Or is the ambition to start going back above, gradually 30, 35, 40? But is it possible to get back to those kind of levels?
Certainly. It is possible.
And what would be the levers, sir? I mean, with what conviction do you say that?
The intellectual property that we continue to create is absolutely world class, and there are discussions with customers, I would say, all over the world, where they're keenly looking at deploying our intellectual property for their businesses, and this confidence comes out of those conversations that are going on with our customers.
So you said that your pricing is no longer the cheapest or the least, and you have taken a pricing correction and increase. What has been the average increase, and is there more to go?
Okay, I would not be able to comment on average increase. It's very difficult. It varies from customers' earlier position to current position. We have been able to negotiate and so on. So it's difficult for us to comment on averages.
Sure.
Yeah.
Okay. But are you still in talks, negotiating with your clients for a further price increase, or is that done?
It's with the customers with whom we have got it increased. It is done for the time being, and for the rest of them where we have not been able to negotiate, we will take some time.
So what percentage of your customers have you managed to exact a price increase? Is it 30%? Is it 50%?
No, it is already in the 70-80% range.
70-80%. So with 70-80% of your customers, there has been a price increase. And with the balance, you're still in talks.
That's right.
Oh.
That's right.
What is your order book now currently, sir? I think last time it was 744 crore.
It is in the similar range. I think 830 crores or in that range.
Okay. And the cash in the books, you are eligible for a buyback. So is that on the cards this year in FY25?
Yeah, board would take that decision. As of now, in yesterday's board meeting, this decision was not taken.
Okay. India business has slowed down both quarter on quarter and on a year-on-year basis. The revenues from India, and that's more than 50% of your overall revenue. Can you pinpoint the reasons for that? And also tell us a little bit more about the deal closures which got deferred. What was the extent of that? How many deals? Were they large deals? Any of them got cancelled, or are they all going to fructify in Q1?
Timeline I would not be able to say, but at least 5 deals would have got postponed, and they were of various sizes, small to medium, I can say.
Okay. All right, sir. We'll leave the conversation here. Thank you very much for joining in and wish you all the very best. We'll get into a break. On the other side, we'll talk market technicals. Jay Thakkar from ICICI Securities joins in next.
First countries to recognize the Palestinian state. However, countries like the United States and the United Kingdom don't.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian market.
Welcome back. Today, the day belongs to telecom names, particularly Vodafone Idea, and we've seen a very, very big move in Vodafone Idea. The reason is UBS has upgraded Vodafone Idea to a buy, and they've raised the target price to 18 rupees. So even after the current, up move that we're seeing, there is still some upside to go. Now, this is predicated on 2 triggers playing out. One, a tariff hike. So UBS estimates a 15 to 20% tariff hike, a price increase in the next 1 to 2 years. Secondly, some relief from the government, which could be in the form of AGR dues, the adjusted gross revenue dues that the company has to pay to the government. And according to a lot of analysts, that number could come down by close to about 50%, if not more. So these are the 2 big triggers which are likely to play out for Vodafone Idea. And the reason they're anticipating that is that the government has made it very clear that they want 3 private players. They want this to be a competitive market. The UBS is also making that argument that all the 3 players right now, Airtel, Jio and Vodafone Idea, are trading at similar valuations of 11 times FY26 EV to EBITDA. But Vodafone Idea is the one where there is a maximum upside if these triggers play out. They're most leveraged to any of these announcements, and therefore the risk reward for Vodafone Idea is the most favorable. So which is why they've upgraded Vodafone Idea. They, as in UBS, has upgraded Vodafone Idea to a buy with a target price of 18 rupees. But for Airtel and Indus, it's still a neutral call. So that's the big call coming in from Vodafone by UBS on Vodafone Idea, which has got the street excited.
Absolutely, and it's really showing up on the stock. Already has moved to a level of about 15 rupees now. That's Vodafone Idea, 10%. today. Well, let's talk about a couple of interesting trades that you can look at and the index levels now that we did get that milestone of 23,000 on the Nifty. We have Jay Thakkar joining us and he's with us in the studios today, Jay. So great to have you in. Tell us, 23,000. The question is, is there more to this move and this rally?
Thank you, Surbi. Good morning to you and Rima. Well, see, what's happened is every time we have seen, Nifty, since Jan of this year, is that Nifty makes a new high and we see a sell-off coming from there on, right? And again, it clocks a new high by say a couple of 100 points to 300 points, and again we see a sell-off. So last time what happened is it just made a lifetime high by say 4-5 points. And thereafter, we saw 1,000 points cut.
Sell off, yeah.
And then, Nifty sort of formed a range of, say, 22,800 to 21,800. So that was 1,000 points range. And that range has got broken on the upside. So, if you just go technically, then, you can see the levels of, say, 23,800. I mean, that could be the target on the upside. But then not forgetting the previous trend also, or the previous pattern also, that whenever it makes a new high by, say, a couple of points, a couple of 100 points, it makes a sell-off again. So those levels comes to around say 23,200. So at least in the short term, you can see 23,200 coming on Nifty. So that's another say 200, 250 points from here on till 22,800 levels are held. It's just the only thing is that Bank Nifty is just not has not made a lifetime high. Rest most of the sectoral indices or maybe you see broader markets, they are the lifetime highs. So if you see more momentum coming in Bank Nifty, that can help Nifty to surpass those 23,200 levels as well.
But you are seeing the likes of HDFC Bank, for instance, move today. So HDFC Bank is up close to about 1%. Jay, what's changed this week is that large caps are outperforming mid caps.
Absolutely,
so week to date, the Nifty is up 2%, while the mid cap index is up 1.4%. What would be your stock specific calls? And do you expect large caps, blue chips to lead the way?
Absolutely, Rima. What we have seen is that mid cap, small cap, or maybe broader indices, probably few sectors like auto, metals, they were performing quite well. They were forming new lifetime highs. But then banking was struggling mainly because of HDFC, Kotak, and the likes. But then I think now the index heavyweights are ready for an up move from here on. We are seeing fresh breakouts coming on out there. Hence, I've got 3 buy recommendations, and all of them are from Nifty 50. The first one is on Reliance. I think Reliance seems to have completed its consolidation or correction. And from here on, I think that till 2,900 levels out there are held. In the short term, we can see the levels of say 3,060, 3,100 coming very soon in the near term. Second buy recommendation is on Ultralex Cement. Now, this has underperformed quite a lot. And from here on, I think it can see the levels of 11,000. It's trading around the levels of 10,300 on the downside. I believe that 9,700 would be a very crucial support for it. And the third buy recommendation is from the banking pack. I think one of the outperformers in the banking pack is Axis Bank. Post its results, we saw a huge up move of almost 6-7% in a day. Now on the downside, I think it has got a support nearly around 1130. So with that as a stop loss, one can buy this targeting 1220 on the upside.
Okay, so big large cap moves, and why not? I mean, if yesterday was anything to go by, over 4,600 crores of FII money coming in, that's big buying, and it's been missing all through this year. Those kind of numbers are missing in the market. Let's see if it becomes a pattern or not. Jay, before we let you go, I'll actually give you a couple of minutes to perhaps look up some consumer stocks and tell us if you like anything over there. We're just going through some earnings right now, and in fact, we have Manglam with us. So both Bikaji and Honasa, both of these stocks have reacted pretty well to their numbers. Let's go across and figure out how the fine print looks. I think on Bikaji as well, the stock's still up about 4%. Manglam is here with us. Manglam, tell us more.
Well, a lot of bhujia was consumed. That's the lowdown on Bikaji because, the numbers were doing well.
With pretty-looking people with good skin, can we say?
I guess so. So, the thing is that for Bikaji this time around, the fact that they had entered into this, capex plan, etc., got them a lot of PLI benefits too. So the other operating income of the company was aided by around 94 crores. Even if you adjust for that, the volume growth of the company was close to around 14% in the fourth quarter. Revenues grew just about 13%, and that led to margins staying stable around that 13% mark as well. And we saw net profit growth of 22%. Now, if you look at the segments of the company, nearly 3/4 of the company's revenues coming from ethnic snacks, which is bhujia and the likes. Out there, the revenues grew around 11%. And on a lower basis, we saw good growth come by for some of these unorganized to organized shifts like packaged sweets, where the revenue grew about 13%, Papad, there was a growth of around 23%, and Western snacks as well, where the company is looking to diversify into, saw a revenue growth of around 15%. So Bikaji looking good, looked a lot better on a reported basis, but if you take off the benefits, still looks good. For Honasa as well, I remember when the management joined us during the IPO, they said that their target would be to grow at least 2 times the industry, and this time around they've gone a step better. They've grown 3 times their competition, and as a result of which their underlying volume growth in the fourth quarter has been 27%. The revenue growth has been 21.5%. And on companies, which grow so fast and which are just turning around, operating leverage plays a big difference. So which is why the EBITDA has come in over 30 crores versus a loss of, a similar amount last time. And the net profit also at around 30 crores versus a loss of 16 crores. Importantly, they are seeding businesses beyond Mamaearth as well. So last month, you got the news that, Dermaco had crossed 500 crore as annual revenue run rate. Now they're targeting 1,000 crore in the next 3 to 5 years from this brand, about 500 crores for Aqualogica and Dr. Sheth's as well. And B Blunt, which they acquired from Godrej Consumer, will now, look at around 250 crores over the next 3 to 5 years. So they're growing and gaining market share in their key products as well, like shampoos as well as face wash.
So, Mangalam, sorry to spring this on you last minute, but just I'm taking a shot in terms of valuations for Honasa. Frankly, one would have expected maybe a bigger pop today, given the strength of the numbers. So I don't know. The stock is still not back at its peak levels, but just rough check on valuations here.
Well, rough check on the valuations would be upwards of 70-75 times on Honasa, but that would not be very fair, largely because the pace at which the company is growing. So maybe the brokerages will have to tweak their estimates. Their estimates were of a certain pace of growth, and the company has grown a little faster than that. Plus, remember, despite the kind of margin improvement that we've seen, we haven't yet seen the ad spends leverage play out. For FY24, the ad spends of the company were down by just about 100 basis points and still about 33-34%. So as other brands scale up, and once that comes down, there is a bigger upside to margins. And with the kind of growth path that the company is on, maybe once brokerages tweak estimates, it'll be fairer to look at valuations then, rather than looking at static numbers right now and saying that it trades at around 70-75 times.
Okay, fair enough. I will take that caveat on board, because I was thinking, oh God, I mean, the moment you said 70-75 times, I thought that was the answer why the stock is not moving up, because, we have the rest of the market that started moving, but take your point on board as well. So let's see how those estimates look once the brokerages tweak the numbers.
Jay, a quick word on the consumer names? Anything you like?
Sure, Rima. In fact, as far as Honasa or, Bikaji is concerned, I believe that Bikaji is in a very clear uptrend, and I think that can inch towards the levels of, say, 625. In fact, relatively, I find Bikaji much more, better as compared to Honasa.
Thank you. Thank you very much for joining in. Get into a break. On the other side, we'll discuss market fundamentals. Chirag Mehta from Quantum AMC joins in next. Stay tuned.
The margins continue to be under pressure, and I have said in the last interview also that it's still inching down, and the needle coke prices are also coming down with a lag. So that is why the margin is under pressure, and it's likely to remain so for next 2 more quarters, it seems. For the last, since we declared the expansion in November 23, it's only the last quarter of Jan to March that we got this capacity. So on that capacity, our total utilization was in excess of 80, between 80 and 85. Going forward for 24-25, we expect to be around 75% of the new capacity of 100,000 tons.
It's a substantial fiscal bonanza that has come in. We think the government could therefore choose to reduce the deficit marginally when it presents the final budget in early July.
Welcome back here with us on Trading Hour, and the market's still sort of flirting around with a bit of the green. There's been some red, but there is buying at lower levels. That's the short point. Chirag Mehta from Quantum AMC is with us to talk about how they're positioned on the market as a whole. Chirag, hi. I was going through your fact sheet, the April note, and what really stood out was that it seems that y'all are very happy to take on board all the strong macro cues, all the good numbers on GST, etc. But I think the moot question here, the principal question here is valuations and how much is still left on the table. So let's start there. Your view on this big rally.
Yeah, so we are very positive on markets as rather than markets, it's economy is where we find a lot of comfort in terms of momentum that is there in the economy. All the macro indicators suggest a robustness in the economy. So we are pretty positive on the economy per se. But much of the good readings that we have or the positivities in the economy are priced in most of the sectors. So overall, from a valuation standpoint, there is little comfort in the market. The upside potential that we track of the portfolio has been declining. Stocks have been doing well, but the upside potential on account of that has been declining. So, but there are pockets of opportunities that we see in the market where we are positioned very well. For example, the pockets of BFSI, especially the private banks, is a good position that we have across our funds. We still think that that sector has not participated as much, and there is a lot of room from a valuation standpoint, from a growth standpoint, to benefit by positioning that sector. Also, we like auto and auto components as a space. So we think there is a lot of demand momentum in that that we would see going forward, and that would lead to the leg up in terms of that sector participating. We have seen some up move in autos, but we think there is still further room when it comes to auto and auto components as a whole. And third thing that we like from a sector perspective, which we may take some time, but it's great time from a valuation standpoint, is the IT sector. The discretionary spend is still not picking up the like way we'll want. But overall, we think that as you normalize your numbers going forward for the IT sector, for example, in the US, banking, there has been hardly any spend from the banking sector over the last 2 years, which we think will pick up going forward. And as that happens, there will be a lot of normalization that will happen in the numbers, which will allow us to benefit from positions in the IT sector as well. So these are the three top themes that we like from a valuation standpoint as well, and also from a growth perspective. And hence, we are positioned in these sectors optimally in our portfolios.
So you said banks, autos, and IT are your top three preferred sectors, right?
That's right.
Okay. What about metals? Have you trimmed positions in metal names? Because there is one half of the street which believes that there is a super cycle underway. Base metal prices have been rising, notwithstanding the recent correction that we've seen. But generally, commodity prices have shot through the roof. So where do you stand on metals?
So on metals, there is a economic momentum coming from the capex plays that are happening not only in India but elsewhere as well. So there is a demand, plus the rebuilding that is happening because of the greening of the economies. That is also leading to increased demand for metals. Also, earlier we used to see a lot of supply dump coming from China, which is not happening because of the capacities going down or being shut because of the environmental regulations. So there is not much supply acceleration that is happening, even though prices are holding up well or going up. So from a supply demand standpoint, there is a momentum from a demand perspective, and prices are holding up well or moving higher a bit. We are not so positive on the prices continue to go higher, but demand momentum may continue from here on. So we do have some exposure to metals, but much of the demand positivity is already in the price to an extent. But certain names in the steel sector, for example, we do like and hold in our portfolio.
Okay, so Chirag, those are some of the sectoral sort of thoughts. Just from a market cap perspective, how are you looking at the mid cap, small cap market? I mean, the entire market is up and about, and now the Nifty is also hitting fresh highs. But incrementally, what would your advice be? And I'm talking about a medium to high risk investor here, not the low risk variety. But for such an investor, would you be comfortable with the increased allocation to mid and small, or is large cap the way to go?
So certainly the valuations in large cap are still better on a relative basis as compared to mid and small cap. Mid and small cap look a little stretched. But in a small cap, when you're approaching that space, you have to be more stock selective as opposed to having an aggregate approach in the small cap space. And in that, we do see certain pockets of opportunities where we are positioned in the small cap. We do hold some cash in the small cap fund. That's because we don't find enough opportunities to deploy that cash. But to the extent we have good names within the small cap space where we are positioned onto. So in that, industrials as a sector. So industrial as a sector overall looks very expensive, but there are pockets that we see there is still momentum left. We do like IT even in that, and BFSI in that space as well. So there are pockets of opportunities within small cap space, but on aggregate, it looks pretty expensive from a valuation standpoint. So from a market cap landscape, large caps look the best in terms of valuation positioning. Within the small cap, you have to be more selective. There is a lot of growth that's coming to companies in the small cap sector. There are certain unique ideas or unique themes that you could play in the small cap sector, which is not available in the large caps. And hence, you need to allocate more to large caps, but also have some positioning in the small cap space as well.
Okay, got it, Chirag. Chirag, before we let you go, I mean, the other hat you wear is obviously an expert on the precious metals market, and you've been watching those markets for a very long time as well. So before we let you go today, just over there, I mean, the headlines have been absolutely scintillating. We were just discussing the rise in silver prices with Manisha as well. What's the advice to investors? I mean, if someone is feeling a bit of a FOMO, they haven't had a proper allocation on gold and silver, from an investment standpoint, then does it still make sense, or is it just too late?
No, I think this still makes sense. But what we are seeing currently is some unwinding of the geopolitical premium that is getting priced in. So we're seeing some correction in gold, and probably there could be further some correction, but the downside seem limited from here. What's really driving is the macro forces with terms of one is geopolitics, and another is unsustainable debt levels, etc., and the subsequent turn in rate cycle, which is a driving force for gold and other commodities as well. So we think that if there is any dips that you get in gold markets, probably they should be bought into. We are in up for pretty decent 2 to 3 years out there as rate cuts happen. Debt still remains a worry for many of the economies, and as the economy slow down, there could be further support and a U-turn from many of these central banks out there. So we are positive from a 2 to 3 year outlook perspective on gold markets. Downsides will be limited and should be bought into.
Okay, all right, Chirag, we'll leave it on that note. Thank you very much for joining in and giving us your views on the market. We'll take a break right now, come back on the other side with a lot more. Quick programming note for our viewers. Join us live on 31st of May from 5:30 p.m. onwards for CNBC-TV18's Future Female Forward, the Leadership Circle, a transformative platform where leaders from diverse fields would venture beyond the traditional discourse and share stories of grit and determination and the road less traveled. This Leadership Circle is not just about business strategies and professional accolades, it's also about delving into the depths of the personal journeys of these trailblazers.
We're expecting, but also leave some cushion for any unexpected shifts that might happen on the revenue and the expenditure side. This is actually going to add to the cash surplus that the government is sitting on. This could very well go, above 5 trillion INR, and therefore some sort of a reduction in the borrowing, could happen. Again, the details of this are likely to get announced in the budget. And as Somiran was saying, it's really positive from a demand-supply environment. So our own forecast is that the 7-year as well as the 10-year bond yields could drop to 6.75%.
We were putting out in our notes saying that there is a possibility that the RBI dividend will be significantly higher than what the government has budgeted for. And so that...
Welcome back. As promised, we'll get you our special segment, Fin Street, where Abhishek today puts the spotlight on microfinance lenders. Take a look.
High inflation isn't a friend for the rural economy, and this is leading to pain in the rural sector, which has become visible over the past 2 quarters in the asset quality of lenders who are actually focused in the microfinance segment. And it's also showing up in the loan growth rate, which has declined in H2 FY24 versus the growth that they had in H2 FY23. Gross NPA of the lenders increased by more than 32% in H2 FY24 versus H1 FY24. This compares to a decline of 32.5% in H2 FY23 when compared to H1 FY23. This is surprising, as H2 is usually a better half for the microfinance lenders. For 70% of the lenders, the gross NPA has increased anywhere between 22% to 124% in H2 FY24. ISAF SFB, their gross NPA increased by 124% in second half of FY24. Credit Access Grameen, a top-notch microfinance player, saw its gross NPA rise by more than 83% in second half of FY24. The rise in H2 FY24 NPAs compares to a decline in gross NPA for most of the lenders in H2 FY23, like Suryodaya Small Finance Bank and ISAF Small Finance Bank. They saw their gross NPA decline by more than 60% in H2 FY23 versus the number of H1 FY23. Credit Access Grameen too saw a sharp dip in its gross NPA by 34% in second half of FY23. Rise in NPAs has impacted the credit cost of the lenders, and provisions have increased sharply for majority of them. Provisions increased by 8.5% in H2 FY24 when compared to the number of H1 FY24. Largely in Q4 FY24, majority of the provisions have come in. Ujjivan Small Finance Bank provisions have increased by more than 94% in H2 FY24. ISAF Small Finance Bank, their provisions have increased more than 59% in second half of FY24. In H2 FY23, provisions for lenders has actually declined by more than 38% when compared to the number of H1 FY23. Satin Credit Care, Spandana Spurti had seen their provisions decline by more than 60% in second half of FY23. AUM growth rate has slowed down as well in H2 FY24 versus the growth rate that they had in H2 FY23. So H2 FY24 AUM growth of the lenders has been about 16.3% when compared to H1 number, and they had a growth rate of 22.8% in H2 FY23 versus the H1 of FY23. So growth rate has been impacted the most for Spandana Spurti, ISAF SFB and Equitas Small Finance Bank. The key takeaways are that high inflation and elevated interest rate may continue to impact the repayment in the microfinance loans. Some lenders are also showing high disbursements but lower loan growth, suggesting repayment issues. Hence, loan growth rate has started to slow down for majority of the lenders in the microfinance segment. Given this, pain in the asset quality can continue in the near future for small ticket loans.
Very comprehensive, Abhishek. Thank you for that. And with that, it's a wrap on Trading Hour from the entire team. Thank you for watching.
That bigger surprise for us. Yes, it means that the government has 3 options in some sense. One is that it can reduce the fiscal deficit, 0.3% of GDP, as you mentioned. What the initial thought process was that the government will do only somewhat marginal tweak to the interim budget numbers, because the interim budget itself was quite detailed. Now, with this more than 1 lakh crore extra kitty, the budget maths will have to be reworked, and it will become very interesting, and the market will keep on speculating till it's actually announced.
The pressure is building on Israel in a historic move. Not 1 but 3 European countries, Norway, Ireland and Spain, have announced that they will recognize an independent Palestinian state. The announcements were made in quick succession and in a coordinated manner in the hope that this will help bring peace with Israel. The formal recognition in all these 3 countries will be made on May 28th. However, an angry Israel immediately called back its ambassadors from Norway and Ireland, warning that such a move will fuel extremism, terrorism and instability. With the rising civilian death toll in Gaza and the International Criminal Court evaluating the application for arrest warrants against Prime Minister Benjamin Netanyahu and Hamas leaders, all eyes are on Israel's next move. Let's try to understand why these countries have done this. Norway's Prime Minister said, and I quote, "There cannot be peace in the Middle East if there is no recognition." Spain's Prime Minister also reiterated that it's essential that the two sides, Israel and Palestine, negotiate for peace, and it's for this reason that we recognize Palestine. While the Irish Prime Minister said that Palestinians in Gaza are enduring the most appalling suffering, hardship and starvation, and permanent peace can only be secured upon the basis of the free will of a free people. So what exactly is the significance of recognizing Palestine as an independent state, and what is the two-state solution? Simply put, the Israel-Palestine conflict is one of the oldest and persisting conflicts in the whole world over who gets what land and how it's controlled. And a two-state solution hopes to resolve it. It's fundamentally about how or whether to split the country's territory between the Jewish and Arab population, Israel for the Jewish people and Palestine for the Palestinian people. Some 143 out of 193 member states of the United Nations recognize a Palestinian state, including India, that supports the two-state solution. In 1988, India became one of the first countries to recognize the Palestinian state. However, countries like the United States and the United Kingdom don't.
Stocks trade in the green today after Nifty stamps 23,000 and advances and declines remain evenly balanced still. Telecom and capital goods are the big gainers while healthcare and FMCG drag.
Indigo ends FY24 with a profit against a loss in the previous fiscal with improved performance across parameters, riding on strong growth in passenger traffic. Brokerages stay upbeat on the stock, though some fret over valuations.
Honasa Consumer rises on strong growth and market share gains. Bikaji Foods perks up on PLI inclusion, and Finolex Cables jumps on a good show, but disappointments hurt Orchid Pharma, Schneider and Landmark Cars.
Want to become an institution with values like the Tatas? Mankind Pharma Managing Director Rajiv Juneja tells CNBC-TV18 he also spells out his M&A formula, shares his growth vision and clears the air on any further stake sale by promoters. Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Manglam Malu. Well, it is turning out to be a quiet day for us in terms of the frontline indices. We have the mid-cap index, which is doing better, so up around 0.3%. If you look at it on a week-to-date basis, the Nifty's picked up around 2% this week. We have the mid-cap index, which is up around 1.4%. And all of this in terms of a truncated week. Remember that Monday we were closed for trade on account of Mumbai elections. And, well, we seem to be doing well for ourselves, on a day where it is a truncated week.
Rather well for ourselves. Last Friday, if someone told you that next week there would be 23,000 in the Nifty, one would say, oh, you're kidding. But it so has happened. And FIIs yesterday bought over 4,000 crores in the cash market, covered in index futures as well. What's interesting, though, is that, despite it being flat on the frontline indices today, a lot of people would be feeling a lot happier today with their portfolios as against yesterday. Yesterday, the Nifty rallied about 400 points, but a lot of individual stocks did not see a lot of movement. But now as we speak, the mid-cap index is up around 0.4%, and a lot of stocks are surging. We have the defense pack, which is doing extremely well, then the PSU pack. So we have, names like BEL, PFC, REC, all of them spiking. AB Fashion and Retail doing well. We have GAIL, a bunch of stocks, Hindustan Aeronautics, or be it Vodafone as well. So portfolios may perhaps feel a lot better in today's trading session as against yesterday's big up move, where there would be a feeling of a bit of missing out, where the Nifty was higher, but it was led by a small bunch of stocks.
Yes, absolutely. And let's talk about specific stocks now. Finolex Cables is fired up in trade after having reported a good set of fourth quarter numbers. Upasna is here to give us the details on the performance. Upasna.
The company reported good set of numbers in its Q4 FY24. The numbers were above the street estimates. The revenue saw a growth of 14% on a YoY basis and stood around 1,400 crore, while the street was estimating a number around 1,329 crores. The revenue growth was mainly driven by growth in electrical cable segment, which contributes almost 86% of the company's overall revenues. Now coming to this segment, the revenue saw an uptick of 16% on a YoY basis, while margins dipped 70 basis points and stood at 12.1%. It is also important to know that the share of low margin segments like communication cables also decreased from 14% to 9% on a Y-on-Y basis. Coming to company's overall EBITDA margins, they saw a downtick of 30 basis points and stood at 11.6%, while the street was working with a number of 12%, which is slightly below the estimates. The PAT saw an uptick of 6% and stood at 186 crores, while the street was working with a number of just about 145 crores. So all in all, we are seeing a good set of numbers reported by Finolex Cables in its Q4 FY24.
All right, Upasana, thanks a lot for that. Meanwhile, Orchid Pharma is one of the stocks which is under pressure in today's trading session, down over 8% as we speak. Fourth quarter earnings, Ekta, not too good?
Well, yes, definitely a disappointment on all fronts because the revenue grew only 3.4% on a year-on-year basis for Orchid Pharma. The margins came in at around 3.3% with the EBITDA down 27% year-on-year and the profit coming in at around 33 odd crores versus 59 crores. Q-on-Q as well, revenue was 217 versus 220 crores and the margins came in at 13.3 versus 16% with the profit again higher, but nonetheless the revenue is being lower on a sequential basis. So it definitely was a top-down disappointment which came in for Orchid Pharma, where there were large promises of the cephalosporin business really ramping up for the company. So I think that's probably where the disappointment is stemming from, especially in terms of the margins. But let's now put the focus on Interglobe Aviation. Everybody is watching that stock, can't stop talking about that stock, and maybe can't stop using the services as well. We have Sonia joining in to give us the key highlights and brokerage views.
Thanks a lot for that. So the numbers were actually quite good. It was a 6th straight quarter of profitability for Interglobe Aviation. In fact, the Q4 revenues went up about 26%. EBITDA margins have improved. The profitability has gone up as well. And most of the internals are quite strong for Interglobe. So the passenger growth has come in at 14%. The load factors have improved. The yields are up almost about 7%. But brokerages have a bit of a mixed bag this time around. So Morgan Stanley has an overweight. They've raised their target price to 5,142. They say it's one of the cheapest travel-themed stocks and any stock dip is an opportunity to buy. And the company has guided for a 10 to 12% year-on-year growth in the ASKM. However, Elara Capital has changed their rating to a sell from a reduce. And they say that there are some cautionary statements that the company has given out in their conference call. And also the stock has run up quite a bit. The stock is up almost 40% in the past 3 months because of higher airfares. So there is some amount of profit taking that you are seeing in the stock this afternoon. Back to you.
All right, Sonia, thanks a lot for that. Some bit of profit taking, but profits have been big on Interglobe Aviation itself. 35% up more in the last few months itself, as we saw, our team just alerted us. It's kind of big move that we've seen, and over the last 1 year itself, it's been a big wealth creator for investors. Strides Pharma, on the other hand, is joining us after this short break. What we'll do is take a short break, come back. The management will join us to discuss the fourth quarter earnings.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 20
Welcome back. Well, for the markets, it's turning out to be a day of consolidation for the Nifty. So just about, remember that we did hit those levels of around 23,000 on an intraday basis and just about hovering at those levels. So really no complaints coming in for the markets at this point in time. We have the mid-cap index, which is up around 0.3%, and the advanced decline ratio, which is largely even keel, you'd have to say. So just about 1:1 is where the advanced decline ratio is. Just watch out for a couple of stocks such as Apollo Hospitals, which is still not released numbers. So that stock is down around 1.2%. And a couple of stocks coming out with numbers such as Glenmark, Spark, all of these stocks are in focus and ahead of that. Torrent Pharma, Glenmark lower, Spark higher, up around 3.5% for Spark. Let's continue our focus on the entire pharmaceutical space and talk about Strides Pharma. It reported what was a good set of Q4 numbers. The margins have improved to a multi-quarter high. It also reduced its net debt by over 300 odd crores in FY24. To discuss this, we have with us Arun Kumar, the Executive Chairman, Strides Pharma Science, joining in now. Mr. Kumar, welcome to the show and good to see you in as always. I wanted to start by talking about the margin improvement that the company has seen consistently. Margins now stand at around 20 odd %. What led to this improvement? Was it the US business contributing or maybe operational efficiency? And secondly, what are you guiding for in FY25?
Thank you, Ekta, for having us. Yeah, it's been a good year for Strides in terms of its reset strategy. We completed everything that we have guided for in terms of margin expansion. So the US did contribute a large part of our margin expansion, but so also did other markets. And what is most pleasing has been that we have contained costs for the last 3 years at the same absolute dollar numbers. So that allowed us to focus on OPEX leverage and free cash. Pleasing also was that almost 90% of our EBITDA is converted to free cash generation. That led to debt reduction, and we'll continue focusing on efficiency and a steady growth in our business led by the regulated markets.
So you did briefly allude to the US. You hit about $250 million for the year. Quarterly revenue was flattish. Just wanted your thoughts on, the road to $285 to $300 million and eventually $400 million. By when do you get there? And margins, what are they likely to be going forward? Will they, continue at that 20% plus mark?
Well, it's been, we were at single digits, so we've taken 8 quarters to get to 20%, and we'll continue slowly moving up that. Our target is to get to about 22% as our EBITDA margin, which used to be our all-time highs. So that's our focus. To your point with the US, historically, Strides has a very strong flu season-led business. This year, it was not the case. The flu season was almost not there in the US, but we had some great product launches, new products, especially generic Suprep. We are market leaders on that product today. So that made up for some of the loss of sales in Q1. So actually, if you look at comparative year, we've grown about 10% on the Q1Q or on Y-on-Y. And based on recent approvals, including Sucralfate, which is our first Indian company to get a product in a very complex generic, we are very, very confident of getting to that 285 to 300 mark in terms of sales in the US.
Okay, all right. You're confident about that. Can you just give us a sense in terms of, the base business in the US? Is that seeing pricing pressure? I know that the flu season wasn't as good this time, but what about the base business as well as new launches? What can you guide us for?
So, Ekta, we have spoken about this earlier. Our commentary remains the same. We have this huge basket of approved products in the US, which we are not So we have the luxury of approved products that we can launch at any time. We do not accept significant price challenge on our products. And when we do, we just let go of a product because we have this wide range of products that we can make up for sales. So for a long, long time, we've been saying that we are to a very large extent immune to pricing pressures. We do see in specific products and portfolio pricing pressures, but we continue to keep market share if the pricing is right. And if not, we are happy to let it go.
Right. What about debt? Net debt has reduced over the last 1 year. What's your plan on reducing it further, or are you comfortable at these levels?
Well, we are very comfortable at 2.7, but we have guided a further reduction of 500 crores in the financial year. So if we want to bring it under 2, that would be a very comfortable position for us to be long term, and that's our goal.
Okay, all right, fair enough. Give us a sense in terms of the OneSource listing now. Where exactly does it stand in terms of a process? When do you expect it to list? And what is the profitability of the business?
Right, so OneSource has received all necessary regulatory approvals, including the SEBI approval a couple of days ago. So we are now ready to start the NCLT filing. We expect to be filing the NCLT in the next week or so. And then it's a typical 9 to 12 month period from NCLT approvals to listing. We've guided the business to be in the range of $165 to $175 million with an EBITDA in the 30s. So we are very delighted that now we've got behind the regulatory hurdles, and now we are all set to get into a listing of OneSource, which then will make us India's first spec farm CDMO. The target is to focus 30-35% EBITDA business.
So by when? What are the timelines that we're talking about here?
So we got all approvals last week, all regulatory approvals, including SEBI. We can now file the NCLT as early as next week. And then it typically takes between 8 to 12 months, including the court process and the listing.
All right. Thanks a lot for joining in and giving us your views on the year as it looks ahead. $285 to $300 million in the US business, looking at an eventual margin target of close to around 22% with a debt reduction of almost 500 crores during this year, and maybe soon we will have the listed pet care business as well. Take a short break. On the other side, we have Sudeep Shah of SBI Securities joining in with some trading strategies to discuss the market.
CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Welcome back. The Nifty fledgling between green and red. No real worries out there. The Nifty Bank a tad better, and the mid-cap index is actually the story of the day today, barring the 23,000 headline that we had on the Nifty this morning itself. Market breadth, even as the mid-cap index is high by about 1/3%, that's not reflecting as much in the market breadth because we have the stocks at an even keel, and this is about the second day running where both the red and green lines were pretty intertwined. And if you just take a look at that right now this afternoon as well, we've seen a bit of an intertwined move on those lines once again. Let's watch out for the India VIX. Now, even as the markets moved higher, the India VIX, after cooling off to around 21, has come back to closer to 22. So that's another level that we'll have to watch out for. But I'm just looking at HDFC Bank. And why do I say that? Because yesterday I said it was at a crucial juncture. It was just below the 50, 20, 100 and 200-day moving averages, around that 1470 mark. But after the big up move yesterday, now it's above all key moving averages. It's above 50, 20, 100 and the 200-day moving average is at 1504. So if it can close above the 200-day moving average now, will we see the HDFC Bank get its mojo back and perhaps move higher from current levels is something that we'll have to keep an eye out on. As of now, it's crossed crucial resistance zones, and that's also perhaps a question that we'll put forth to Sudeep. In terms of the market, watch out for, the 23,000 mark on the Nifty now looks like a bit of a fulcrum where you're seeing both put writers and call writers equally active, telling you at levels of 22,700, 22,750, there is support, but upwards of 23,200 could be some bit of resistance coming by as well. The stocks that I'm watching out for today, ABFRL, Vedanta and Biocon. Remember, these stocks keep moving in and out of F&O band, but given the kind of activity that we've seen today on all these stocks with open interest build-ups, chances are they will re-enter F&O band. For sure on Biocon and AB Fashion and Retail. Vedanta, we'll keep an eye out on how it pans out towards the end of today's trading session as well.
Okay, all right. Well, thanks, Manglam, for that. Sudeep Shah of SBI Securities now joins in. Sudeep, hi, welcome to the show. Well, what would you recommend in terms of the markets at this point in time? We're sitting at fresh record highs for the Nifty. What would your approach be towards the index as well as specific stocks?
Good afternoon, Ekta. See, the indices are currently in a strong momentum, and post that breach of the previous swing high of 22,800, we feel that the momentum has accelerated on the upside, and now going forward till this zone of 22,780, 22,800 holds. Positionally, this strong momentum could continue up to 23,200, 23,300 levels also, which is the upper end of the rising channel in which Nifty has been trading for quite a while now. And on the Bank Nifty front, I feel that signs of strength are coming back here, and from the current levels also till 48,400, 48,350 holds. Bank Nifty could incrementally move higher up to 49,400, 49,600 on the upside. And one specific point to make here is that if we see the long short ratio, that had seen a good improvement yesterday from the prior 30%, it has improved to 42%. So that shows that the large caps are now coming back into action, and we could see this action continuing for the next few sessions at least.
All right, and individual stocks and HDFC Bank in particular, Sudeep?
Good afternoon, Mangalam. See, HDFC Bank, if we see closely, now that stock has moved above all its crucial moving averages. It was consolidating, before yesterday for the past 8 to 9 sessions between 1440 and 1480. And yesterday's move has ensured that the stock comes back above its 20 as well as 50-day. And now it is, we feel that the next level that the stock could head up to is around 1545, 1560 on the upside. And on the downside, the supports are placed around 1480 levels.
Okay. All right, Sudeep, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's the view coming in on the technicals of the market. Well, we'll take a short, let's now shift focus and let's in fact have a review of all the FTSE All World Index and FTSE All Cap Index. Changes are expected to happen today itself. Vivek is here with more details on this. Vivek.
Well, what's going to happen today is that the FTSE as well as the BSE Sensex, the Index Review Committee will actually go ahead and announce which are the stocks, number one, as far as FTSE is concerned, which are the stocks that are likely to be added as far as the FTSE Index Review is concerned, and same for Sensex, there are analysts are anticipating at least a change as far as Sensex is concerned. Now, talking about FTSE, now remember, this is the June 2024 quarterly index review. In this particular review, the FTSE will actually go ahead and consider all of the recent IPOs or any spin-offs, etc. So it's a supplementary review as far as FTSE is concerned. So which are the stocks to keep an eye out for? This is as per IFL Alternative Research. These are the stocks they expect to get added into the FTSE, either the All World or the All Cap Index. The first stock on the radar would be JSW Infra. Expect flows of close to $38 million over here. Honasa around a little over $7 million. Happy Forging over $3 million. Seller World, DOMS, Inox India, IREDA as well as Tata Tech. IREDA could end up getting flows of close to $57 million and Tata Tech too quite substantial at over $34 million. Now, as far as the Sensex is concerned, remember Adani Enterprises could end up replacing Wipro in this particular Sensex review. Adani End could get flows of a little over $115 million, while Wipro could end up seeing outflows of over $56 million.
All right, Vivek, thanks a lot for that. So those are a bunch of stocks. Adani End, of course, was a big mover in yesterday's trading session and today as well, holding up mildly in the green. Take a short break, but as we do that, there's some programming note for all of us. Join us live on 31st May from 5:30 p.m. onwards for CNBC-TV18's Future Female Forward, the Leadership Circle. It's a transformative platform where leaders from diverse fields will venture beyond the traditional discourse and share stories of grit and determination and the road less traveled. This leadership circle is not just about business strategies and professional accolades. It's about delving into the depths of personal journeys of these trailblazers.
What a great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
The margins continue to be under pressure, and I have said in the last interview also that it's still inching down, and the needle coke prices are also coming down with a lag. So that is why the margin is under pressure and it's likely to remain so for next 2 more quarters, it seems. For the last, since we...
Welcome back. Well, it's been a year since homegrown pharmaceutical and consumer health company Mankind Pharma debuted on the stock exchanges. The stock has rallied over 90% since listing and has generated positive returns in 9 out of 12 months since listing. So what is Mankind Pharma's growth path going forward? What is the company's revenue target? And now that it's crossed that milestone of around 10,000 crores in FY24. To discuss all this and more, I did catch up with the Vice Chairman and MD of Mankind, Rajiv Janeja. Listen into that conversation.
We will increase our chronic share to a substantial level. 5 years back, it was 28%. This year, this year means we have closed the year, it is 36%. In just 1 year time, we have increased 200 basis points approximately. It was 34 point something. Now it is 36%. Our every action, everything is towards chronic side. And our ambition is like any other peer, good companies, we take a lot of inspiration from. We aspire to become like them. Talk about these top 3-4 companies. We want to have more than 40% in near future, our chronic share of sales, more than 50% in long-term future. That's ambition for Mankind. Because we have learned once you go in chronic side, many advantages are there. One, the sales become consistent. You're not depending upon seasonality. Second, it is always increases your EBITDA. Profitability is more. You can do many things once you have more money in your hand. And we have done that. Look at acquisition of this Combi Hale. We never had any kind of a device, so we went for it. Again, Symbic got in license. This is a journey of last 2 years. It took us 2 years to convince Astra to give us this product in license. And I promise you, we'll surprise everybody. Again, you see this Nobiglar. Insulin is in chronic, very chronic. It's super specialist chronic. Again, it is product of the year launch this year. That really talks about what we talk, we do. If we say that we'll do that, we generally have done it, and rather we have done more than that.
Okay. All right. You know, what stood out to me was also your modern trade segment, which was up 50%. What does it comprise of, and are you expecting that spate of growth to continue?
Earlier, 1.5 years back, we never had a modern trade division. Random stockists were just supplying to all the modern trade. And that's one reason, after making it organized, things are going from that side. And the growth you're seeing is, 50% or 60% or more than that. But going forward, it will remain, because once this base effect would come, now the base has been built, things are organized, it will always grow, but at a double digit, not like this, the way it has grown last year.
Okay. Are we going to see more in-licensing deals that you're going to undertake with larger MNCs?
Yeah, one more in-license deal we have signed at the right time. We'll just inform you. Maybe in the second quarter, we'll inform you. Things are done. Once we launch the product, we're quite conservative. We don't really speak something till we get the product in our hand. We are kind of a believer of once something is done 100%, then speak out.
Are you looking to probably rope in another investor, possible separate listing of the consumer healthcare business eventually?
Not really. This thought has not crossed us.
Okay, all right.
Crossed our mind, yeah.
Carving it out into a separately wholly owned subsidiary is only to sharpen focus. The other point of the business was the exports, which has stood out, quite dramatically. It was up 230% in Q4, up 175% for the year. It's a low base, but how big an opportunity is exports for the company? What's your strategy there? Are you going to be a US generics player?
Absolutely not, madam. We have mentioned a number of times, Ekta, that we will always be domestic-focused company. We have learned our lessons from other people's mistake. Whenever we think of export, 3-4 things are there. It should have, if we have some kind of a complex product, difficult to make product with entry barrier, where we can command fantastic growth and fantastic profits, we'll go for it. If it's just a Me Too product and it would add some kind of a sales in our revenue, not interested at all. We will always be India focused, because look around yourself, the kind of vibrancy is there in India. We are very, very bullish for India. Anything and everything we do, keeping India in mind.
Okay, all right. But how much are you expecting exports to grow? Because we do understand there are some one-off opportunities and you are looking at the ophthalmology space there. So give us a sense, at least in the near term, what is the growth rate for the exports business?
There would always be double-digit growth. The kind of growth you have seen, we don't predict that, but there would be nice growth. And if one of opportunities, I cannot predict about that, how long it will remain with us. But whatever things are there to take the profits, we can take that. But our focus is always domestic side, consumer side, chronic side, not export side. So 90% plus, we will always be India-focused company.
All right, interesting conversation there with the management of Mankind Pharma. What we'll do is we'll take a short break, come back, focus on a lot of these individual stocks which are buzzing around on account of their numbers. Case in point, something like a Honasa or even Bikaji for that matter, up around 5%. Come back, we'll talk more about it.
Expansion on in November 23. It's only the last quarter of Jan to March that we got this capacity. So on that capacity, our total utilization was in excess of 80. I mean, between 80 and 85. Going forward for 24-25, we expect to be around 75% of the new capacity of 100,000 tons.
It's a substantial fiscal bonanza that has come in. We think the government could therefore choose to reduce the deficit marginally when it presents the final budget in early July, which is what we're expecting, but also leave some cushion for any unexpected shifts that might happen on the revenue and the expenditure side. This is actually going to add to the cash surplus that the government is sitting on. This could very well go, above 5 trillion INR, and therefore some sort of a reduction in the borrowing, could happen. Again, the details of this are likely to get announced in the budget. And as Somiran was saying, it's really positive from a demand-supply environment. So our own forecast is that the 7-year as well as the 10-year bond yields could drop to 6.75%.
We were putting out in our notes saying that there is a possibility that the RBI dividend will be significantly higher than what the government has budgeted for. And so that way, it's not that big a surprise for us. Yes, it means that.
Welcome back. But let's talk about some companies now. Bikaji Foods is surging. It's up around 5% The company reported what was a stable set of fourth quarter numbers. Manglam, always interesting to see takeaways from companies such as Bikaji. Tell us more about it.
So the biggest takeaway is the fact that, a lot of people are snacking. Secondly, the unorganized space is getting into organized. And thirdly, they themselves are, increasing their geographies in what they are present. So they're increasing their distribution, increasing the states that they're focusing on. And as a result of which, growth is a lot higher than that of the industry that we've seen. Additionally, this time around, they've also been boosted. The numbers have been boosted by the PLI income that they got, which was close to around 94 crores. No mean feat out there because, that adds almost 100 crores to their bottom line. But even if you strip that off, there is an underlying volume growth of 14.3%, which is good. Apart from that, we have revenue from operations, which grew by about 12.8%. EBITDA grew by about 10%, so no problems on the operational front as well, with margins around that 13% mark. And the net profit grew about 22%. Importantly, the ethnic snacks, they grew about 11%, and that accounts for nearly 3/4 of their revenue. You have packaged sweets, which grew about 13% as well. Western snacks and on a low base, papad also grew by about 24%. So good numbers coming in, give or take, everything. The kind of weakness that we're seeing in the consumer sentiment. There are some of these companies which are smaller in size, but growing much fast because of the headroom that they have, are reporting higher than industry growth, and as a result of which we are seeing the up move in the stock. In fact, I'll take that forward with Honasa as well. On an overall basis, as compared to the industry, their size is a lot smaller, but because it is a lot smaller, they're growing a lot faster. They're growing 3 times that of competition. And in an industry which is parched for growth right now, any company that grows faster, the street rewards that. Underlying volume growth of 27% is as well very good. They've seen a revenue growth of 21%. The EBITDA, because again, it was a smaller company growing a lot faster, they had to invest on advertising, etc. Revenue growth will now kick in their margins as well as operating leverage comes by. So their EBITDA has come in at 33 crores versus a loss of about 3 crores. And that's flown down all the way to the bottom line, 30 crore net profit versus a loss of 16 odd crores as well. The key internals, they are not only growing faster than the competition, they're gaining market share in products that are doing well for them as well. 120 basis points gain in market share for face wash, about 40 basis points improvement in market share For shampoo, they've increased their physical presence by about 34%. And also, 18% of their revenue now comes in from newer launch products. So that's telling you that the company's base in terms of revenue is diversifying. They've given targets for the next 3 to 5 years for their key brands other than Mamaearth as well. Dermaco, 1,000 crores. This had recently crossed 500 crores. Aqualogica and Dr. Sheth's about 500 crores. And B-Blunt, which they acquired from Godrej just before listing, they have a target of around 250 crores as well. And additionally, they've also identified and acquired R&D capabilities by buying Cosmogenesis Lab, because this will help the company, improve their back end when it comes to formulations, R&D and nano manufacturing.
Okay, all right, Manglam, thanks very much for that. So that's on Honasa Consumer. But let's focus on our special segment now. Fin Street, Abhishek puts the focus on microfinance lenders. Over to you, Abhishek.
High inflation isn't a friend for the rural economy, and this is leading to pain in the rural sector, which has become visible over the past 2 quarters in the asset quality of lenders who are actually focused in the microfinance segment. And it's also showing up in the loan growth rate, which has declined in H2 FY24 versus the growth that they had in H2 FY23. Gross NPA of the lenders increased by more than 32% in H2 FY24 versus H1 FY24. This compares to a decline of 32.5% in H2 FY23 when compared to H1 FY23. This is surprising, as H2 is usually a better half for the microfinance lenders. For 70% of the lenders, the gross NPA has increased anywhere between 22% to 124% in H2 FY24. ISAF SFB, their gross NPA increased by 124% in second half of FY24. Credit Access Grameen, a top-notch microfinance player, saw its gross NPA rise by more than 83% in second half of FY24. The rise in H2 FY24 NPAs compares to a decline in gross NPA for most of the lenders in H2 FY23, like Suryodaya Small Finance Bank and ISAF Small Finance Bank. They saw their gross NPA decline by more than 60% in H2 FY23 versus the number of H1 FY23. Credit Access Grameen too saw a sharp dip in its gross NPA by 34% in second half of FY23. Rise in NPAs has impacted the credit cost of the lenders, and provisions have increased sharply for majority of them. Provisions increased by 8.5% in H2 FY24 when compared to the number of H1 FY24, largely in Q4 FY24. Majority of the provisions have come in. Ujjivan Small Finance Bank provisions have increased by more than 94% in H2 FY24. ISAF Small Finance Bank, their provisions have increased more than 59% in second half of FY24. In H2 FY23, provisions for lenders has actually declined by more than 38% when compared to the number of H1 FY23. Satin Credit Care, Spandana Spurti had seen the provisions decline by more than 60% in second half of FY23. AUM growth rate has slowed down as well in H2 FY24 versus the growth rate that they had in H2 FY23. So H2 FY24 AUM growth of the lenders has been about 16.3% when compared to H1 number, and they had a growth rate of 22.8% in H2 FY23 versus the H1 of FY23. So growth rate has been impacted the most for Spandana Spurti, ISAF SFB and Equitas Small Finance Bank. The key takeaways are that high inflation and elevated interest rate may continue to impact the repayment in the microfinance loans. Some lenders are also showing high disbursements but lower loan growth, suggesting repayment issues. Hence, loan growth rate has started to slow down for majority of the lenders in the microfinance segment. Given this, pain in the asset quality can continue in the near future for small ticket loans.
Okay, all right, Abhishek, thanks very much for that. So that's on the entire banking space. But let's move forward now. Hindalco will be releasing its Q4 numbers. Nigel is here with the key expectations. Nigel.
Well, that's right. For Hindalco, we already have the Novelis numbers, which were quite good, and the guidance as well is very good out there. So what you're looking at in these Hindalco numbers is the standalone numbers. Now, just to tell our viewers, the first look at it, don't just go by the standalone numbers, because the Utkal Alumina business is not part of the standalone business. So the way to look at it is Utkal plus the India business. So let's run you through the main numbers that you should be looking at. Well, so, the poll number that we are throwing up is the total India EBITDA number. That should come in at around 2,850 crores, very, very roughly. The number comes up for you on the screen. And this is split up into the aluminium business. The aluminium business consists of the Indian aluminium business, and also it consists of the alumina business. So put that together, you're working with a number of around 2,200 crores. And the copper business, well, it will be stable at around that 600, 650 crores odd. What are the factors on play? Well, for the aluminium business, volumes will be more or less flattish, maybe mildly higher, but they'll gain because they have close to around 20-22% of their total sales that are hedged, and that number is hedged at a higher price. So they won't bear the the decline that we saw in the past quarter. That's point number one. The other factor that plays out for them is on the cost side. E-auction coal, well, it did see a sharp decline, and they're getting a fair bit of their coal from the e-auction coal as well. So the cost of production for the aluminium business will fall. And for the alumina business, we'll have to track how much of the alumina that they produce is used in-house, and some part of that will be sold in the external market, which will help their profitability as well. For the copper business, it's aided by stable TCRC margins, and also we'll see some higher volumes coming out of there. So those are the factors that play. Keep an eye out on these three numbers. That's the 2,850 crores for the total India business, 2,200 crores for aluminium, as well as for copper around 600, 650 crores. What else we'll track? The management commentary on how they want to reduce debt, their capex plans as well. Why are they doing this Novelis IPO? And where do they see the aluminium prices stabilizing at? I guess in the next 60 to 90 minutes, we'll have the numbers with us. Back to you.
All right, Nigel, next 60 to 90 minutes is something that we'll keep an eye out on. So that's about Hindalco. Take a short break, come back on the other side. We will be joined by Manisha, who will take us through all things commodities.
Government has three options in some sense. One is that it can reduce the fiscal deficit, 0.3% of GDP, as you mentioned. What the initial thought process was that the government will do only somewhat marginal tweak to the interim budget numbers, because the interim budget itself was quite detailed. Now, with this more than 1 lakh crore extra kitty, the budget maths will have to be reworked, and it will become very interesting, and the market will keep on speculating till it's actually announced.
The pressure is building on Israel in a historic move. Not one but three European countries, Norway, Ireland and Spain, have announced that they will recognize an independent Palestinian state. The announcements were made in quick succession and in a coordinated manner in the hope that this will help bring peace with Israel. The formal recognition in all these three countries will be made on May 28th. However, an angry Israel immediately called back its ambassadors from Norway and Ireland, warning that such a move will fuel extremism, terrorism and instability. With the rising civilian death toll in Gaza and the International Criminal Court evaluating the application for arrest warrants against Prime Minister Benjamin Netanyahu and Hamas leaders, all eyes are on Israel's next move. Let's try to understand why these countries have done this. Norway's Prime Minister said, and I quote, "There cannot be peace in the Middle East if there is no recognition." Spain's Prime Minister also reiterated that it's essential that the two sides, Israel and Palestine, negotiate for peace, and it's for this reason that we recognize Palestine. While the Irish Prime Minister said that Palestinians in Gaza are enduring the most appalling suffering, hardship and starvation, and permanent peace can only be secured upon the basis of the free will of a free people. So what exactly is the significance of recognizing Palestine as an independent state, and what is the two-state solution? Simply put, the Israel-Palestine conflict is one of the oldest and
Welcome back, and joining us on the show now is Avinash Shekhar. He's co-founder and CEO at Pi42. Avinash, hi, good to have you. And a couple of positive developments that we've seen come in from US. One, of course, is the House of Representatives passing the bill to create new legal framework for digital currencies. What is the impact of that? How do you see this? As most of the globe now seems to be making a legal framework around digital currencies, what does it really mean?
Yeah. So actually, overall, I think obviously it's a positive news. What's happening worldwide is that regulators are really trying to understand crypto, pushing towards regulations, pushing towards, I think, two main things. One is enabling innovation, and second is that at the same time, let's say, customer protection and putting AML checks in place. So overall, taking a balanced view, I think another thing which has happened actually recently is that the Senate has passed a resolution saying that there were some restrictions on banks to support crypto that they have removed. So overall, I think US and worldwide regulators are going in the right direction in terms of enabling innovation in this space.
Avinash, also the other positive has been that SEC, even as there have been some warnings with the House of Representatives passing this, but they themselves seem to have cleared the Ethereum ETF as well. I mean, of course, you have to take an approval before you start launching it. Is the reason perhaps we haven't seen the prices move as much? But what does this also mean? And would you say that this is not just now about procedural delays that we might see with Ether ETF also coming in?
Yeah, so you're right. Actually, if you look at overall what's happening is that on one hand, there are certain concerns which SEC has in India. Some of the regulators have those concerns. But at the same time, they're moving ahead. They're saying that, okay, we have to keep track of these concerns because any new technology will have certain things which people will not understand or it will take time to get clear. But we can't stop innovation just for that. We have to continue the innovation. We have to continue to support entrepreneurs, and that is, I think, overall what is happening in the US ecosystem and in other countries. Hopefully, it will happen in India also soon. But yeah, overall, I think there is more and more acceptance of crypto, which we are seeing.
Avinash, I also want to come back on the Ether ETF yet again because it was January 11th when we had the Bitcoin spot ETF approval come in, and we've seen billions of dollars flow into that one since then. If I look at the latest numbers, the net inflows right now stand at $12 billion. So that's a huge amount, huge chunk of money. And similar funds also seem to have applied for the Ether ETF. How soon, how much, and until when do you see those approvals coming across?
Yes, I think it's just a matter of time now, in my view. And what we have to understand is that Bitcoin ETF and Ethereum ETF, they're not like something in the similar lines, so to say. Bitcoin is very, very different than Ethereum. So in a way, it is like Bitcoin is more decentralized. Ethereum is like a computer of the world. Okay, so it is not like that you are actually like they are not like same category of things. Okay, so Ethereum ETF in that sense is much more important because it paves ways to other crypto ETF getting approved or at least getting same kind of hearing or same kind of validation from the regulator. So I think it's in my view, it's a bigger event than Bitcoin BTF getting approved.
I get your point on that one. Well, yes, Ether will pave way for various other altcoins as well. And as you said, it does push innovation in that sense. I want to talk about Indian markets right now. And for the last few years now, the only thing that we've been talking about is the higher taxes. But within that as well, have you seen the participation come back into these exchanges as far as trading of crypto is concerned? And then, of course, there are the number of creators that India has, the developers that India has, the startups that are in India when it comes to digital currencies and the ones that have gone out of India as well. What is the scenario looking like right now?
So basically, volumes have increased in the exchange. There is no doubt about it, but it has not increased in commensurate with what we have seen internationally in terms of increase in volumes, increase in participation. And obviously, higher taxation is one reason for that. Another thing is that because of, let's say, lack of clarity on terms of regulations. I think for me, the bigger problem is that people who are innovating, okay, and people who went outside India, there is no clarity for them. And that trend continues, so to say, because if, let's say, you develop a product, you develop, let's say, another Ethereum or something really big, there is no clarity as to how those people or those entrepreneurs will be treated 2 years, 3 years, 4 years down the line. Okay, and that risk is something which is not many people ready to take. And obviously, if you have an option to go out and do it, then doing that in India becomes more and more risky. You'll rather focus on developing the product rather than, let's say, figuring out how the regulatory challenge will work. So that is still there, I think. And as a society, I think we have to move really, really fast on this front.
All right. Avinash, one final question then. If you look at the kind of newer products, as you talked about, in sense of innovations there. I mean, we do understand that Ether is also known for staking. We also have NFTs, which have started to do reasonably well after that boom and then that very sharp decline as well. So when you look at the overall crypto as a space, or digital currencies or virtual digital assets for that matter, various ways on how it's called in India, what is your sense on where are we standing right now? Would you say that a bottom has been made from here? And what is your outlook for the rest of 2024?
I think we have just started on this in this sector. We are like still very early, very long way to go, both in terms of innovation and regulation. I am really bullish on this entire sector. I think I've told before also that I think it's like one of the biggest innovation of our times, basically.
All right. And various regulations is something that the street is anticipating. Avinash, thank you so much for joining us. So, well, US seems to be doing quite a bit, Mangalam, but Indian market's still waiting.
Indian market's still waiting as always, right? We'll keep an eye out on that one as it pans out. But more, also just watch out for Aegis Logistics. Reported numbers, as Manisha was having this conversation, while the revenues have declined, we've seen a sharp margin expansion, and as a result of which the net profit has actually seen a big up move of nearly 39%. Remember, the revenue for Aegis Logistics, part of it is also a function of gas prices, and over the last 1 year or so, we've seen a decline in gas prices. So, which is why, on an absolute basis, the number has declined. But that results in better margins for them. That's largely because a large part of, their earnings are fixed as well. So, with the gas prices declining, the revenue goes lower, the EBITDA grows higher, and margins have turned from 9.5% to 16.7%. In fact, over the last 3 months or so in particular, ever since there was an initiating coverage coming in from IIFL Securities on Aegis Logistics, the stock has been on a tear. Their target price was close to around 500 rupees. The stock has done 675 in a matter of just 2 months. So that's about individual stocks. We take a short break, come back. We have the team of Business Lunch taking market action forward with you.
In the whole world over who gets what land and how it's controlled. And a two-state solution hopes to resolve it. It's fundamentally about how or whether to split the country's territory between the Jewish and Arab population. Israel for the Jewish people and Palestine for the Palestinian people. Some 143 out of 193 member states of the United Nations recognize a Palestinian state, including India, that supports the two-state solution. In 1988, India became one of the first countries to recognize the Palestinian state. However, countries like the United States and the United Kingdom don't.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical.
Stocks trade in the green after Nifty stamps 23,000, but advances and declines remain evenly balanced. Telecom and capital goods are the big gainers today, while healthcare and FMCG drag.
Indigo ends FY24 with a profit against a loss in the previous fiscal, with improved performance across parameters riding on strong growth in passenger traffic. Brokerages stay upbeat on the stock, though some fret over valuations.
Honasa Consumer rises on strong growth and market share gains. Bikaji Food perks up on a PLI infusion, and Finolex Cables jumps on a good show. But disappointments hurt Orchid Pharma, Schneider and Landmark Cars today.
Want to become an institution with values like the Tatas? Mankind Pharma Managing Director Rajiv Juneja tells CNBC-TV18 he also spells out his M&A formula, shares his growth vision and clears the air on any further stake sale by the promoters.
Hello and welcome. You've tuned into Business Lunch. I'm Nisha Podar. As always, with me is Sonia Shenoy. So, Sonia, what a record-smashing day it has been after yesterday's euphoria. The momentum has built up, and Nifty 50 is still closer to the record levels and comfortably above the 23,000 level that it has conquered today. So, let's take a look at the markets at lunch hour, and it's flat to gains, about 36 points gain on Nifty 50, but holding up above the 23,000 level. Sensex 2 gains closer to 90 points at the moment. Bank Nifty is outperforming the key indices, 0.3% up. So banks really taking the lead like yesterday, and mid caps are also participating with huge amount of gusto, 0.4% up on the mid cap universe as well. And that is also showing on the market strength. But remember that the advance and decline ratio is neck and neck slightly in favor of the advances. If we really take a look at Nifty 50 components, well, there are some draggers like Tata Consumers, Apollo Hospital, Adani Ports, ITC, TCS, Britannia. So some of the consumption names, and from the banking space, ICICI Bank is not doing too very well, but the heavyweight HDFC Bank is the one which is gaining. So, Sonia, it's a good day of trade and momentum building also with the RBI's big dividend. That particular impact is also
It's a great day of trade. You know, the reason is that after the big build-up we saw yesterday, the market is actually building on to its gains. You may not see it so much in the headline index, but you're actually seeing so much traction in the broader markets. I wanted to talk about some of the stocks. You know, a lot of defense stocks are coming back in a big way. Fresh highs on names like, say, a BEL is sitting at a fresh high right now. Look at Bharat Dynamics, 12.5%, 13% higher, huge volumes over there. A couple of other names as well. Bharat Forge in that space is also picking up pace. Paras Defense, Mazgaon Dock, all of these stocks are sitting at fresh highs. So that is one space that the street really, really likes. And Finolex Cables in, you know, the entire consumer space, consumer durable space, Finolex Cables is up about 15%. So big moves coming into individual stocks, and the headline index hanging on to the 23,000 mark. But there was a big move in the market this morning. The market scaled new highs with the Nifty hitting that 23,000 milestone. How has the journey been to 23,000 for the Nifty? Hormuz joins in with interesting insights on that. Hormuz, over to you.
You know, it's been anything but a smooth ride for the Nifty between 22,000 and 23,000. We took almost 88 trading sessions to get to these 1,000 points. Then we hit 22,000 at the start of January. Then we tested levels of around 22,700, then slipped down to 21,800, 700. Now we scaled those levels again. Then we had another slip, and now finally we are at that 23,000 mark, courtesy that stupendous move that we saw on the weekly expiry yesterday. And there are plenty of stocks that have contributed contributed to these gains, and Mahindra is the leader of that pack. If you could pull up the gainers, you'd see there M&M 58% since that January move when we hit 22,000 first. So 58% there. Mahindra is also at record highs as well. Some PSUs part of this list, BPCL and Power Grid there. Tata Steel, considering the recent rally that we have seen in metals, also part of the list. And State Bank of India, after the result surprise, is up 31% as well since January, a big contributor among the top 5 on the Nifty. But IT has been a pain point almost all through the year for the markets, and that reflects in this list. LTI, Mindtree, HCL Tech, 3 out of the top 5 Nifty laggards between 22 and 23,000 are IT stocks. And also forming in the list is Asian Paints, that has suffered a bit of competition pressure, and IndusInd Bank as well, another 15% down from January till date. And some of the stocks that have contributed in terms of points, Mahindra & Mahindra not having a significant weightage on the Nifty, but considering the move that it has seen, and that reflects in the point contribution as well, 207 points there. Some banking heavyweights like ICICI Bank, not among the top 5 gainers, but contributing in terms of points. And Reliance Industries makes a mention here as well, 166 points in this 1,000-point journey. And lastly, some of the stocks that were the laggards, and HDFC Bank has been this blow hot, blow cold sort of a year that it has had, 211 points on the downside. So not contributing at all to this Nifty 1,000-point rally that we have seen. Infosys, Bajaj Finance at ITC as well among the top losers. So a lot of index heavyweights there on the downside, and yet the index has managed to scale this 1,000-point journey, and we are at Mount 23,000.
All right, Hormaz, thanks so much. Quite an exhaustive number crunching there as Nifty 50 reaches another milestone of 23,000. mark. All right, let's focus on some of the stocks on the move today. And shares of Interglobe Aviation, they are under pressure today despite posting a strong set of fourth quarter earnings. In fact, Sonia will tell us more about what is it that the street does not like, Sonia.
So, you know, the stock, I think, has come in for profit taking, right? I just want to put some brokerages on board first. Most brokerages actually like the numbers and continue to be overweight on the stock. Let's start with JP Morgan. They are overweight. They've actually raised their target price on the stock to 4,900. You have Morgan Stanley that's overweight as well. They have increased their target price to 5,142. Jefferies as a hold, they have raised their target price to 4,150. But Elara Capital is the only one that has changed their rating to sell from a reduce. So let me tell you what most brokerages are saying. The Q4 numbers were a big beat. They were better than what the street was estimating, so no complaints at all over there. The yields continue to surprise. Passenger growth has been very strong. The yields have gone up 7% on a year-on-year basis. The FY25 guidance is unchanged. The company continues to expect an early double-digit growth in FY25. But brokerages also say that the stellar run that we have seen in the stock factors in a lot of the positives. So maybe some profit taking is what you're seeing. Now, Indigo is evolving into a larger business with newer avenues of growth, which include loyalty programs, a new business class that they're going to launch, long-haul international flights as well. In fact, the business class services by Indigo will be launched by the end of this calendar year itself. They will be adding some wide-bodied fleet. So one of the brokerages has called it Indigo 2.0 going forward, and most brokerages continue to be very bullish on the stock. Today, of course, we are seeing some profit taking. But in their earnings conference call, the company's CEO Peter Elbers said that the airline would soon offer business class seats to passengers who wanted a premium experience, and also said that their target is to have a fleet of 600 plus aircrafts by the end of this decade.
We are taking the next step in the evolution of Indigo. We will be launching a tailor-made business product on the busiest routes and business routes of the country before the end of this year. There's an ever-growing need for premium travel in India, and by launching this product, we will create a desired option for many who are aiming to travel business, and perhaps for some of them for the first time in their lives. Our current pending order book of a little short of 1,000 aircraft to be delivered up to 2035 gives us long-term visibility well into the next decade. For the many years to come, we will receive a minimum of one new plane every week. And this speaks a lot about India probably being the last frontier of aviation growth of such a high magnitude, and the part Indigo is poised to play in it. With our target of 600 plus fleet aircraft by the end of the decade in mind, we continue to develop and align people, processes, and technology in line with the growing size and the scale of Indigo.
All right, let's steer our focus towards the cement sector now and shares of JK Lakshmi Cement. They are higher in trade after the company posted a good set of fourth quarter earnings, and Arun Shukla, who's the president and director of JK Lakshmi Cements, expects the prices to improve once the demand kicks in. And he also guides for over 10% volume growth in this financial year. Listen in.
Our volume guidance is 10% plus. H1 is going to be around maybe 8% and H2 around 12%. So that is what we are targeting. Here on, I see that prices will definitely improve, and means at least 1.5 to 2%, 2.5%. That is what I see the price increase. This is what my estimation is based on the fair estimation which I can do as of today. So current year, I think Surat grinding station we are commissioning, so we'll be commissioning around Q3 of this year. So their total capex is about 225 crore. Apart from that, we have railway siding which we are commissioning at Durg. So that is getting partially over. Maybe I think by Q2 we'll be concluding there that as well. So that is about 220 crore. So around 500 crore. That is what the capex. Along with that, some of the announcements which we have done. Once demand improves, prices also will go up. From here on, I see that prices will definitely improve, and means at least 1.5 to 2%, 2.5%. That is what I see the price increase. This is what my estimation is based on the fair estimation which I can do as of today.
Okay, let's shift focus now on a review of the FTSE All World Index and the FTSE All Cap Index. The changes are expected to happen today itself. Vivek is joining in with more details on that. Vivek, over to you.
Well, that's right. So passive indices, that'll be in focus of both the FTSE, and also remember, today we are also expecting the Sensex Index Committee to go ahead and make a few changes. Now, coming to the FTSE, both there are two indices that we track. One is the All World Index and the other one is the All Cap Index. Now, as per IFL Alternative Research, the index changes will be announced today. The implementation will be later. So this particular review mainly will focus on the stocks, that are recent listings, any demergers, any spin-offs. These are the ones that will be considered by FTSE in order to be introduced or go ahead and added as far as the All World and All Cap indices are concerned. So which are the likely additions? JSW Infra, expect flows of close to $38 million if included. The list of other stocks are Hunasa, that is Mamaearth, Happy Forging, Cellular, DOMS, Inox India. IREDA2 could be an inclusion, and that could attract flows of close to $57 million. Tata Technologies is another one. Close to $35 million is what it could attract. On the other hand, Sensex 2 could see a few changes. You could see Adani Enterprises coming in the place of Wipro. If added, Adani Enterprises could see flows of close to $118 million, and Wipro could see outflows of close to $56 million.
All right, Vivek, thanks so much for getting us all those details, and the inclusion and exclusion impacts that stock. So thanks for giving us that perspective. All right, from equities, let's move on to commodities now. And hedge fund manager Pierre Andurand says that copper prices could hit $40,000 a ton in the next 4 years. And to understand where copper prices are headed at the moment, let's connect with Manisha Gupta. Manisha, tell us, what are the brokerages saying and what is the estimate for the price rise in copper?
Well, thank you for that. If you look at copper, it has been one of the best performing commodities within the metal as a sector, and that is because the markets are anticipating that going forward, the demand from EVs and electricals and automation, AI, all of these sectors will be much on the higher side, while the supply will not perhaps be able to catch up with it. Is the reason we have copper prices trading 25 to 27% on the higher side for this year. Also, when you look at the all-time highs that we've made on LME, stand at $11,400 a ton. Now, while the prices have run up quite a lot, there are some words of caution as well coming in. You have Citi saying that the copper should consolidate in the next 3 to 6 months. JP Morgan says that pricing has run ahead of the fundamentals right now. BNP Paribas also says that there is 500,000 tons of copper variety sitting in stock houses right now. And then there is International Copper Study Group suggesting that you could be looking at a surplus in copper in this year and the next as well. But even having said that, when you look at the forecast for copper going forward from here are quite on the bullish side. We already have done $11,000 on the higher side. There's Morgan Stanley suggesting $13,000. There's a report from Bank of America suggesting $12,000. And then you have Citi talking about $12,000 as well. Goldman Sachs talking about $15,000. But $40,000 a ton is really huge. And that is what Iran is pointing out. That can happen in the next 4 years. The report also suggests that this is a spike that the prices perhaps could see. It would not sustain there, because at some level at these higher prices, you will also see a demand getting dented or supplies coming into the market as well. But with the kind of fundamentals that we have right now, well, any number really goes.
Okay, thanks a lot for that. Well, let's step into a short break. When we return, we'll get you up to speed with all you need to know ahead of the phase 6 of voting tomorrow. Stay tuned.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of
So we're less than 2 weeks away from counting day. The polling has been completed in 25 states and union territories. Elections are over in 428 parliamentary constituencies and also for the state assemblies in Andhra Pradesh and Odisha. Phase 6 for 57 constituencies across 7 states takes place tomorrow. Delhi, which has been seen as a high-pitched battle between BJP and the Aam Aadmi Party, also votes tomorrow. Parikshit Luthra joins us now with the latest. Parikshit, over to you.
The liquor scam case, which led to the arrest of Arvind Kejriwal, Manish Sisodhia, Satyendra Jain and Sanjay Singh of the Aam Aadmi Party, has taken centre stage in the capital. All 7 seats in Delhi go to polls in Phase 6. BJP had won all the seats in 2014 and 2019, but this time the AAP Congress alliance is hoping to ride the sympathy wave following the arrest of Kejriwal and other AAP leaders. Release of Arvind Kejriwal or interim bail has come as a morale booster for opposition ranks. BJP has replaced 6 out of 7 MPs. AAP is contesting 4 seats at the Congress 3. Arvind Kejriwal has promised full statehood for Delhi if the opposition wins the Lok Sabha election. BJP candidate and Sushma Swaraj's daughter, Basuri Swaraj, Congress's Kanhaiya Kumar and BJP member and trade association leader Praveen Khandelwal are some of the key candidates in Delhi. Voting will also take place in 10 constituencies in neighbouring Haryana. The fate of industrialist Naveen Jindal, who has joined the BJP, is at stake in Haryana, and also fighting the poll battle is former Haryana Chief Minister ML Khattar from Karnal. 14 seats in UP, 8 in Bihar, 4 in Jharkhand are also up for grabs. 6 constituencies in Odisha, with the fights in Bhubaneswar, Puri and Sambalpur to watch out for. It's BJP's Sambit Patra versus Arup Patnaik of the BJD in Puri, Union Minister Dharmendra Pradhan versus Pranav Prakash Das of the BJD in Sambalpur, 8 seats in West Bengal are voting in phase 6 as well. It has been a volatile campaign there between the Trinamool Congress and the BJP. Let's also watch out for Anantnag Rajouri seat in Jammu and Kashmir, where 20 candidates are in the fray, including Mehbooba Mufti of the PDP.
All right, Parikshit, thanks so much for getting us all the details as India gears up for the 6th phase of our long-drawn union elections. With that, we'll slip into a short breather on the show. But coming up next, well, ice cream makers have a blast as India sizzles under severe heat wave. Details in just a bit. Stay tuned to Business Lunch.
Healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
The margins continue to be under pressure, and I have said in the last interview also that it's still inching down, and the needle coke prices are also coming down with a lag. So that is why the margin is under pressure and it's likely to remain so for next 2 more quarters, it seems. For the last, since we declared the expansion in November 23, it's only the last quarter of Jan to March that we got this capacity. So on that capacity, our total utilization was in excess of 80, I mean between 80 and 85. Going forward for 24-25, we expect to be around 75% of the new capacity of 100,000 tons.
Welcome back. You're watching Business Lunch. Now, as promised, talking about ice creams, large part of India really grapples with heat waves, and ice creams as well as frozen dessert manufacturers are seeing a sharp surge in demand. In fact, CNBC-TV18's Rumi Chakrabarti reports that this has manufacturers not only ramping up their operations, but churning out new flavors. Take a look.
From bite-sized ice creams to vegan and low-calorie ice creams to new fruity flavors, ice cream and frozen dessert manufacturers are turning up the heat as they help the Indian consumer beat the heat this summer. With a hotter-than-usual summer looking likely, companies say they have already seen demand in this segment surge in March and April and are confident this will only increase.
In general, demand is up about, for us, about 20 to 25%. This year, we had forecast a 20% growth, and we believe that we are pretty much on the right track with just 1 month down in the new fiscal and in the summer season as well. So demand is pretty much on the right track.
We've seen a heightened consumer demand this year round. We've been running the summer carnival on our app since 1st of March. We've observed a notable double-digit growth, almost to the tune of 16% compared to last year, if I look at the period of March to 15th April 2024.
This will also see the $2.32 billion Indian frozen dessert market grow faster. Market research firm Markintel Advisors says the market is expected to grow at 4.53% annually in the coming years and adds that 2024 is expected to clock a 13.49% growth in sales. Manufacturers say a lot of this growth will be driven by new launches, improved distribution channels, and an overall increase in consumer spending.
Frozen dessert manufacturers are banking on innovation to drive growth. For example, for HUL, the ice cream business constitutes only 3% of its total revenue. The company, which owns brands like Magnum, Quality Walls, has recently introduced the slow-churned ice creams. Ice cream brands are also using the popularity of quick commerce platforms to amp up their sales.
The company says, and I quote, "There is a growing demand for Indian mithai and international desserts, including brownies, cookies and cream, and cheesecake." Another emerging demand trend among premium consumers focuses on the differentiated artisanal process of making ice cream with the best ingredients rather than a new flavor. We have captured this through Slow Churn, launched exclusively on e-commerce platforms such as Swiggy, Zepto and Blinkit. End of quote. Rival Baskin-Robbins, meanwhile, is banking on bite-sized ice cream treats and a slew of new fruity flavors to keep customers returning for more.
Whole pipeline of products, which includes new ice cream flavors, new beverages. There are new product formats that we have brought in, and so on and so forth.
There is also a market for ice creams that cater to the health conscious.
Plant-based choices, vegan choices. We have observed almost 70% increase in orders for just vegan and guilt-free ice creams. Again, even across the different categories of ice creams, the growth is secular. In some of the new innovative stuff that is happening out there in the market, consumers are also lapping up some of those options.
Interestingly, ice cream is no longer only an after-lunch or after-dinner affair. While Swiggy's data suggests that 7 p.m. to midnight time band remains the golden hour for ice cream orders, Swiggy has delivered over 80,000 ice cream orders between 7 and 11 in the morning. Meaning, an ice cream for breakfast is not the worst way to start the day. In Mumbai with Rumi Chakrabarti, Arundhati Ramanan.
Okay, getting all of us hungry this afternoon, and who wouldn't want to cool off with an ice cream?
You know,
right?
Sonia, this time also for health conscious, fitness conscious people, there are different variants of ice creams have also come to the market. And some of those small units are doing pretty well, and especially on Instagram, they can really further their business.
So, you know,
many such opportunities are really coming up.
The other day, I really felt good about my order because I ordered this almond milk vegan ice cream. I promise you, it didn't taste as good as regular ice creams did.
Never
but
does.
At least it made me feel
a
little healthier. Well, on that note, we will wind down and perhaps go and have a little ice cream ourselves. We will wind down on Business Lunch. Thanks a lot for watching. Midcap Radar comes up next.
Financial fiscal bonanza that has come in. We think the government could therefore choose to reduce the deficit marginally when it presents the final budget in early July, which is what we're expecting, but also leave some cushion for any unexpected shifts that might happen on the revenue and the expenditure side. This is actually going to add to the cash surplus that the government is sitting on. This could very well go, above 5 trillion INR, and therefore some sort of a reduction in the borrowing, could happen. Again, the details of this are likely to get announced in the budget. And as Somiran was saying, it's really positive from a demand-supply environment. So our own forecast is that the 7-year as well as the 10-year bond yields could drop to 6.75%.
We were putting out in our notes saying that there is a possibility that the RBI dividend will be significantly higher than what the government has budgeted for. And so that way, it's not that big a surprise for us. Yes, it means that the government has three options in some sense. One is that it can reduce the fiscal deficit, 0.3% of GDP, as you mentioned. What the initial thought process was that the government will do only somewhat marginal tweak to the interim budget numbers, because the interim budget itself was quite detailed. Now, with this more than 1 lakh crore extra kitty, the budget maths will have to be reworked, and it will become very interesting, and the market will keep on speculating till it's actually announced.
The pressure.
You're watching us here on Midcap Radar. It's a good afternoon. Good because the Nifty has reclaimed that 23,000 mark. Dips were shallow. All indices looking good. The midcaps looking even better. I'm Manglam. With me, Vivek.
Good afternoon, Manglam. So, if you're looking at the midcap and the Nifty 500 index, up for the 11th straight session, 13-year lifetime high. So, doing very well. But we have an action-packed show. Quite a lot lined up on the show. Start off with the headlines. Stocks trade in the green after Nifty stamps 23,000 level, but advances and declines remain evenly balanced. Metals and financial services are the big gainers, while realty and FMCG drag, but caps relatively outperform.
Finolex Cable surges over 15% after reporting good fourth quarter numbers. Revenue surged 14%, while the profit after tax is up 6% on a year-on-year basis.
Bayer Crop Sciences slips after reporting weak Q4 numbers. Revenues down by almost 19%, while net profit declines 39%. Margin also contracts on a year-on-year basis.
Vodafone Idea surges as brokerage firm UBS upgraded the stock to a buy rating. Joins the list of a lot of brokerages that have upgraded their outlook on the stock post its FPO. UBS's target price is 18 rupees per share. They forecast a potential upside of 70 to 80% on that stock.
Schneider Electric is under pressure after reporting a mixed set of Q4 numbers. The company reported its highest ever revenue and profitability in FY24. Provisioning for an ongoing income tax matter impacted the profitability.
All right, then we're talking about a lot of these mid-caps moving well. Just keep an eye out on a couple of these frontliners. We spoke about Vodafone briefly. Bharti Airtel has moved to the high point of trade. NTPC has done well. L&T, that stock's been on a tear as well. In fact, in the last 12 months, it's rallied nearly 70%. That up move on that stock continues as well. And we're seeing a decent traction on something like Maruti Suzuki as well. So the combined might of all these frontliners have held the Nifty above that 23,000 mark. And also keep an eye out on HDFC Bank. Yesterday was below all the important moving averages, 20, 50, 100 and 200. And in just a matter of a day and a half, we've seen the stock go past the 200, 20, 100 and 50-day moving average as well. So big move on big boy HDFC Bank. But yes, Vivek, go ahead.
No problem. I just wanted to highlight, you did talk about Vodafone Idea doing well. You talk about Bharti Airtel and even Industars today, the entire telecom pack is doing quite well. Just a couple of stocks to point out, have a look at Timken. That particular stock in the last hour has moved quite significantly. That's Timken India we're talking about. But a whole host of other stocks is what Nigel is going to highlight in our special segment, Midcap Movers. Nigel, over to you.
Well, let's start off with the top buzzer of the day. The stock that came out of the F&O ban, Vodafone Idea. That stock is up 9%, moving on massive volumes in today's trading session, giving it company on the upside. A couple of those winners, they've got back to their winning ways. So you saw a bit of a knee-jerk reaction on both these two, PFC and RXC. But they are saying, let's pick up the, the mantle and let's move ahead. So both those two are higher. Exide, I briefly remember an early morning trading session, the stock was under some pressure. It's done a big U-turn I saw. So who would have thought a stock that was a relative underperformer, for 4-5 years odd, it's come out of that slumber and it's moved very, very briskly from around the 200 odd mark to closer to around 500 rupees. A few more stocks, these defense stocks, they're on the offense. Have to go with that one. You have HAL, BDL, both of them moving higher. Kochi Shipyard as well as Buzzing and Train. And Welspun Enterprises well holding with the gain of closure around 5%. But it's not all green. There are a few stocks that are coming for profit taking. Interglobe Aviation, that's what market positioning makes, tells you. Interglobe Aviation numbers very, very good. The stock opened up with a gain of around 2.5%. And it's now down close to around 3%. Maybe for a longer term investor, it could look like a buying opportunity. But for the time being, it's one of the top volume losers on the downside. Godrej Properties, there is some fears with regard to one of their projects here in Mumbai. The Defence, Ministry has sent them a notice as per what reports suggest. So that's down close to around 2.5%. And from the pharma pack, you have Torrent Pharma that's under some pressure. Schneider Electric as well coming for profit taking. And Keystone Realtors, some of those stocks have been big outperformers. But for the second day running, Keystone Realtors is under some pressure. Back to you guys.
All right, Nigel, not done with you yet, because while you were doing, that link telling us about the stocks which are moving and shaking, I couldn't help but notice you put on your dancing shoes, Nigel. It's the three of us, the markets are moving. It's a Friday. How about a little bit of a jig?
No, not now. But later this evening, with that music playing, animal music.
All right. With a glass on your head.
And Vivek also will be giving me company, so you better join.
Oh, most definitely. I have my glass ready, though there's just water in it right now. Vivek, what about you?
Markets at all-time high, anything goes.
All right, markets at all-time high, anything goes.
Manglam, you'll be joining us?
I will be joining you with my glass of green tea, but I'll do the jig.
All right, thanks, gentlemen.
All right, Nigel, thank you for that. Such is the mood. Let's also welcome Heyman Kapadia of KR Choksi joining in for a quick technical check on the market. Heyman, things are moving, things are buzzing around. For how long?
A very good afternoon to you, Nigel. Mangalam, thank you for having me on the show. It's always a pleasure. Well, that is a googly that you've thrown to me, Mangalam. How long? Well, it's anybody's guess. Going strictly by technicals, 22,769 was a major headache, Mangalam. We've taken that out. And for the second day in a row, we're sustaining above that. So frankly speaking, this opens a door for upside 23,300 and maybe even more. The Bank Nifty is supporting the move. Ideally, we need a close above 49,057. Reliance is staging a comeback. Reliance has done nothing, Mangalam, for the last 15 weeks. And now Reliance is waking up. Okay, it's not yet broken out. But once Reliance takes out, there's this range between 3,000 and 3,018, Mangalam. Once that gets taken out, it would be very surprising if Reliance doesn't move 8 or 10% from there. So, frankly speaking, the numbers come into your head make no sense because it seemed like astronomical proportions on the upside. So everything is hunky-dory. Once again, for how long, I'm not sure. The VIX is at 21.5, which is natural. It moves up. In 2019, it had gone up to 29. In 2014, it had gone up to 39. Having said that, we still have headroom over there. But I guess not being political, the election results are sort of, out there, already given. So everything looks fine. Levels don't break on the downside. You have IT oversold, FMCG looking good, cement moving. Pharma is trying to break out of a 15-week consolidation phase. Everything looks good. So fingers crossed, seems good.
Thank you so much, Heyman, for joining us and giving us a broad sense. But, at this point of time, which are the stocks, that are best placed to give returns also? Which are your top stock recommendations for today?
Yeah, firstly, that a buy call on Axis Bank, it looks good. We posted we're almost near a fresh all-time high. And we've had a consolidation phase, had a breakout, a pullback, and now we're back up again. So a buy on Axis Bank at 1170, a stop loss of 1140 and target of 1230. The second one is a buy call on Balrampur Chini. It's been consolidating higher bottom oscillators on the daily charts have given a crossover buy, has closed above the 55-day exponential moving average. So everything looks fine, and we are looking at a further upside. So a buy on, it's a slow-moving stock though. A buy on Balrampur Chini at 384, stop loss 375, target 402. It's sort of a 1 week sort of a call. Yeah.
All right. Would you have a view on BSC by any chance? Because as we speak, the stock seems to be spiking up once again. It's been a big mover in the past, but the last month or so, it took a brief pause. In fact, this week as well, despite the up move that we're seeing today on the stock, BSC, Bombay Stock Exchange, we've, still not come out of the woods for this week. We're still down by about 1.5%. Your thoughts on this one? Do you think the correction is done, or this is just a dead cat bounce?
Currently, the correction seems to be done, Mangalam, if you have a slightly shorter-term point of view. A 4-week consolidation, I'd say consolidation because the bigger picture is bullish and we are in a correction in a bull market. So a range between 2595 and 2900, 4-week consolidation. Now, it's bouncing back after taking supports, oversold, a hint of positive divergence. So I believe a short-term correction is over, but we need a close about 2900 for it to resume its intermediate uptrend. But yes, time being, the worst is over. Until we don't break 2595, chances of it going up are more than chances of it going down.
Thank you so much for that. In fact, today even Investec has put out a note where they have a fast buy as far as BSE is concerned. So that could also be aiding the up move in today's
Yeah,
trading
it's
session.
a vertical up move that we're seeing. So definitely a lot of people would have gotten their hands on that Investec report, and maybe they are acting on the fast buy. It's a 5.5% up move that we're seeing on BSE after the stock having corrected nearly 15% from its highs. Thanks a lot, Hemain, for joining in. We speak to you next Friday as well. Take a short break. Come back on the other side. We'll get you an exclusive conversation with Ankur Gupta of Brookfield Asset Management. Stay tuned.
In a historic move, not one but 3 European countries, Norway, Ireland and Spain, have announced that they will recognize an independent Palestinian state. The announcements were made in quick succession and in a coordinated manner in the hope that this will help bring peace with Israel. The formal recognition in all these 3 countries will be made on May 28th. However, an angry Israel immediately called back its ambassadors from Norway and Ireland, warning that such a move will fuel extremism, terrorism and instability. With the rising civilian death toll in Gaza and the International Criminal Court evaluating the application for arrest warrants against Prime Minister Benjamin Netanyahu and Hamas leaders, all eyes are on Israel's next move. Let's try to understand why these countries have done this. Norway's Prime Minister said, and I quote, "There cannot be peace in the Middle East if there is no recognition." Spain's Prime Minister also reiterated that it's essential that the two sides, Israel and Palestine, negotiate for peace, and it's for this reason that we recognize Palestine. While the Irish Prime Minister said that Palestinians in Gaza are enduring the most appalling suffering, hardship and starvation, and permanent peace can only be secured upon the basis of the free will of a free people. So what exactly is the significance of recognizing Palestine as an independent state, and what is the two-state solution? Simply put, the Israel-Palestine conflict is one of the oldest and persisting conflicts in the whole world over who gets what land and how it's controlled. And a two-state solution hopes to resolve it. It's fundamentally about how or whether to split the country's territory between the Jewish and Arab population, Israel for the Jewish people and Palestine for the Palestinian people. Some 143 out of 193 member states of the United Nations recognize a Palestinian state, including India, that supports the two-state solution. In 1988, India became one of the first.
Welcome back to Midcap Radar. Even as the market flirts near the all-time high levels, we have an exclusive conversation lined up for you. Asset manager Brookfield Asset Management is planning to list its luxury hotel chain, the Leela Palaces, soon. Ankur Gupta, the managing partner and head of real estate for Asia Pacific region, tells Shireen Ban that the aim is to make Leela a global brand. Adds that they are very bullish on the housing space in India and that they are investing significant capital in India.
In 2019, when we recapitalized the Leela business, it was a play on two themes. One is that the hotel sector had been on a decade-long downward cycle, such that new supply had completely evaporated. Urbanization trends in India had continued at the same time. More office space was being taken up. Cities had become denser, and business activity had doubled over the course of that decade. So while it looked like a bet, I think it was a very conscious value investment for us. We believed in the brand. So it wasn't just a real estate play, it was a play on turning around an operating business. In the last 5 years, the business has grown from 8 hotels to now 15 hotels, and we have a pipeline which gives us a site for almost 20 properties across the country. We have kept up the luxury quotient and even enhanced it in the last 5 years. Over the last 5 years, in 4 years, we've been ranked in the top 3 brands across the world. So I would say that across the board, the Leela investments has turned out pretty well for us, in terms of the hindsight 2020. We of course didn't model in 2 years of COVID yes. stress. But again, when you buy good businesses and you want to make them great, you have to take some years of volatility in your stride. Now, what's next for Leela? Keep running a good business. I think that's the motto for us. And when recapitalization happens in those businesses, that the business calls for it, and then momentum of growth and access to more partners, in this case could be public market partners, takes it even further.
So how soon can we expect partners in the public market as far as the Leela story is concerned?
Look, if I'm allowed to talk about it, I would say the business is at that point where the growth that we are seeing will ensure that some amount of activity will happen sooner than later.
25?
2024 we are in, right?
Yeah. So
There's a lot of-
2024 or 25?
No, I would always say that, you know, it's better to do things today than to wait for tomorrow.
Okay, so 24 then. Okay, that gives us clarity. So, you know, linking this to the themes that you listed out in terms of service departments and also the luxury side of the India story, which has been booming, especially post-COVID. What's the play that you see Leela doing on both these ends? Is that going to be your vehicle to address both these opportunities?
I would say rental housing is a space that covers a large spectrum. You know, a median age of India is 28. As I said, India has a lot of terminal growth in front of us, many decades, which may not be true for many other large economies. A typical kid would leave home at 18. That starts the journey of student accommodation, then hostels, service apartments, typical multifamily rental space. At 38 is when a typical Indian would take a mortgage. So you are looking at a very wide spectrum of housing needs in a manner that's affordable. And affordable doesn't always mean headline rent. It means the overall package that comes across. So on the housing side, Leela certainly targets the service apartment high-end luxury rental side. We are coming up with a fantastic project in Mumbai next to the airport, which will be a service apartment managed by Leela. And I think that will be a prototype for us to do more. But overall in the housing space, I'm very bullish that, you know, an economy like India, a young country like India, has a lot of legs for us to be investing significant capital in the housing space here. On the question of the brand, globally, hospitality has created fantastic brands coming from different regions and then them becoming worldwide names. You know, Mandarin came from the Far East, Jumeirah came from Middle East, and from the West we had Four Seasons. I think it's time that India creates its own luxury brand that's recognized world over. So that's something that we've been trying to do.
So that's the aspiration?
The aspiration is always been there.
And taking it global?
Yes, I would say that we've taken early steps towards it, and in a more methodical manner. Look, Brookfield is a global investor.
Yeah.
We invest in 30 countries. Our LPs come from all across the world. So today the recognition of Leela with the investor community is very high. In the last 5 years, we've told that story to most of our partners across the world. So the recognition for Leela has always been high, both from users of Leela that have come and visited and stayed at Leela and experienced this luxury, but also in the investor community. And hopefully the next chapter creates more vibrancy around it.
You're talking about growth and you're talking about opportunities as well. I think one of the things that the market is excited about or enthused by is the possibility of you actually upping your guidance as far as new leasing is concerned, because you seem to be on track or in fact have done better than what was expected at this point in time. What's the expectation?
So we've always expected that commercial real estate coming out of the COVID pandemic had hit a rock bottom sometime last year. And the demand side continues to be very strong. People were waiting around at the gates saying, is it the right time? Are people back to work? India never really saw that complete work from home culture. Yes, there was a period of time, rightly so, when the government mandated that we should all work from home.
Yeah.
And that helped control the bad effect of the pandemic. I think India, urbanization is a big trend in the country. In fact, I've gone on and said that we need more suburbanization because our cities are getting a little bit too concentrated. But as far as the REIT is concerned today, the leasing has been, we've achieved 40% of our next 18-month guidance.
Yeah.
And I would say that we should beat that guidance now. Two parts are important. We don't only manage for occupancy, manage for overall return, which is we have to keep making sure that our headroom rental growth that we have is also achieved, because that creates outsized returns for our investors and to our own capital. So I would assume that these assets that we have used to run at 95, 97% occupancy, and today we are in the mid-80s. So there's a 10% headroom to grow in terms of occupancy levels and a 17 to 20% headroom to grow on rentals.
All right, interesting conversation out there. Hotel Leela, what a turnaround story it's been. Listing on the bourses would be extremely crucial to watch out for out there, and interesting as well, given that sort of turn that we're seeing in the hospitality industry. But while that conversation was underway, NIIT Limited reported their numbers, and what a big move we've seen in the stock price since the numbers have hit the wires, and that's because it's an operational turnaround that the company's seen. In the fourth quarter, which is typically a weak quarter, seasonally weak quarter for NIIT, the revenues have actually grown 24% year-on-year and 13% quarter-on-quarter. And the EBITDA as well, you know, the margins at the same time last year, it was a loss of about 9.5 crores. That's turned positive by about 1.3 crores. So that's a big turnaround there. And that's reflected in the bottom line as well. A loss of 9.4 crores turning into a profit of 11.2 crores. So just look at the up move that we've seen as soon as the numbers hit the wires. The stock doing well, up around 8.5%. Take a short break, come back, get you more of the markets and put focus on a lot of individual stocks. Case in point, Schneider, that's our mid-cap spotlight.
Recognize the Palestinian state. However, countries like the United States and the United Kingdom don't.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics.
Welcome back. You're watching us here on Midcap Radar. Metropolis Health, the stock that did well post its numbers, continues to do well, now has moved higher. In fact, this morning it was lower by about 2.5%. From the lows, it's actually recovered a good 5.5%, currently sitting at the high point of trade, making this week's gains close to around 8% itself. But in an otherwise good, strong market, Schneider is the one which is lower in today's trading session. They reported a mixed set of fourth quarter earnings, and that stock is our mid-cap spotlight. So to put the spotlight on that, we have Vamakshi joining in. Vamakshi.
Well, absolutely. Like you rightly pointed out, it's a mixed quarter for Schneider. What's good this time around is the fact that the company has managed to report the highest ever annual revenue, EBITDA, as well as net profit in FY24. The gross margins in the fourth quarter have also seen an improvement of around 350 basis points, and this is largely being led by raw material cost normalization as well as a better mix. The EBITDA margin too has seen an expansion of around 70 basis points, and in fact it is at a multi-quarter high. The intercompany borrowings also reduced by 25 crores. So again, this is a positive coming in for Schneider. But what's bad this time around, the company has noted a quarter-on-quarter decline across the board in revenue, EBITDA as well as PAT. The net profit in the fourth quarter has seen a sharp fall of almost 93% on a YOY basis, and this is because the company had to create a provision for ongoing income tax matters of almost 48 crores. The order inflow growth also was in mid-single digits. It's up nearly 6.2% YOY, and this is much slower as compared to nearly 15 to 20% that the company had generally expected. And this slowdown is largely mainly on account of general elections, selective order picking, as well as the company says that this impact is expected to continue in Q1 as well. The company also held a con call, and they said that the overall transformer market in India is estimated to grow at 7 to 8% annually. They have a positive outlook for data centers, and in fact they expect a rebound in order flows once the new government is formed. But as of now, the street is paying more attention to the negatives as compared to the positives, and as a result the stock is declining in trade today.
Thank you so much for that, Vamakshi. You know, the stock is down at the low circuit limit today. But the next set of stocks that are doing quite well is the entire telecom pack. Today, there has been a positive note coming in from UBS on Vodafone Idea. Rima joins in now with more details.
Thanks so much for that. So UBS has upgraded Vodafone Idea and they've put a target price at 18 rupees. And this, mind you, is the highest target price on the street. There are a few others who had recently upgraded it, like a Citi, Bofa, but their target price was close to about 15 rupees. Now, this upgrade by UBS is predicated on two triggers playing out for Vodafone Idea. One is a tariff hike, which according to UBS should be 15 to 20% in the next 1 or 2 years. And the second one is a potential relief from the government. Now, UBS's view is that a tariff hike is probably priced in already in the market in terms of the stocks. But if a potential relief comes from the government, whether on the AGR dues or on the spectrum, and here the view is that the AGR dues could come down by nearly 50%, then the upside for Vodafone Idea could be quite significant. So, actually UBS says that both Bharti and Idea are trading at a similar valuation. But if the telecom relief comes through from the government, then the upside for Vodafone Idea is so much more, the leverage for Vodafone Idea. So therefore they believe the risk reward is fairly, is very favorable, and they've gone ahead and raised the target price to 18 rupees. In fact, most of the other brokerages, when they reinitiated coverage on Vodafone Idea, they still had a neutral call, but it's only UBS which has a buy call on Vodafone Idea. On the others, UBS is a neutral call, Bharti Airtel, and on Indus Stars. Back to you.
All right, Rima, thanks a lot for that. That's about the telecom space, a buzz ringing in gains today. But let's also talk about Finolex Cables firing up after having a good set of numbers. Upasna joins in to give us the details on that one. Upasna.
The company reported good set of numbers in its Q4 FY24. The numbers were above the street estimates. The revenue saw a growth of 14% on a YoY basis and stood around 1400 crore, while the street was estimating a number around 1329 crores. The revenue growth was mainly driven by growth in electrical cable segment, which contributes almost 86% of the company's overall revenues. Now, coming to this segment, the revenue saw an uptick of 16% on a YoY basis, while margins dipped 70 basis points and stood at 12.1%. It is also important to know that the share of low margin segments like communication cables also decreased from 14% to 9% on a YoY basis. Coming to company's overall EBITDA margins, they saw a downtick of 30 basis points and stood at 11.6%, while the street was working with a number of 12%, which is slightly below the estimates. The PAT saw an uptick of 6% and stood at 186 crores, while the street was working with a number of just about 145 crores. So all in all, we are seeing a good set of numbers reported by Finolex Cables in its Q4 FY24.
All right, Upasna, thanks a lot for that. That's about Finolex Cables. The market's doing market things. The mid-cap index up at the high point of trade with a gain of almost 250 points as the Nifty flirts with 23,000. With that, it's curtains down on this edition of Mid-Cap Radar. In fact, as we speak, we also have the numbers of Ashok Leyland at the bottom of your screen. So 900 crore on the net profit as against CNBC-TV18 poll of 920 crores. Largely in line, a smidge is what we're seeing on the way up for the stock. We'll keep an eye out on the revenue as well as the EBITDA. So shortly, we should have the revenue and the EBITDA of Ashok Leyland flashing for you on the screen. What we have so far, the one number is the net profit, which is coming at 900 crore versus street expectations of 920 crores itself. There we have the revenue as well, largely in line again, 11,267 crores versus the CNBC-TV18 poll of 11,275 crores. So the two numbers that we have on Ashok Leyland, largely in line. So what we'll do is take your leave, come back on the other side, your stocks and some more analysis on Ashok Leyland's numbers.
Makers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force.
Good afternoon, welcome to Your Stocks on CNBC-TV18. But before we get to Your Stocks, the numbers of Hindalco are flashing on your screen. The revenue is absolutely flat compared to last year at 55,994 crore. So the stock is up 1%, is seeing a bit of a spike from the lows of the day. After the numbers, the net profit there, a sharp spike there in the net profit, 8174 crores compared to 2411 crore last year. Numbers of Hindalco on your screen flashing there on a standalone basis. Their revenue is absolutely flat, and Nigel will also be joining in to take us take the numbers forward. But as of now, the first cut for Hindalco, revenue is absolutely flat. The profit has seen a bit of a spike there. Nigel, how the numbers look?
Well, we need to wait by actually for the segmental breakup. The numbers that we're looking forward to is 2,800 crores. That's the total India business EBITDA. So that's going to be the important one. Aluminium business around 2,200 crores. And copper should be around 600 crores. Just trying to remove the segmental breakup. For Hindalco, remember we already have Novelis's numbers. So the number you look forward to is the number you're looking at forward to is a segmental breakup. I'll just try to get that up for you on the screen. Yep, I think it's coming at around 2,700 crores. The aluminium upstream business is 2,700 crores plus the aluminium downstream business is around 152 crores. So approximately 2,850 crores is the aluminium business itself. These numbers look good. The aluminium business is a bit of a beat as we speak. And the copper business as well has come in at around 776 crores. So let's just get both these two numbers up for our viewers on the screen. 2,850 crores for the aluminium business. Copper business at around 770 crores. Aditya Velekar, Senior Research Analyst at Axis Securities joins us. Hi Aditya, good afternoon. Good to see you. Tell us what do you make of these numbers? I'm just looking at the release. The aluminium upstream business has come in around 2,700 crores and the downstream business at around 152 crores. It looks quite good. If I put it together, it's around 2,850 crores.
Yeah, Nigel, the numbers look quite good. So we were projecting 6,500 kind of EBITDA, and it has exceeded that 7,200. Yeah, you're right. Aluminium upstream is a bit. Even there is a recovery in aluminium downstream sequentially, which they have indicated in the Q3 call that they will witness a recovery there. And copper is also bit sequentially. So I think copper is a slight surprise because they were guiding 550, 600, and then the numbers are 776, which is quite good. And Novelis is already reported, which is in line.
Indeed. So, what do you do with the stock? Because the Q4 is looking so good and Q1 could even be better because aluminium prices have moved up and also we'll have the input costs that have cooled off a little bit. So, your view on the stock at around 680 rupees?
Yeah, I think that's a fair question. Valuations are slightly on the upper side. So I think valuations might have factored in the good, the level of LME aluminium prices, which has increased sharply recently. So I think a part will depend on their commentary on what they will do on the Novelis IPO in future and their growth outlook, their guidance on Bay Minette and all this. So we'll wait to hear that. But as of now, post Novelis, we have increased our target price to 720. And post this con call, we will further see. But there is still some room for upside. A bit also depends on how the LME aluminum prices pan out, especially now since the Fed's commentary of slight risk of mood is there in the market that there may not be a rate cut, or you have to see how the macro sentiments pan out. From the demand perspective, the things look good. Especially from the rate cut perspective, the things are slightly dicey. So we have to figure out how the aluminium trajectory pans out. Otherwise, the business is doing well. Only thing we have to keep monitoring is the Bay Minute capex and how those things eventually pan out.
Lovely. All right. Hold that thought, Aditya. We have Prakash Diwan as well, who joins us, on the phone line. Hi, Prakash. Good afternoon. And what do you make of these numbers? It looks like these numbers are very, very strong. I'll tell you what. I was looking at three brokerages. That's CLSA. You had the numbers coming in from Kotak as well as Equirus, and none of them were anywhere close to these numbers. The aluminium business itself has delivered a number of close to 2,800 crores, and copper added to that another 770 crores. So together, the India business has given you an EBITDA of around 3,500 crores. Your take?
No, absolutely. These are absolute stellar numbers, almost 30-40% higher than most estimates. But, interestingly, you need to, when you overlay this set of numbers with the stock price behavior, and from the last quarter when you remember we discussed and there was a disappointment in the call on all the capex that they started sharing with the street, the stock's already done close to about 30-35% from there, Nigel. So, that was in anticipation of the overall commodity upswing globally that we are seeing in copper and aluminium. These numbers will be able to help the stock hold on to these gains. That's what these numbers will do. And any reduction in any softness in commodity prices will actually see some profit booking coming at 680, 685 levels, is my guess. But these numbers are superb, and I would believe if the commentary also matches with this exuberance that could come through in quarter one of FY25, then there would be some more buying and allocation. But it's been overbought in the last at least couple of months for sure on the institutional side as well, if you see. But otherwise, these numbers will help justify the elevated levels at which Hindalco trades. So, and right now it's a toss between Vedanta and Hindalco in any case for anybody who wants to allocate to non-ferrous.
What is your preference between the two?
No, I have always liked Hindalco for some sort of stability and predictability in that sense. Of course, it's been a bit volatile also for different reasons. But Vedanta is a different ball game. You really don't know what could come through it there. A lot of surprises at times, pop up. So I like the staid, balanced approach that Hindalco offers, and I think that's where the allocation from the institutional side will also increase.
Okay, all right. Thanks a lot, Prakash, as well as Aditya, for joining in and giving us all of those details. So those are the broad numbers that come up for you on the screen. The India business, if I put the copper business, the aluminium downstream and upstream business together, well, that gives you a number of around 3,600 crores, which is much better. Copper's coming at around 770 crores, the EBITDA number, which is better than what the sheet was working with, of around 630 crores odd. And also the aluminium business, that's Utkal, as well as the aluminium business. Well, both of them looking quite good. So these numbers go down as a beat. The only problem is the stock has already run up big time. Post the Novelis numbers, post the commentary, and post the surge that we have seen in aluminium prices as well. So Hormuz, I'll throw it back to you, but these numbers go down as a beat.
Beat indeed, and it's reflecting in the stock as well. Off the day's low, not a very significant move, but as Nigel was highlighting, the stock has seen quite a bit of a run-up in recent times as well. The stock is up almost 8% in the last 1 month itself, 683 there for Hindalco after a very convincing beat on estimates. But joining us today on Your Stocks are Parthiv Shah of Tracom Stockbrokers and Vaishali Parekh of Prabhudas Leeladhar. Parthiv, Vaishali, good afternoon. Thanks a lot for joining in. I'll get to our first query for the day, and that is from Shafi. He's writing to us from Andhra Pradesh. He's holding 1,000 shares of NTPC at 171 rupees and 1,000 shares of ONGC at 152. Now, he's a short-term investor and he wants to know whether he should hold or sell these stocks. So, Vaishali, I'll start off with you. Which among the two, ONGC or NTPC, which chart appears more stable compared to the other?
Hi, good afternoon. Actually, both these stocks are very stable. So I would say continue holding with a trailing stop loss. Well, I would say for ONGC, 270 acts as a support and 286 acts as a resistance. So once we see the stock moving about 286 to 90 levels, we would be seeing the stock going towards 310, 320. So this is how ONGC has to be played with. And NTPC also still going great. And I think continue holding with a trailing stop loss, because the way these stocks are moving, I won't be surprised if it goes towards 400 levels.
Right. Parthiv, PSUs have been the favorite of retail investors since almost the last year and a half, and ONGC and NTPC are not generally among the stocks that generally get spoken about when it comes to PSUs. We usually talk about the RECs, the PFCs, the IRFCs. Now, this gentleman is a short-term investor. He is holding both ONGC and NTPC. What is your advice to him for the short term? Which among the two do you think is likely to outperform the other?
Good afternoon to both of you. See, I think one fundamental change that both of these companies are witnessing, first I'll start with NTPC and then ONGC, is the way these companies are managed. In terms of NTPC, we know for the fact that it has one of the largest thermal power plant assets, and currently the plant load factor, plant availability factor are doing extremely well. They have their own coal mines, so very well backward integrated business model, and the realizations are extremely good. In fact, there are charters about if new capacities don't come up on time, in few years' time, there could be some power deficits. So in that case, I think it's a very good play. Moreover, I think the additional trigger for NTPC investors is about the IPO. And we are very confident that by this year, I think we'll witness the IPO of NTPC Renewables, which can unlock a lot of value. And we have seen what sort of valuation is unlocked in a lot of PSU-based renewable energy type of companies, whether it is the financiers or for the generators. So we are very upbeat on that front also. So positionally, I think NTPC is looking good. In terms of ONGC, I think we know for the fact that the fortunes of this company are dependent upon the upstream oil realization. And as of now, I think the realizations are looking pretty good despite all the geopolitical tensions. It has not like crazily spurt up. But I think a key trigger would be any sort of new production increase for ONGC in terms of the gas production and also the upstream oil production, which I think probably might not be very easy and would take more time. So it seems that ONGC, I think, could stay here, consolidate for some time. But NTPC looks very good because it has a lot of triggers in the short to medium term.
Plenty of triggers for NTPC in the short to medium term, as Parthiv was highlighting the impending IPO as well of the green energy business. But moving on then, Shirisha is now writing to us from Mangalore, and she's holding 10 shares of Page Industries at 36,000. Now she wants to know whether to hold or to sell those shares. Now Parthiv, Page Industries came out with numbers recently. They flattered to deceive. The stock has been a bit of an underperformer in recent times. Whether you consider the year-to-date basis, it's down almost 8%. On a one-year basis also, it's down around 13-14%. What is your call on Page Industries, and what is your advice to this writer for who's holding these shares? Because it's not something that will give you quick or instant returns, 100-200% return. It's been on the expensive side as well.
Oh, yes, quoting it around 65 trail price to earning multiple. And at a point in time where since many quarters, it's a very surprising element, but I think despite all the consumption boom we're witnessing in India, I think some of the innerwear segment, due to competitive intensity, due to the replacement cycle, whatever we may call it, but it's not been growing with all guns blazing. And despite the fact that Page Industry holds the finest brands in athletic wear, which is Speedo and also Page Industries in Jockey, I think what we have witnessed is the growth has been pretty moderate. And that was witnessed even in the Q3 con call of the management that, they were not very upbeat in terms of the growth prospects. They managed their cost extremely well. That's why the margins have held up pretty well. But there is no major volume growth happening. And unless and until that takes place, I think it's very difficult to see a further re-rating of the stock. Rather, one is positively surprised that, the stock has not de-rated and it is held up on those levels. But I think there are no major triggers in the short to near term. Even the management alluded to the fact that Q4 could also be a little tricky in terms of proper volume growth. So I think I would suggest an avoid, or maybe the investor can take an exit from this company.
The investor can take an exit from the stock. There is the advice coming in from Parthiv. But moving on then, S. Jaykumar now is writing to us from Krishnagiri, Tamil Nadu, and he's holding a 10,000 shares of NIIT, which he purchased at 102 rupees and 40 paisa a share. And he also has 1,000 shares of Igarashi Motors at 524 rupees a share. And he's a long-term investor and wants to know whether these are good stocks to hold on to. Now, Vaishali, in the short-term charts of NIIT, the stock has been a bit of an underperformer in recent times, but this gentleman has purchased shares at 102. What are the charts looking like for the long term when it comes to NIIT?
So, well, I would say that it's showing signs of bottoming out. So, I would say 95 should act as a stop loss, because even the indicators are showing that it's all likelihood it can bounce back. So, right now there is a near-term hurdle at around 113. So, keep a range of 95 to 113. If this stock moves above 113 and sustains, then I think it's ready for a long-term target of around 140 to 116 times to come. So that is how I would look at NIIT.
Right. And what about Igarashi Motors, Parthiv? He wants to hold on to that stock as well for the long term.
See, as an auto ancillary stock, we know for the fact that it supplies permanent magnet motors to a lot of automotive majors, and they have very good collaboration with the Japanese company. But somehow, I think if you see into the numbers since last many quarters, I think it's not really held up well, whether it is related to the margins or in terms of the revenue growth. And this is despite the fact that we have witnessed a fantastic OEM automotive growth. In fact, a lot of the auto ancillaries have kind of, increased the wallet share with their customers, and not only the wallet share, but even the value share, because we are seeing a lot of, high price cars being sold. But in case of Igarashi, I think that is something as a trend we are finding the company struggling. So don't see any major triggers, and I probably believe that it's better to focus on other auto ancillary shares versus Igarashi.
All right, Parthiv, Vaishali, stay on because it's time for a short break here on Your Stocks. On the other side, we'll answer more of your queries. Stay tuned. We'll be right back.
Clearly, we have arrived on the global economic stage.
And what a great way to celebrate our own 25th year, with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Welcome back. You're watching Your Stocks, and Parthiv and Vaishali are still with us. Our next query comes from Ram, and he's writing to us from Chennai, and he's holding 100 shares of Sun TV at 500 rupees a share, 580 rupees a share, and he's a short-term investor and wants to know whether he should hold on to the stock or he should sell them. Now, he purchased it at 580, Vaishali. He's pretty much in the money right now with Sun TV at 666. What are the charts suggesting for the short term? What should he do?
So I would say continue holding with a stop loss of 650, because if you're seeing overall the media sector has really not participated, and there is a lot of scope for this to go up. So Sun TV is one of the good weighted stocks. So I would say that continue holding. One can hold the stock with a stop loss of 650 and look for a target of 700, 720.
Interesting. By the way, numbers of Century Ply are flashing on your screen there. EBITDA is down 16% compared to last year, and margins have also seen a contraction of 400 basis points compared to the last year of 17% figure that they had reported. The stock there now 1.5% lower as we speak. And moving on, Kunal is writing to us. It's our next query. He's holding 25 shares of ABB India at around 8,200 rupees a share. Now he wants to know whether this is a good stock to hold on to. Now Parthiv, capital goods has been the flavor over the last month and a half. The stocks have been on a tear, whether it be ABB, Siemens, Thermax, all of them have seen very strong returns during this period. What should this gentleman do?
I think it's a fantastic company and firing on all cylinders. And every quarter we witness, I think, the commentary that, the order book is going up. There's a lot of inquiries. And what we saw is like, the stock getting massively re-rated. And, whether you talk of in terms of electrification, in terms of motorization, process automation, robotics, we know there's a lot of private capex going on. And ABB's management is quite vocal of the fact that, a lot of new products from the parents tech tie-up, they're able to launch. And they have 5 manufacturing facilities which are operating at very high utilization levels. And overall, I think our sense is that still next 3 to 5 years, there is fantastic visibility. And, products that ABB has launched where they don't have much competition, nor I think there is any threat of any new company entering into that space. So there's a lot of productivity enhancement equipments that ABB supplies to a lot of companies in the industry. That's why we feel that despite the fact that on a trailing basis is quoted at around almost 90 times forward multiple, with the way the order book is swelling and the way the margins are also looking up with better execution, I think one would suggest a hold on ABB.
The stock has doubled in the last 12 months. What are the charts indicating, Vaishali? 8,400 right now. What are the key levels to watch here?
So I would say actually it's to run up. If you see the charts right from daily to weekly to monthly, all are pretty much in an overbought. So I would be a bit cautious. So I would definitely suggest to no harm booking partial profit. And then again, once you get some dip, good to lower your cost. So that's how I would play the stock. Partial profit booking is recommended from my side.
Partial profit booking is what Vaishali is recommending. And our next query comes from Karan, and he is writing to us from Mumbai. He is holding 150 shares of ITC at 420 rupees. Now he wants to know whether to hold or to sell. Parthiv, the numbers look decent when they came out yesterday, but there was a period when ITC just did not move from 200 rupees. Then it had this stellar run to 500. Now it is again stuck in this 400 to 500 range. What are the next triggers other than this hotel business demerger that can take ITC now to newer highs?
Historically, if you've seen, like ITC always has this, dull movements where for a couple of years or maybe a year, the stock doesn't do anything. But I think the earnings and the free cash flow tends to catch up. And then all of a sudden we see value buying emerging. And luckily, I think for ITC, the good news was that the BAT stake selling, I think that was over, hoping for the fact that there's no further stake supply. So that is something which has helped the stock. The stock did recover after that. And I think looking into the results, I think the cigarette volumes were pretty decent. No complaints there. The margins have held up extremely well. And now most of the businesses of ITC is doing well. And as you rightly mentioned, the hotel business demerger, I think that should definitely add value. More importantly, I think there are no major triggers, but I think what we are expecting is in second half, I think post the monsoon season, I think ITC's FMCG numbers should do better than what they've already done. No doubt they've done a lot better than a lot of their peers in terms of the volume growth and how the margins have panned out. But I think the rural strategy, I think that can catch up with the rural growth. I think that will be an additional trigger for the stock. Quoting it around 26 times forward, not very expensive. I think if the rural economy picks up, I think there is a scope for re-rating further in ITC.
What about the charts, Vaishali? The stock has barely moved in the last 12 months, absolutely flat. It's stuck in that 400 to 500 rupee range. What are the levels to watch out for on ITC?
So gradually it is definitely getting into the higher top, higher bottom formation. But what we need is a clarity for this stock to move past 446, 450 levels. So that would be a confirmation for the further uptrend to continue. So till then, I would say it should be consolidating within the range of 425 to 445.
All right, Vaishali, Parthiv, we leave it at that. Thanks a lot for sparing time and answering our viewer queries on this episode of Your Stocks. Wish you a good day ahead. That was Vaishali Parekh there and Parthiv Shah answering her queries for the viewers. By the way, the market though, the Nifty is back at 23,000 at the highest point of the day now. 23,010 is where the Nifty is. What is doing well are auto stocks and metal stocks. They are the ones that are leading the gains in today's session. And if you look at the top gainers as well, L&T is the top gainer. But in terms of the point contributors, it is HDFC Bank that is leading the charge on the Nifty, and it is ensuring that the downsides are kept in check. But with that, it's a wrap on this edition of Your Stocks. We leave you with the Nifty at the highest point of the day, but don't go anywhere. Closing bell comes up next, and also write into your queries on or email us your queries and we'll address them with our experts. Back on the other side with closing bell.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
The margins continue to be under pressure, and I have said in the last interview also that it's still inching down, and the needle coke prices are also coming down with a lag. So that is why the margin is under pressure, and it's likely to remain so for next 2 more quarters, it seems. For the last, since we declared the expansion in November 23, it's only the last quarter of Jan to March that we got this capacity. So on that capacity, our total utilization was in excess of 80, I mean between 80 and 85. Going forward for 24-25, we expect to be around 75% of the new capacity of 100,000 tons.
It's a substantial fiscal bonanza that has come in. We think the government could therefore choose to reduce the deficit marginally when it presents the final budget in early July, which is what we're expecting, but also leave some cushion for any unexpected shifts that might happen on the revenue and the expenditure side. This is actually going to add to the cash surplus that the government is sitting on. This could very well go, above 5 trillion INR, and therefore some sort of a reduction in the borrowing, could happen. Again, the details of this are likely to get announced in the budget. And as Somiran was saying, it's really positive from a demand-supply environment. So our own forecast is that the 7-year as well as the 10-year bond yields could drop to 6.75%.
We were putting out in our notes saying that there is a possibility that the RBI dividend will be significantly higher than what the government has budgeted for. And so that way, it's not that big a surprise for us. Yes, it means that the government has 3 options in some sense. One is that it can reduce the fiscal deficit, 0.3% of GDP, as you mentioned. What the initial thought process was that the government will do only somewhat marginal tweak to the interim budget numbers, because the interim budget itself was quite detailed. Now, with this more than 1 lakh crore extra kitty, the budget maths will have to be reworked, and it will become very interesting, and the market will keep on speculating till it's actually announced.
The pressure is building on Israel in a historic move. Not 1 but 3 European countries, Norway, Ireland and Spain, have announced that they will recognize an independent Palestinian state. The announcements were made in quick succession and in a coordinated manner in the hope that this will help bring peace with Israel. The formal recognition in all these 3 countries will be made on May 28th. However, an angry Israel immediately called back its ambassadors from Norway and Ireland, warning that such a move will fuel extremism, terrorism and instability. With the rising civilian death toll in Gaza and the International Criminal Court evaluating the application for arrest warrants against Prime Minister Benjamin Netanyahu and Hamas leaders, all eyes are on Israel's next move.
Let's try to understand why these countries have done this. Norway's Prime Minister said, and I quote, "There cannot be peace in the Middle East if there is no recognition." Spain's Prime Minister also reiterated that it's essential that the two sides, Israel and Palestine, negotiate.
Hang Seng, though, is shed almost 5% this week, and it has been one of the biggest underperformers.
We will be launching a tailor-made business product on the busiest routes and business routes of the country before the end of this year.
About 23,125. That's the immediate first level to watch out for. 22,928. It's flattish, 30-40 points lower.
Auto Anks are specifically doing reasonably well is what we have seen.
Nifty is at around 23,000 odd.
We have a kind of a philosophy. We are organically build-up company.
After scaling that 23,000 mark on the Nifty, we've dipped a bit.
If demand improves, prices also will go up. From here on, I see that prices will definitely improve.
The Nifty has reclaimed that 23,000 mark. Dips were shallow. All indices looking good.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, that's the day so far, and it has been arguably a quieter day as compared to the big up-and-up day that we had yesterday. It's also a Friday, so going into a two-day weekend. Could not have said this last Friday because Saturday was working, so that's good. We'll talk about markets, stocks, everything over the next 60 minutes. We're coming to you, of course, from the CNBC-TV18 Motilal Oswal Studios. I'm Prashant. With me, my colleagues Reema and Surupi here, and Nigel is joining us from the newsroom. Guys, hi, good afternoon.
Hi, good afternoon. I think the question now is, once you've scaled 23,000, you're at all-time high levels. What next, right, for the markets?
But, I'll tell you one, Prashant, I'd say that while it's a quiet day, it's probably not, a bad Friday at all. Because I remember the last time this market was negotiating all-time highs, there were immediate sell-offs. And today we've not had that. We've had, minor sort of, cool off from the dip. But again, the buyers come in. And we didn't give up 23,000 entirely. We were trading above that mark just, I think a couple of minutes, still a couple of minutes back. So good Friday maybe indeed. Good week and good Friday.
Well, that's right, but 60 minutes to go, guys. I can sense it in Surbi's voice. She's looking forward to the weekend, but 60 minutes to go and anything can happen. And who would have thought,
Like you, Nigel.
He's counting the plus 30 for Editors Roundtable.
Who would have thought at the start of this week that we'll be staring at 23,000 odd? But I think next week what we look forward to is 50,000 on the Nifty Bank. And, hopefully when we're going into the weekend next week, we see 50,000 on the Nifty Bank, which takes the Nifty closer around that, say, 23,500 odd. But 60 minutes to go, so let's get straight to the action.
Absolutely, and I think 50,000 is more punchier, right?
Yeah, nice round figure. Nice round figure.
Anyway,
this was also the week 75,000 was scaled and mounted on the Sensex. So that's also a fantastic number to have on board.
Records all around, right? But just a few points as we always do before we start sort of getting an opinion, etc. Quieter day for frontline indices. The Nifty Bank, of course, which had a 2% up move yesterday, is trying to get past and I guess close above that level, which is 48,832. That is okay. I think now we are at 48,933. So yeah, we're comfortably. Let's see what the close is. Because that's the last retracement of the fall, and then you're basically looking at that 50,000 number. Same thing happened with Nifty, and of course Nifty, once it crossed that 61.8, it took 3 days actually for it to get to a new all-time high. Trailing support for the Nifty Bank, actually for both the Nifty and the Nifty Bank, it's the 40 hourly. For the Nifty Bank, that number is 48,235. It's about 1.5% away. For the Nifty, that 40 hourly is 22,645. These are, in a way you can look at them as trailing reversal stops for both the Nifty and the Nifty Bank, the closest in terms of supports. Mid-cap and small-cap indices both are up 0.5%, but market breadth is evenly matched, 1:1. It's not all up across the board. PSUs are leading the charge once again. We'll talk more about that space, defense stocks and a whole host of other names. Advanced decline, as I said, is pretty sort of evenly kind of matched. There you go. Actually, declines now outnumbering advances, even as the indices themselves, I guess because of specific large weighted stocks, are still up in the green. Reema.
Well, for the week, the Nifty has gained close to about 2%, while the mid-cap index has seen a gain of about 1.2%. So this is the week where the large caps have come back into action. And today, a lot of the contribution heavy lifting has been done by HDFC Bank. Pull up in HDFC Bank, that's up 1.75%, and throw in L&T. In fact, many of the private sector banks are coming back. So even an Axis Bank is higher in trade. But I think that screen is telling you about that mid-cap profit booking, which is now setting in.
Yeah, that's true. I mean, from the highs of the session, the mid-cap index has cooled off a little bit, but we've still got a gain of about 0.2% thereabouts. It's really a lot more about individual stocks, as has been the trend over the last couple of sessions. I mean, I'll still give you names. Don't go by just what that flat index is doing. But we've still got movers and shakers. Look at a Paras Defense, 10.5% up on that stock. Smaller names like a Som Distilleries up and about. Vodafone Idea, because of the UBS report that we'll tell you more about. That stock's been on a tear right throughout the session, up about 7% even as we speak. Some of these EMS players, electronic manufacturing services, Sirma, for instance, 6.5% on the upside. So, plenty of movers and shakers. As Phenolex Cables, where numbers were very good, still retaining a 13% up move. So it is, of course, as expected, very, very stock specific. But yes, take that point on board that at an index level, there is some profit taking in the mid-cap market. Nigel.
Well, that's right. Well, let's get straight to the action then. How do you position yourself in the final hour of trade? I think Mitesh is back. Kush Bora actually is back with us. Beg your pardon on that one. Hi, Kush. Good afternoon and good to see you in. What's the view from here on? 23,000. I think you were hinting that, maybe, in fact, the markets could move up. I recall last Saturday as well. Tell us more.
Well, the Saturday trailer did turn out to be a good picture at the end of the day, didn't it? So I think on the whole, we are looking at, a consolidation around this level. But the 23,000 mark is perhaps now acting, will start acting as a support zone, because the put option base that you're seeing here is way higher than the call option base. I think, this will act as a strong base. If not this, at least the 22,800 mark will start acting as a strong base. But nonetheless, it'll not be a bad idea to take some money off the table from Nifty. As far as Bank Nifty goes, I would hate to disappoint you. So I think 49,500, 50,000 perhaps by the next week or a little later, is very much on the cards. The catch-up rally is on. And I think the Bank Nifty trade is the one that you want to get into right now.
Okay, all right. And what about individual stocks, Kush, that you want to give us?
A couple of names, Nigel. Bharti Airtel consistently doing well today. Also, if you see it's trading, with a gain of 1.5%, 1,400 might prove out to be a minor resistance. But beyond that, I think 1,440 is a very reasonable target. 1,375 comes in as a stop loss. BSE is making a good headwind. So from the support of the 50-day moving average, the stock starting to inch higher. That's one stock that one should have on the radar. 28, 25, 29.50 are the positional targets. 26.50 is where the stop loss comes in.
Okay, thank you very much for that. Let's get to Ashok Leyland. That's in focus as they just reported their Q4 numbers. There has been a near 20% jump in the company's profitability. But for more details, the fine print, Sonia now joins in. Sonia, the decline that we see in the stock price is because the markets have started correcting, or there is a miss on the numbers?
So it's largely in line with estimates. The numbers were expected to be on the weaker side, and they are weak. So, that's why perhaps you're seeing a little bit of profit taking as well. Remember, the stock has gone up almost 20% in the last 1 month. So there is definitely some money being taken off the table. The revenues are in line with estimates. No surprises there. Down about 3.1%, coming in at 11,266 crores. The margins actually beat estimates, have gone up 310 basis points year on year, but that's also because of the fall that we've seen in raw material costs. EBITDA margins have come in at 14.1%. This is led by a 60 basis points gross margin beat this time around for the company. The profits at 900 crores are bang in line with estimates. The estimate was around 920 odd crores. So profits are up almost about 20 odd %. There is a one-time loss that the company has incurred to the tune of 70 crores versus a gain of 56.4 crores. Now remember, the commercial vehicle space has been under pressure for a while. In fact, the last couple of months have been, have seen a volume decline for the commercial vehicle space. So Ashok Leyland, in that sense has seen weak numbers. But going forward, the management commentary, of course, is important to see whether there is any improvement or not in the commentary. Back to you.
Okay, all right, got that. Sonia, thank you very much. So that's Ashok Leyland. That margin expansion definitely quite impressive. Well, let's move ahead and take the conversation forward with our first guest on the show. We have Prakash Diwan joining in. Prakash, happy Friday to you. Happy 23,000 and whatnot. But the first stock on the radar, as you know, Sonia just pointed out, Ashok Leyland is what we're looking at. What do you make of the numbers? Because it's very true that we are yet to see a very sustained, meaningful traction in CV volumes. The numbers have been fairly patchy, and the stock also an underperformer compared to what we've seen in the rest of the mid-cap market. It's not been the biggest of the high flyers. Your thoughts?
Yes, thank you, Surbhi, for all the best wishes, and of course, congratulations to all of you as well. And as Rima pointed out, we keep forgetting that 75,000 mark on the Sensex, which is a significant milestone. We're just a quarter of a century short of that magical 1 lakh mark. So hopefully we will see that. On Ashok Leyland, my sense is the expectations were fairly muted. The numbers have been very much in line, as Sonia explained, with that. There's nothing very significant in terms of a change in the cycle for CVs. We've seen that come through with Eicher numbers, even Tata Motors for that matter. So you'll have to wait for some more time, maybe 2 quarters for that scale up. And typically, Ashok Leyland benefits more when all its variants, all its verticals start contributing, whether it's the tippers and dumpers, whether it's the buses, and of course the long haul trucks. So there's been not much of a improvement in any of these yet. So I would believe as the new budget comes through and then kind of some of the metals and mining businesses start revving up, in the second half of FY25, you'll probably see that cycle turn up. Right now, if you want to look at Ashok Leyland's given out its numbers at the last of the lot actually on the auto side. My sense is it's time to go back to Tata Motors, which is giving you such a great opportunity to enter. Just because of that cautionary guidance of sorts, there was a little bit of profit booking, which has been a bit overdone, if you ask me. Tata Motors probably stands at this point in time as the best option within the auto pack, including comparing it with the Marutis and M&Ms of the world for a 40-50% upside for the year ahead.
Okay, let's get to the other big mover today, and that's on the way up. Vodafone Idea still holding on to a near 8-9% rally. Today, UBS has upgraded Vodafone Idea to a buy, and they've pegged the target price at 18 rupees. So significant upside from current levels, and this is the highest target price on the street. 18 rupees we're talking about. Now, there were many upgrades that we've seen in the in the last 1 month or so, whether it's Citi, whether it's BofA, but they had a neutral call on the stock. UBS is the only one which has gone out and said buy, and their target price is at 18 rupees. 2 triggers for the company: 1, a tariff hike; 2, potential relief from the government. A potential tariff hike, according to UBS, is priced in. They're expecting, 15-20% in the next 1 or 2 years, but according to them, that's priced in. But what may not have been priced in is a potential relief from the government on their AGR dues or spectrum. If that comes through, then according to UBS, it's a bigger trigger for Vodafone Idea than Airtel. Vodafone Idea stands to benefit more. And considering both the companies are currently trading at the same valuation, according to UBS, the risk reward is more favorable for Vodafone Idea, which is why they have a neutral call on Bharti Airtel and Indus and a positive call on Vodafone Idea. The stock is very, very excited. And also bear in mind, year to date, Vodafone Idea is down 6%, when Bharti Airtel is up 35%.
You know, what's really interesting and what stands out in some of these reports, specifically the UBS one, Rima, is that this is more like an options play, right? Yeah. These reports are not talking about growth in business and internal metrics moving higher, not all of them. The whole sort of aspect
there is, if you read the whole report, they also
correct. But you've obviously picked out the biggest pivot points, the biggest triggers, right? And that hinges on some AGR due getting knocked off, or some equity investment coming in, which has come in for Vodafone Idea. And now the next one seems to be a relief on the due payments.
Which is why all in the last 1 month, there have been many bull cases, bull scenarios which have been laid out. So I think for Kotak, the bull scenario was close to about 23 rupees, while I think the bear case was 7 rupees. And even Citi had a bull case of close to about 25 rupees. So if that optionality of a government relief comes through, then the benefit for Vodafone Idea could be quite significant, because what people are anticipating is the relief could be as high as 35,000 crore rupees. That on their market value, on their overall, the AGR dues is 70,000 approximately. 50% relief, which means 35,000 crore in terms of a relief, is what the industry is expecting. But also, as UBS said, probably a tariff hike may have been already priced in by the market, given the way the stocks have moved.
The other connection, this is maybe slightly unrelated, but is also, I think this also, the rise in Vodafone Idea is also, I think, a bet on political continuity. in the sense that, all of this, of course, hinges on relief from the government.
And the government
support.
has its own equity interest in the company as
Exactly.
well.
So, the government is, and that's a bigger kind of thing, that the government is saying that we very much want
a three-player private
market.
competitive
It's going to be around.
Yeah.
But the government, of course, we'll know on the 4th of June. But I think, I think that's the other thing why it's getting, and of course, the tariff hike is supposed to happen post-elections, right?
On a lighter note, 35,000 crores of relief anticipated. For myself, if I get 3,500 crores of relief from the government in the form of income tax or whatever, I'll take it with both hands.
That's 3,500 or there's a crores after that?
No, and that's what I'm saying. Even 3,500 crores of relief, I'll take with both hands. What
You just said 3,500 crore of relief, but yeah.
No, 3,500. Yeah, let me correct myself. No crores.
Yeah, Surbhi, I think you need to cut off those crores. I heard you say it twice or thrice. I was thinking, what's going on? 3,500 rupees is good.
3,500 rupees relief on income tax, I'll be very happy. But I'm not even getting that. So I'll put the question to Prakash. Prakash, very quickly. Are you willing to play the options game on a Vodafone Idea?
So as a matter of disclosure, I am into that. And very clearly, I think it's been a series of salient changes that have happened in terms of, the moment the fundraise was announced, the promoter group putting in money at a significantly higher, you remember that, 14.87 was the level at which they subscribed. And then, of course, the successful follow-on offer. So I think more or less, as Rima explained, what we are expecting going forward is the bankruptcy risk is out. This continues to be a third player and not just a marginal third player, but a significant third player, given the fact that they've started issuing or looking at ordering equipment, newer equipment, putting up towers, going towards the 5G. So all of that probably is what works out well. I'm not sure about that 18 rupees market, probably reading that into too much into that, saying it should happen very soon. But it could take some time is my sense. And if you're patient, you could still get a 20% upside from your, if that 18 rupee mark was to be met.
Okay, all right. Prakash, I wanted your view on BSE. The stock is buzzing in today's trading session. We had a note coming in from Investec earlier. Vamakshi joins us to run us through all of those details. Vamakshi.
Well, absolutely. BSE is on our radar. Investec has initiated a long fast on BSE. Now, what this essentially means that this is a high conviction, short-term analyst idea. Now, there are obviously concerns around the regulatory risks with respect to the F&O post-elections as well as budget. And the stock did see a correction of around 7% in the past 1 month. But nevertheless, what Investec highlights is that the company has managed to clock strong volume growth in equity derivatives. They've managed to capture nearly 8.6% premium market share in the month of April. They also believe that the company could benefit from market share tailwinds as well as margin triggers, and this in turn could offer stability to its earnings. Profitability in FY25 is also expected to be boosted by positive regulatory developments, which includes the unbundling of clearing charges, increased cash volumes, as well as higher co-location income. Overall, they expect 40% earnings CAGR from FY24 to 26, and they also believe that the company could maintain an ROE of almost 30% plus. They believe the valuations at nearly 30 times of FY26 earnings are quite attractive, and given that, they've gone ahead and initiated a long fast on BSE.
Okay, thanks a lot for that, Vamakshi. Prakash, this one has been a big mover. You have the unlisted share NSE as well that's got excited post those results, the dividend pay as well as the adjustment. But what's the view on BSE?
I think it's a wonderful business. There's no doubt about it. But FY26 is too far off. There's too much of regulatory overhang that warrants a little bit of a softer premium multiple to these businesses. I wouldn't want to pay 30 times FY26. So there's so much uncertainty, unpredictability about what could hit them, and the revenue profile changes dramatically overnight. So that's a risk involved here. It's fairly valued. Every time the chances of the NSE IPO go down or soften, the BSE stock starts getting a bit more center stage is what happens. So apart from that, I don't think there's any new triggers that you look for. You would have to buy it on dips, the way you had some days back when there was a little bit of a fall. So when you get that 10-15% off, that's the time you accumulate. But otherwise, at this point, I wouldn't ride the moment.
Okay. Got that. By the way, Prakash, good afternoon. Hospitals, we spoke to many hospitals today on the back of earnings. We had Max, Yatharth, Fortis. What's the best play? Medanta's come off some 15% from the recent highs, from 1,500 down to about 1,100. If one doesn't have any hospitals in their portfolio and wanted to buy one, what's the best best way to get exposure and why?
Good afternoon, Prashant. So, I don't know why you chose today to speak to so many hospitals when things are looking so rosy. But nevertheless, it's always good to understand this business from a secular perspective. It's a great theme. The only stock on the business that I have found to be very resilient in terms of its ability to maintain margins and still grow at a very defined clip is Narayan Dalal. So if you look at NH as compared to some of the bigger names, the ones that have probably been more mature in terms of established businesses like Apollo and Fortis and all of that, this is one business that doesn't need to market itself too much. It's running to capacity. I mean, very, very close to capacity. The APROB is fairly consistent if you look at from a yearly perspective or a quarterly perspective. I haven't seen any upsets there. And the way they're managing scaling up it's a bit gradual, but it's very promising. So I would definitely look at this rather than try into something which is still too established or has very few facilities to back the business. This is much more robust in that sense and resilient, as I said.
Got that. We'll take a quick commercial break here. Prakash, thanks very much for that. By the way, I was thinking about Vodafone Idea. The other thing which struck me, and you were talking about these price targets, right? And Prakash was also mentioning 21, 18, etc. Usually in this market, you look at, you take any sector, any company, you look at price targets, consensus. They're all behind where the current price is. Price target is 1,500, stocks at 2,000, 2,005. Here, you're getting price targets now which are slightly higher. Right. I think what's happening also is that people are...
One now, all the others are 15 rupees. This is the first one where it's above the
18 and then 21, which is that 22 and 23. Well, I'm just saying that I think this is also happening because there is strength in numbers. One does it. It's just there is also that because
there's a herd mentality.
But it also in a way it tells you that there is also because there is reputational risk, right? For something like this, it's kind of coming out of the depths of crisis, and it has to really turn around. A lot of things have to go right, and that's why I guess they are being cautious as well. That's the point. So when they say 18, I mean if things work out, it's not going to be 18. It's going to be much higher. That's the point I'm trying to make.
But I think I completely take your earlier point. This has a lot of play on political continuity as well, and a lot of the targets veer around to the the chorus on the electoral side, and then the expectations here. Perhaps there's a linkage there, which which only sounds logical. On that note, we have to take a very, very quick break. We'll come back on the other side, and we'll have Aditya Sood of Incred PMS joining in with some views.
And it's for this reason that we recognize Palestine. While the Irish Prime Minister said that Palestinians in Gaza are enduring the most appalling suffering, hardship and starvation, and permanent peace can only be secured upon the basis of the free will of a free people. So what exactly is the significance of recognizing Palestine as an independent state, and what is the two-state solution? Simply put, the Israel-Palestine conflict is one of the oldest and persisting conflicts in the whole world over who gets what land and how it's controlled. And a two-state solution hopes to resolve it. It's fundamentally about how or whether to split the country's territory between the Jewish and Arab population, Israel for the Jewish people and Palestine for the Palestinian people. Some 143 out of 193 member states of the United Nations recognize a Palestinian state, including India, that supports the two-state solution. In 1988, India became one of the first countries to recognize the Palestinian state. However, countries like the United States and the United Kingdom don't.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a
Okay, welcome back. So what, 5 points? So it's absolutely flat at this stage. Nothing going on very much. 22,972 is where we are at. Aditya Sood is with us, portfolio manager at Intred PMS. Aditya, good afternoon. Good to have you with us here. Thanks very much for your time. The question many are asking us is, what's the best way to sort of play the upside post 4th of June? If the numbers are what the market wants them to be, is it PSUs? Is that the pack where there'll be a sort of a lot of action? Is it something else? How do you think about that if you do think about that?
I think so. We are at a very interesting juncture in the market, right? Because if you look at positioning today, we have seen a fair bit of FI selling going through. Incidentally, it has coincided with the MSCI China doing well. 17-18% up move on MSCI China. So if you talk to gem managers, essentially, there are a lot of FIIs who don't want to take the election risk. And, once the election risk is behind, possibly, there could be a bit of reversal. Now, the good news is that, with such heavy selling, which has gone through, possibly mean reversion and FII flows would be watched, keenly. And that is how we are trying to position ourselves in stocks, wherein FIIs can, possibly come and buy. So that is one bit of the market. On the domestic side also, I think so there is fair bit of cash which is sitting in, MFs apart from, what we get from the SIP flow. So this is a perfect recipe wherein possibly, if you get a positive surprise, stocks can do well. But our approach typically has been to focus on something which has not done well in the past. And what we are seeing is that, increasingly in this market at an elevated level, people are becoming, value seekers. And wherever you see value getting, if you see an element of surprise coming through in terms of, the numbers getting reported, you are seeing, fair bit of re-rating happening, fairly quickly.
But where that answer I'll come to. I know your approach has been to kind of sort of find stuff which is not done well. Absolutely the right way to go about it. But for once, if you can put that momentum hat, where will what looks primed for that sort of bursting through the gates higher if you get that surprise 4th of June?
I think so. Momentum has to be looked in conjunction with under ownership of both DI and FIs. So at an elevated level in the market, if you find a stock wherein, there is no institutional ownership and, you see earnings momentum trending up. And this is what we have seen across our various stocks that we hold in the portfolio.
These are not recommendations.
I'll just taking a cue from, hospital discussion that you were having. So for example, if you can find a stock, which is under-owned and trades cheaply, stocks can be, up 30-40% within no time.
No, but just to press on that point, Aditya, you said that you're looking to position where perhaps there's a greater chance of FPIs increasing their ownership. So does that logically come back to large caps like banks? I'm just going for the most obvious sort of guess over here. But beyond that, what could be the areas you're looking at to play that under ownership sort of strategic tactical move?
So if you look at, certain baskets in the market, FMCG is something that I have been constantly highlighting for, I think, so last 2-3 months. We find consumption as a basket, which is under-owned by most, at this point in time. So what you are seeing is that, there is a divergence between rural and urban, which has started to play out, which is there in the data now. Slowly, if you look at Marico, HUL, Dabur, most of these companies are doing well. MNC Pharma is a very, very interesting space. So most of these MNC companies have been trading at, possibly a 10-year lowest multiple. Now, what we are seeing here is that the growth is, trending upwards. So if you look at, Pfizer, for example, they had, a lot of drugs which were impacted by anilium. And obviously, you have a favorable base there. So if you look at, GSK Pharma, for example, the top line growth has been very, very tepid for last 10 years, possibly. And this is the first quarter wherein we have seen a earnings beat. So that these are some of the areas which we find interesting, and obviously they are not very widely represented in portfolios.
Okay, all right. Hi, Aditya. I'm looking for some names. We've got the broad idea, looking for underperformers, looking at some FMCG stocks, MNC names as well. Give us a few names. You know, the last time you joined us, you gave us a couple of names. I think we spoke about KDDL, Landmarks, ABFRL. What else? What's new?
So the top holdings that we have in the portfolio is a combination of, going by this theme, we have been a very long-term buyer in a company known as Newland Labs, which obviously is perhaps one of the best performing pharma stocks, post the COVID low that it made. We find that Newland is clearly a very, very unique story. Innovation quotient is very, very high. There is a huge tailwind of, essentially a biosecurity bill getting passed in the US. And now it is going to, I think so, it is much clearer because, after tariffs getting slapped on auto and solar, it is very, very clear that, for innovation, US would see, Indian companies as a perfect partner. So if you look at a company like Newland, they were already supplying to a company known as Karuna Therapeutics, which had been acquired by Bristol Myers Squibb. So what we essentially see as an extension of this thesis is that, these companies have proven capability. They have a 40-year track record, which is impeccable track record in terms of US FDA. So these are, some of the themes wherein tailwinds are there. Tejas obviously has been a long-term holding for us now. I think so there was a fair bit of surprise on the numbers per se. And that is why, the stock has seen such a huge re-rating in the last quarter itself, right? Because people never believed that the BSNL tender would be margin accretive for them. But what they have demonstrated in the past quarter is essentially that gross margins have been reverted. And obviously, there was an element of semiconductor cost getting built into gross margin. So what we have seen is that, they have reverted to 13% EBITDA margin. And now with this telecom, capex story picking up, we do believe that Tejas has a very, very bright chance of possibly, extending the BSNL contract to a Vodafone Idea as well. So that is a very interesting way to play indirectly the telecom story without getting exposed to the balance sheet risk. And the third company that we have in the portfolio is the Intellect Design Arena, and our long-term structural call on this company has been that margins would trend up. In the last quarter, what we saw was that obviously, they vacated the GEM contract and top line was tepid, but that was widely expected. If you look at Oracle versus Intellect margins, there is a very large differential. Oracle is at 40-45%. Intellect, we believe that, possibly 21-22% margins can head towards, 30% over a period of time. There are, product companies generally have a lot of operating leverage built in. So these are some of the structural plays that we like. More importantly, we like companies which are challengers or the companies which are having huge tailwind and are gaining market share structurally.
Aditya, these are stocks that you've had in your portfolio for a long time now, whether it's Newland, Tejas, Intellect Design Arena. Any new stocks that you have, bought recently or you're evaluating right now?
So there are very few stocks that we have resorted to, add in the portfolio. I think so it is about more about sizing as a play in the portfolio. But what we have added recently is a very small hospital known as Indraprastha Medical. Now, if I look at this hospital, if I have to just benchmark them on valuation, obviously, this is a PPP between Apollo and the government of Delhi. So if you look at this hospital play, essentially last 30 years, they have been into existence. They have got an excellent reputation. Stock was trading very, very cheap. They have reported a 125 crore PAT. When we bought it, the market capitalization was 1,500 odd crores with 250 crores of net cash on the balance sheet. This was the cheapest hospital play. More interestingly, this is the one of the highest return on capital employed hospitals that you can, invest into, because the return on capital employed is northwards of 32%. Now, the real reason why the Indraprastha was possibly cheap was they have not expanded over the last 30 years. But as we understand, possibly, this cash flow accretion would lead to, some sort of expansion or increasing their bed capacity by 40% over a 2-3 year period. So what we have seen is that, any stock which has been categorized as value, as and when growth returns, there is a massive re-rating potential. So as a core thesis, we like companies wherein P multiple can expand and earnings can also compound.
They just have one hospital, right? That one in Delhi. Just that one hospital. Or...
Yeah, that is correct. They have got 750 beds. basically.
Yeah, no, it's one of the oldest ones.
So one of the things that...
No, the market cap is now 2,200 crores. You said you bought it when the market cap was 1,500.
Yes.
Just to press that point, for someone who wants to own a hospital business now in their portfolio, is there something which makes sense? We had an earlier guest who was saying that he likes Narayana. Your thoughts, Aditya?
Yeah, Narayana has been an excellent company. See, the problem with the sector today is that, a lot of companies, lot of hospitals are trading at, anywhere between 25 to 35 times or 40 times EV by EBITDA. So if you just logically step back and think about, the ARPOB, the return on capital employed, the cash flow that it makes, it is very difficult to buy a hospital stock today based on cash flow, right? Because most of these stocks are expensive. So what we are trying to do here is that, we are trying to strike a balance between growth and buying it at a reasonable price, because any which ways the multiples are known to the market, right? So it is more from a perspective of, if I treat Indraprastha as quasi-government and half as, Apollo subsidiary, and if Apollo is trading at 50 times earnings, obviously, the stock is mispriced. Narayana is an excellent franchise. I have held, Narayana in the past. But we also own, DM Aster here. We believe that after the capital allocation move that they have made, possibly, the expansion which is going to come through is going to be 15% CAGR in terms of bed addition for them. And at a 40,000, sort of a ARPOB number, I think so, they have got some headroom in terms of expansion of ARPOB and expansion of margins as well.
Okay, so Indraprastha and Aster DM, 2 hospital stocks in your portfolio. Got it. Aditya, good conversation. Thank you very much for all the specifics and all the perspective. Wish you a good weekend, and we look forward to the next call. Well, the market's absolutely quiet, not much happening. The mid-cap index also dipped into the red actually for just a bit. It's absolutely flat on the 3 key indices, the Nifty, the Sensex, and the mid-cap index. Bank Nifty better off today with a gain of about 0.4%, still being retained on the screen. So it's a pretty swift cool off and some profit taking basically ahead of the weekend and the big event that is lined up. Let's now shift focus to some index changes that we are expecting. FTSE is likely to announce some changes to a couple of its indices. Let's ask Vivek what they are. Vivek, what is the expectation?
Well, today evening, just post market hours, we are anticipating that FTSE will go ahead and release the list of additions as well as deletions to 2 of the indices that we track. One of them is the FTSE All Cap Index, and the second one is the FTSE All World Index. Now, when you're talking about this particular index review from FTSE, it largely covers, the recent listings. So you'll find IPOs, you'll find companies that have either spun off or, mergers. So any specific corporate actions, that's the only one that will be being considered by FTSE for this particular review. So which are the stocks that could make the cut this time around? JSW Infra, expect flows of almost $38 million in case it comes. The other one is Honasa, Happy Forging, Celloworld, DOMS, Inox India. The next stock on the radar is IREDA. This could see flows of close to $57 million, and Tata Technologies, the other one, could see flows of over $34 million. Along with that, remember, even Sensex would be announcing the list of changes it expects as far as its own constituents are concerned. Adani Enterprises expect to replace Wipro. It could see flows of close to $118 million, while Wipro could see outflows of close to $56 million.
Okay, thank you very much for that. Adani Enterprises is quiet today, but it did rally at the beginning of the week, and it's up close to about 10% this week, despite not moving at all today. And DOMS is the other one that he spoke about from FTSE. Will be reporting numbers later in the evening. We will slip into a very short break. As always, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. Also, a few BTSD calls for the weekend lined up with our experts.
In itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Welcome back. Well, it appears to be a bit of a day of consolidation because the markets are as flat as can be and we're almost done with the trading session. But let's get in Nimesh to tell us what is he picking up in D-Street chatter. Nimesh.
Well, actually, not a bad outcome, so to speak. Yeah. It's a flat day, but again, all the three indices hit a fresh high. And after that, you've seen some bit of profit booking. But from a flow perspective, again, it's a mixed day, a bit of bias towards positive. And again, the PSUs are well bid. So that's the space which has again been well bid, and there is a bit of buying as well in that particular space. So that clearly stands out. I guess, the only thing is that after a big rally yesterday, we don't have so much of a cushion of the short in the system. So that's something to watch out for. And I guess next week is going to be equally important just ahead of the very big event. So I guess markets can be just consolidating in the next few days from here on. But the good part is that some bit of money is returned to the table from the larger FIs. We saw that yesterday as well. Despite the block deal, they were net positive. Even in today's market, the number will look large, but do account for couple of large block deals, including the Adani Port block. So because the seller was not an institution, which is why you'll see a large number again in today's market. But as I said, flat as it can be, but at least there is buying interest in some select names and some PSUs as well.
Well, that's right. And yesterday we saw one of the most powerful short covering bounces that we've seen in the recent past. But individual stocks, Nimesh, what are you picking up?
Well, so the first name is HDFC Bank. After a long time, it looks like some bit of buying is back in that particular name. A couple of reasons for the stock to do well today. One, a selling pressure from a leading long only fund is largely over, and now some domestic funds are quite active buyers as well, and that's the reason why HDFC Bank is buzzing in trade today. The second name is Adani Ports. A large block, nearly 1 crore shares got changed hands today in Adani Ports. In terms of details, I understand a strategic investor was a seller, and a lot of domestic and long only funds were buyers in today's block in Adani Plus. So the disclosure will be interesting there. The third name is Stark, a small real estate company, but that's been buzzing in today's market. There were multiple block deals as well today, and I understand a leading family office was a buyer in today's block. The results are next week, so watch out for that in TARC. And the last is Samvardhana Motherson. Again, a strong pullback in the last couple of days. I understand the FI interest is back in this particular name, and there are buy flows. Expect high delivery volumes in Samvardhana Motherson today.
Nimesh, the Adani Ports bit is interesting. Stocks up 40% this year. It's and of course, some would argue it's the strongest sort of business within the Adani group. You're saying that there has been a large block and some funds, etc., have come in?
Yeah, that's right, Prashant. So, just to clarify, in terms of a strategic investor, my understanding is when Adani Ports bought over Gangavaram Port, the promoters of Gangavaram were given some shares of Adani Ports. So, I think that entity was a likely seller. They sold 3 crore shares some 10 days back, 10-15 days back, and now they've sold the remaining stake as well. So, looks like it's largely a clean out trade from that particular strategic investor. In terms of buyers, I understand one of the long only fund from US, they were small buyers. Couple of domestic mutual funds were also buyers as well. So it's a mix of institutional investors who bought today, but from a seller perspective, it's the strategic investor who've cleaned out in today's block deal.
All right, Nimesh, thanks very much for that. Interesting sort of list of stocks as always, and we will come back with some of these over the next few sessions as well. Well, that's D-Street Chatter with Nimesh as always. But let's tell you what to buy or sell today for a reverse trade when we come back on Monday. We have Kush Bothra joining in for that. Kush, what do you have?
Hi, Prashant. A couple of trades, one from the cash space, one from the F&O space. TVS Motor is doing well. It's closed above the weekly resistance that we saw, or rather the highest point of the week for this week. So from a near-term perspective, 2300, 2375 are the levels to look at. 2175 is a support zone. From the cash space, KPIT Tech is doing well. It's almost at the 2-month high. that there was a gap resistance that is being taken out today. So again, from a near-term perspective, 1600, 1640 are the levels to look at on the upside. 1530 is a good support zone, so should act as a stop loss.
All right, Kush, thank you for that. We'll come back to you for more, but those are short-term trading ideas. But we got good numbers from Honasa earlier. Stocks, of course, been up and about since the morning. Mangalam is with us to sort of talk about this one. Mangalam, afternoon.
Well, good afternoon. You know, in a sector which is parched for growth, any company does a little better than the industry. The street likes it, and in that, Honasa has gone ahead and done 3x faster than competition in terms of, the products that they are selling. And that's led by underlying volume growth of around 27% in the fourth quarter. For the entire year, it was a little over 20% as well. And that's resulted in 20% revenue growth as well. Yes, it is a smaller base. Yes, the company is expanding offline, etc. as well. But in doing so, operating leverage plays out too. And 21% revenue growth has actually led to a turnaround in their EBITDA of 33 crores versus a loss of 3 crores. And that's reflected in the bottom line as well. A 30 crore net profit is what the company has posted. Now, while they're growing, they're also gaining market share in key products, key categories. 120 basis points market share improvement in face wash, 40 basis points in shampoo. For the entire year, they've increased their offline presence by about 34%. And, 18% of their revenues this year also came in from products that were newly launched. So those pipelines are firing for the company as well. And outside of Mamaearth, some of the brands that they're seeding, Dermaco, for instance, which is a 500 crore brand now, they have a target of 1,000 crore for that. And for the others, like Aqualogica and Dr. Sheth's, they have a target for close to 500 crores in annual run rate over the next 3 to 5 years, along with 250 crores for something like a B Blunt as well. And to add to all of this, they've also gone ahead and made an acquisition for the R&D capabilities of Cosmogenesis Labs, a company which has, formulation expertise, research and development, nano manufacturing lab, a deal that closes in the next 4 to 6 weeks. So brokers are calling this one of those quarters where the company ticked nearly all boxes, and that's explaining the kind of move that we're seeing on Honasa.
Thank you very much for that. A company which has not ticked all the boxes is Orchid Pharma, down 8%. Ekta joins in with the details about their Q4 numbers. Ekta.
Well, yes, a disappointing set of numbers which is coming for Orchid Pharma. So the revenue was up only around 3.4% on a year-on-year basis. And even on a Q-on-Q basis, the revenue did see a decline. It came in at around 217 crores versus 220 odd crores. What also disappointed were the margins, which came in at only 13.3% versus 18.9% year-on-year. The EBITDA came down by around 27% year-on-year. And on a Q-on-Q basis as well, the margins were 13.3 versus 16%. That really trickled down in terms of the profitability, which came in at around 33 odd crores versus 59 odd crores. And this compares to 33 crores versus 29 crores Q-on-Q. So a disappointment which is coming for Orchid Pharma, which has been pretty much a top-down disappointment, with the margins really standing out as the key negative.
Thank you very much for that. Hemang Jani is now with us to take a few questions as we wrap out this week in about 15 minutes. Hemang, afternoon. PFC, REC are big movers today, and we're unable to find out the reason behind this kind of strength. What's happening here?
PFC, REC, basically, you're seeing a bit of a traction for the entire PSU theme, and particularly when you look at the numbers, the PFC numbers which were out, now it is quoting at almost 33% discount to REC. And when you compare the numbers, let's say, there is a 22% quarter-on-quarter growth, much better credit cost, and even the provisioning towards Discom is lower. So, after the concerns that we have had about, the provisioning that these companies will have to do, what is coming out is that even after that provisioning, the companies are performing well and valuation-wise far more attractive. More so, PFC, as I said, is at 33% discount to REC. So there is certain amount of interest in this pocket.
Okay, so those are the power financiers which have had a pretty decent run today. Let's talk about some more movers and shakers. Interesting names that still find traction. Bharat Dynamics is one, which is up and about. Paras Defense is the other. Some of these private names, private sector names on the defense side, defense and space, they're looking interesting this afternoon. Hemang, hi, good afternoon to you. So we've seen the huge rally, right, play out on the whole defense side. and HAL has been the poster boy. But the question is, I mean, do you still like something enough to put fresh money to work?
It's been a dream run for the defense and railway names. When I look at the market cap, when I look at the numbers, when I look at the valuations, I'm a little concerned about the way it has really gone up. Just to give you a perspective, HAL is having a market cap of 3.5 lakh crore. Valuation wise, we can all debate, it's 50 times trailing and growth is something that people are hoping for. But my feel is that if at all you want to participate, I think private sector players would be slightly better off, names like maybe Bharat Forge or L&T, rather than chasing only the PSU names, because you have wide portfolio and diversified business versus just one category and with much better margin profile. So while the momentum is great and people would be rejoicing, traders, but I'm more comfortable buying into some of the private companies in the similar space.
Mangalam was just telling us about Honasa. Bikaji is also a place where we've seen pretty good numbers, growth coming through. Do you like either Bikaji or Honasa?
I think both the companies came out with good set of numbers. Honasa particularly, if you look at the details of the results, in many categories, they are growing much faster than the competition. The volume growth has been very strong. So given that there is a fair bit of store expansion, certain category-wise detailed work that they've done, this looks to be a very interesting, company. So we do like Honasa, and we think that there is a case of 22-24% kind of appreciation over a 12-month period.
Okay, got it. Hemang, thank you for that. Do stay on. We have some more questions for you, but we do have to take a very quick break. Come back and then we'll be in the final leg of this week's trading session.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year.
Welcome back. You're with us on Closing Bell. So very, very quiet close to what has been otherwise a good week for the market. Let's look at some more sort of corporate conversations that we've had during the course of the week. Now, IMFA reported a weak fourth quarter. The volumes were slightly higher, but overall the numbers were still weak. We caught up with Mr. Subrakant Panda, MD of the company, to talk about the outlook. Take a look.
Broadly, if you look at that for Q4 FY24, our average realization, like you said, was roughly about 1,02,000 or so. Going ahead for the ongoing quarter, we expect prices to be higher by about 3,000 to 4,000 tons, if not 3,000 to 4,000 rupees a ton, if not a little bit more. So broadly, I would say for the first half of the year, and as you know, we don't really go beyond predicting 2 quarters at a time. But for the first half of the year, for each of the quarters, I would comfortably predict an EBITDA higher than 150 crores. We would expect EBITDA margins to be around the 20% margin or a little bit more than that, in fact. In as much as the expansion is concerned, we are expecting to have the entire capacity online by middle of 2026. So we will have the entire capacity available for most of FY27. A quick update on the project: we have received environmental clearance. It has been recommended, so we should be getting it any day now.
Okay, some more earnings reactions that are playing out. One of them is Manappuram Finance. Good numbers, and I think the stock is moving up. NII growth of 32%, a profit jump of 35%. So Manappuram Finance is higher in trade. The other one is Aegis Logistics. Came out with numbers about 2-3 hours back, and it's a 17% up move on the stock. A revenue jump of 15%, margin expansion, that's driving a 40% increase in the company's profitability. So this stock is on fire. But on the way down, it's Rico Auto, which is struggling a bit. It's a top-down miss. So there's a decline in their revenues, a contraction in margins, and that's driving a 35% decline in the company's profitability. And once the numbers came out, you saw the stock slip quite a bit. Hemang, Amara Raja is a stock that you look at very closely. What's happening here?
I think the company will be announcing numbers on 28th, and people are expecting almost about 12% kind of a volume growth with almost about 12-13% kind of operating profit margin. Recently, the company has done tie-up with some of the OEMs. Also, political event, will have some role to play, depending upon who forms the government. So I think there is certain amount of interest which is there in the battery companies, both Exide and Amara Raja mainly because of the strong result expectations.
Okay, that is Amara Raja in focus. Let's just go back to the large cap screens. Very quiet, just 17-18 points down. Not much is moving, but HDFC Bank is in leadership position, up almost 1.7%. Now, remember, yesterday's FI numbers were very, very good after, I don't know how long. I mean, it was a triple-digit buy figure in excess of 4,000 crores. Now, not sure if that's going to repeat today or not, but again, the kind of large cap buying we've seen, HDFC Bank, L&T, the hope is that that's going to become a sustained trend, this FII inflow. Hemang, on banks, what's your pecking order? What would you look at buying afresh?
There is a case for certain amount of catch-up when it comes to the banking sector, which has underperformed big time. You look at last 6 months, 12 months, even beyond that. Numbers have been by and large decent. What I liked most was the fact that something like ICICI Bank, State Bank, the numbers have been pretty good. No real negative surprises either in terms of credit costs. The growth outlook also looks quite okay. So I would be comfortable, buying into this, particularly when you look at the markets around. Many pockets have really gone up, be it, certain themes, be it broader market. So this is one pocket where you have a comfort of both the better numbers and valuations. So I think it's a no-brainer.
Okay. All right, just want to focus on some more mid-cap companies. We spoke with Zaggle today. Now, Zaggle had been buzzing on the back of a good fourth quarter performance. Profit and revenue saw a stellar jump. Margins, of course, contracted. The stock started the day pretty high. Now it's cooled off as the mid-cap rally kind of fizzled out. Let's just listen into the management on the outlook ahead.
Growth projection, we have upped our growth projection for this year from earlier guidance was 40% plus. Now we are able to give you a guidance of 45 to 55%, and we are going to double in 2 years in terms of size. While we believe we'll be similar to current levels, we want to be a little conservative, and we see margin expansion, etc., kicking in, in the coming years, maybe 2 to 3 years and beyond, because we see tremendous opportunity to capture market share. See, these kind of opportunities do not come every day, and some of it is on the back of regulatory actions that happened recently.
That was Zaggle. Hemang, do you track the stock? Have you checked out the company, Zaggle?
Yeah, we do track it. Very interesting company, particularly in the, kind of product offering that they have in the corporate segment. There is a lot of scope to roll out very interesting products. Performance, I think they are in an early stage of the growth. So I don't think one should really worry too much, but it would be good to have a small exposure to a company like Zaggle, which is into this cash management and interesting products on the dining and many other lifestyle related products. So we do have a positive view there.
Okay. All right. Got it. Hemang, thank you very much for being with us this afternoon and taking us through a lot of those stocks that we've discussed. Wish you a good weekend and we look forward to the next conversation. Well, with that, we're down to the last couple of minutes of trade. So let's start closing this out. It has been a good week for the market, ending on a tepid note, but as they say, perhaps slow and steady wins the race. So the Nifty hitting the historic next level of 23,000 in intraday action. Of course, the close will happen just below it. Let's talk about the movers and shakers on the upside. HDFC Bank, L&T, Bharti Airtel, Axis Bank, these were the stocks that were leading from the front. The Bank Nifty is still retaining some green. Nifty Sensex mid-cap index have flattened out. But the Nifty Bank was actually the best performing index today. Beyond banks, Bharti Airtel was a strong mover, about 1% higher. Ultratech Cement had some follow through with about a 0.5% gain. So that's the list of gainers. The profit taking was evident in some auto names and IT names. So some examples would be, for instance, Mahindra and Mahindra, Hero, also lower from the auto arena. We talk about Asian Paints down about 1%. Adani Ports shaved off some of yesterday's excitement, down about 2% as well. And then, you had the heavyweights like TCS, ITC and Infosys, which were on the lower side of the screen. Let's talk about the mid-cap market. Of course, it's very, very earnings-driven today. The mid-cap index fizzled out. The breadth is also slightly negative as we are winding up the day. But individual movers and shakers as usual. Phenolics Cables, strong earnings reaction, about 12% higher. Vodafone Idea on the UBS report, talking about a possible upside if indeed they get relief on AGR payments from the government. So 7% on that stock. Bikaji and Honasa were the other very positive result reactions. Good strong showing coming in over there. Bharat Dynamics, 11%. We've got names like fertilizer companies like RCF, about 6.5% higher. So these were some of the big winners on the mid-cap screen. Should just mention here that Interglobe has ended negative profit taking, though of course a bumper quarter, but down about 3.5% on Interglobe as the day was winding up. Let's look at Ashok Leyland. Ashok Leyland ending absolutely flat with a cut of almost 1% after numbers came in mixed. Margins expanded, but top line a little sluggish. The bell has gone. The week is over. The Nifty has put on 2%, taking out some very critical levels today. So it is bulls in control, even though the final rates today point out to a little bit of profit taking this Friday. With that, it's a wrap on this edition of Closing Bell. Thank you very much for watching. But don't go anywhere because our Friday special Editors Roundtable is coming right up.
Milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions. On the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
The margins continue to be under pressure, and I have said in the last interview also that it's still inching down, and the needle coke prices are also coming down with a lag. So that is why the margin is under pressure and it's likely to remain so for next 2 more quarters, it seems. For the last, since we declared the expansion in November 23, it's only the last quarter of Jan to March that we got this capacity. So on that capacity, our total utilization was in excess of 80, between 80 and 85. Going forward for 24-25, we expect to be around 75% of the new capacity of 100,000 tons.
It's a substantial fiscal bonanza that has come in. We think the government could therefore choose to reduce the deficit marginally when it presents the final budget in early July, which is what we're expecting, but also leave some cushion for any unexpected shifts that might happen on the revenue and the expenditure side.
The Nifty and Sensex scale new peaks on Friday, with the Nifty surpassing the 23,000 mark for the first time ever. The Nifty and the Sensex gained for the second straight week to record its biggest 2-week gain in the last 5 months. Midcaps, though, underperformed. Hello and welcome to Editors Roundtable, and on today's episode we take stock of whether the election verdict will give a boost to FII flows. We tell you why brokerages are bullish on Vodafone Idea. We put the spotlight on the India wire and cable companies. And of course, after scaling 23,000, what next for the markets? I'm Reema Tendulkar. With me are Prashant, Nimesh and Nigel. And we also have with us right here in our newsroom, Ravi Dharamshi, CIO of Value Quest Advisors. Hi guys, this is a good Friday, right? When Saturday is a holiday.
You said what after 23,000?
What after, right? What next now that we've scaled 23,000?
50,000 on Bank Nifty.
Okay. That's one. Do you want to go for it? What next?
IPL gets over and World Cup starts.
That's safe.
That's a good one.
But I think it was a good week, right? Yeah. I mean, the market came back. Actually, the recovery, the stabilization happened the prior week. This week, of course, we just kind of continued from where we left off last week. Middle of last week, things started to stabilize. You know, all of the slight jitteriness with regards to, all those voting turnouts, I think all that started to fade away. I think just to run you through the points, we kind of were up about 2% for the Nifty this week, which is not bad at all. I mean, the Bank Nifty was up about 1.6% or so. Mid-cap index ended 1% higher. The small-cap index was actually down a little bit, 0.75%. But records also came, right? I mean, as you said, Nifty at 23,000 and the Nifty Bank all-time high is just under 50,000, and perhaps that's coming soon as well, although that index has lagged. Now, FII is also started, I mean, at least the selling intensity seems to be reducing. It's just a couple of days, but, that seems to be the general sense. There were buyers of some 4,700 crores on Thursday, and that was the highest that we've seen in May so far. Just to put the number in perspective, in 2024 already, FIs have sold some 1.2 lakh crores in cash markets. This is after they were sellers in 22, 23, 22, 21 as well, right? I mean, but that's not stopped the market from making new highs. The other thing is on the F&O side, the long-standing short positions, and it was reaching a bit of an extreme, not all-time highs, but it was reaching a bit of an extreme. That also got covered very quickly on Thursday as we saw the data on Friday morning. They're still short, and typically what has happened in the last couple of times is, when you reach an extreme and there is a very large covering, there is an overshoot on the other side, and all of this is of course happening around the time of the election results, so it makes it that much more interesting. 6 days to go for election results. The other point, of course, is earnings, which we will talk lesser and lesser of because the earnings season is coming to a close. But I looked at F525 EPS, full year Nifty EPS, and that now and how that has changed, not changed that much. It's still kind of projecting a 15% increase on top of where we are in 24. Where the big gainers coming through in PSUs, And we'll ask Ravi whether PSUs is the best way to gain exposure if you are hoping for a post-election pop. The PSU index was up about 6%. Metals were big gainers, 5% of that index. PSU banks, 4%. Autos were up about 3% as well. And, talk about stocks, it's a long list of defense companies which are up between 15 and 35%. The, Kochi, Garden Reach, Mazgaon, BDL, BEL, HAL, you name it. And you also had a few other names. Idea was a notable one, which seems to be exhibiting some signs of life, really, so as to speak. Ravi, let me put that to you. What's the best way to gain exposure if you get what the market wants? I mean, which is continuity in a strong way. You think it's going to be PSUs, it's going to be something else? Right out of the gates, what's going to do the best in the most formidable way?
No, I think to continue with the points that you were mentioning about the FII positioning, I think the best is going to be the index. Like we saw the yesterday, I think indices did very well while the overall market was kind of on the sidelines. That just tells you the way the positioning in the market is. Just like the electorate, even the markets are very polarized. One side FII is selling and one side DII is buying. So the DIIs buying have been all focused on more mid caps and all those kind of stocks, while FIIs have been selling the frontline stocks like financials, banks especially, and IT services. I think that trade is just about to reverse. 2-3 things happening. Actually, the FII selling is more because of the fact that emerging market basket is selling off, and India has a 15% weightage in that. So it's not necessarily a call on India, but it's a call on the emerging markets. And the trade DM versus EM has kind of reached an extreme. Now, if that trade was to reverse, which we are probably seeing for initial signs in China, I think some of that positivity will also rub off on India also. That's counterintuitive. People think India versus China, but it's not India versus China, it's DM versus EM. And India and China are actually in the same basket. To the lesser extent, money flowing into China will eventually mean money will flow into India also. If that is the case, then the indices are the one that will do well. Because FII positioning, not only from F&O perspective, but also from cash market perspective, it's at a, in cash market is at a 11-12-year-old low, and even in F&O it was till 2 days back, 5-year short, highest short position or something like that. So I think pretty much all of us agree that the probability of the government changing is low. And if that was to pan out, I think a lot of money that has been waiting on the sidelines for the certainty to come back, I think that money will come back. So, I mean, it's like that. One month back, I was speaking to some sovereign, and they were like, might as well wait it out 1 month. How does it matter? They want more certainty. What matters to them is policy continuity and political stability. So, it's not that the government change actually might change the trajectory of the market. It might from a shorter term perspective, but from a longer term trajectory, it will still remain. Coming to your question on the PSUs, yes, the focus of the government has been on the capital goods side, more on the capex side, and that has tended to benefit a lot of these PSU sectors like defense. For all practical purpose, defense sector today in India is PSU. So I don't look at it from the prism of it's a PSU, but I look at it like I like defense as a space, and in that, which are the companies that I want to buy. If I like banks as a space, maybe I'll think which are the relatively better banks that I want to bet on. So that's how I think about it, and I think we should be in for a good move from here by the time election gets done.
Results and this RBI's dividend extravaganza has only boosted the government's coffers, which could result in more capex for the capital goods defense companies where the government has been spending.
So that's been a game changer, though I don't think government is going to spend more. I think they have two options. One is government spends more, other is they actually cut down on the deficit, which actually gives space for the private companies to do capex. That brings down the yields and everything. And I think that is the route that is most likely to be taken. You cannot create new infrastructure projects out of thin air. So that is going to be a challenge. It's more going to be on the managing the fiscal deficit front.
So the fiscal glide path. But let's talk about telecom, right? Particularly Vodafone Idea. And that was the stock of the day on Friday. And this is after UBS is betting very big. So the stock closed above 15 rupees. And just to put it in context, the FPO price was about 11 rupees. And now the stock is even higher than the price at which the promoters, the Aditya Birla Group, had infused money, 14 rupees 87 paise. Today, UBS has gone ahead and upgraded the stock to a buy and raised the target price to 18 rupees. And this is the highest target price on the street for Vodafone Idea, and perhaps the only buy call. There have been upgrades in the last 1 month on Vodafone Idea, but those upgrades resulted in the stock moving from a sell, underperform, to a neutral. So Citi, Nomura, Bofa, their target prices are all close to about 15 rupees. Two triggers: one, a tariff hike; two, a government relief. On the tariff hike, UBS believes that perhaps it's already priced in, but where Vodafone Idea can benefit is if a government relief comes through on spectrum or on AGR dues, and that may not have been priced in as of now. And if it comes through, it will benefit Vodafone Idea more than Bharti Airtel. So the risk reward is now more favorable for Vodafone Idea versus a Bharti Airtel. In fact, there are brokerages which have put out a bull case also on Vodafone Idea. Citi is at 25 rupees, Kotak is at 23 rupees. And also one more word: year to date, Vodafone Idea is down 6%, when a Bharti is up 35%, and Industars is up 75%, and the Nifty is up close to about 5-6%. So Vodafone Idea has underperformed. There was skepticism whether they'll raise that money. That money has come through. Now brokerages are betting on Vodafone Idea. You just need some pieces of the puzzle to fall through. One's a tariff hike, and the other one is some sort of a relief coming through from the government.
From the government, yeah. Ravi, you have a view on telecom stocks?
See, from a historical perspective, which used to be a 20-player industry, now we have consolidated to 2.5-player industry, and that half player just got a lease of life. So it's going to be a 3-player. It's from that industry structure point of view, it's stabilized. Now there's not much market share shift happening now. So the only monitorable is where the money is going to be spent, how much money is going to be spent.
Should this be seen as a consumption play? Because that's now, it's become a huge consumption across category of people, right? I mean, today you may skip a lunch or a dinner, but you may not skip watching a TV or watching the data, right? So is that a consumption play now in India?
Keep an eye on your mobile bill. If your mobile bill starts moving from 500, 700 rupees to 1,000, 1,200 rupees, definitely telecom stocks are a buy. Okay. But I think that's the challenge. Not many the companies are not able to do that. And from an inflation perspective also, this will be a big inflationary impact. So not easy, but this is the only monitorable. If ARPU start rising, yes, we have a consumption play that
the thing
can do
here
very
is
well.
that, as we've often discussed, one can't do it. It has to be.
It has to be.
Or everyone can do it together. So there's no. I mean, because there are only 3 players, as you said, 2.5, whatever. Right?
Correct.
So,
I mean, now that some certainty is there that this player is going to survive, probably now more sanity comes in and people focus on making money rather than trying to push competition out.
So the focus shifts from land grab, subscriber grab, to monetization, the return ratios. But let's talk about the other pressing issue, and that is the FI flows. Now, FI flows into India have been much lower than that of the other global markets. So not just being on the sidelines, they've actually been selling, barring the Thursday flow that we had. Nigel, do you think they'll come back into the elections? You've done some analysis.
Well, we just heard Ravi's view as well on it. And, there are a lot of views actually you get with regard to these FI flows. So let's put it in perspective and let's go across to the ball. So, yes, here in India, we're going to be tracking the flows coming into the market and how exactly the markets will shape up. But are the FIs waiting for the bigger trigger? Are they looking at this election result more closely? So let's put some data points on the board. If we look at the FI flows into India, in January, they were sellers, then they turned buyers. And the last 2 months, actually, they turned sellers yet again. And in May, the selling has got a little bit higher. So you'll say, well, they are selling, but maybe it's not an India-specific problem. They're selling emerging markets on the whole, which could be a possibility. But I said, let's just compare the last 2 months. That's April as well as May. If you compare the last 2 months, in terms of the flows, and you compare it with other markets, you compare it with the Korean market, case in point, because they did see inflows in the last 2 months itself, while the other markets have seen some bit of selling, and India actually has seen the highest amount of selling at close to around $4.5 billion odd. And I was just plotting a chart and seeing over the last 10 years or so, if you look at the holding in the Indian markets, it averages around 20% normally. Currently, we're at the lowest we have seen in the last 10 years or so. It's holding at around that 17 to around 18% approximately. So FI ownership in the Indian markets itself has come down drastically. And I'll tell you what, the base has increased as well because the Indian market capitalization has gone up. So that's why, in fact, in percentage terms, that number is looking, at the lower end or a little lower than what the average is at. So the big question is, we always ask, How much is priced in? How much of the good news is priced in? Well, if you're looking for a trigger and someone to push this markets further, the FIs could be the answer. With a positive election verdict and continuity coming into play, the FIs could be showing us the big money. Rhythm Desai, well, he put out a note, and he said that a lot of foreign investors, well, they're waiting for a better multiple to get into the markets. But he says that aside from any negative surprise coming out of the elections, well, he doesn't see any big negative trigger that's coming in there in terms of a derating. So let's wait and watch whether or not the FI flows come back in style. Well, let's go across to Ravi. Ravi, I wanted to ask you actually about the chemical space, because you all have been tracking that closely, and we had a couple of managements this week itself. We had Vinati Organics, we had Galaxy Surfactants as well, and they are indicating that things could be on the upswing. What's your analysis of it?
So see, Nigel, our chemical industry had a fantastic upswing from 2014-15 to 21. That was a macro call on the entire chemical space doing well, because China was actually retreating from the market. Post 21, China has actually come back in a strong way, and they have been kind of dumping, and that has led to the numbers being disastrous for a lot of chemical companies. Yeah. But I think going forward, that excessive dumping from China is going to recede. The freight costs have actually gone up, and that is actually leading to some bump up in the prices of various chemicals, and the spreads are beginning to normalize. So I think you are right. I think things won't get too much worse from here. But going forward, chemicals will not, in my opinion, will not be a macro trade. It will be more a bottom-up stock picking story. That's my contention.
So what is a macro call now? I mean, from a macro trade, which sector stands out for you?
No, so I think
because you picked up defense very well. You picked up in the past. You've picked up even chemicals very well. From here, what is a big macro call?
So right now, it still feels like continuation of the same capital goods oriented stocks, power transmission oriented stocks. But at some point of time, I feel maybe 2 to 4 quarters from now, that wheel will turn. Today, completely consumption-oriented companies are totally out of favor. Yeah. And I think they are going to reach a point where it becomes very, very attractive. And that wheel will turn at some point of time. We are not able to precisely say when and what that happens. But that is one big change that I would anticipate at some point of time in next 12 months.
What kind of companies there, when you say consumption?
Bottom of the pyramid, rural, no, not only staples, even discretionary. For example, quick service restaurant, footwear manufacturers, real estate ancillaries, all those kind of companies should actually start doing well.
And what will signal that turn? I mean, whenever that happens, it'll be management commentary or something else, maybe.
So, from a macro perspective, what I do expect, see, every time the last 2 terms this government has come, they have come with a very specific agenda. If you remember, the first 5 years were all about ensuring the bottom of the pyramid, the social security net, and getting all the infrastructure and everything in place, the connectivity, everything. Next 5 years were all about cutting the corporate tax rate, putting in money into the infrastructure and reviving the investment cycle. I feel the next 5 years, the focus on the consumption, which has been totally missing till now, should come back. With the kind of money that RBI is giving them and the kind of collection GST is bringing, I think a lot of elbow room is being created for the GST rates to be cut. Now, I don't want to say it's going to happen. At some point of time, it has to happen. And I think even FM has made statements regarding that. We don't know the timing, but it has to happen, and that I think will give boost to the consumption-oriented sector. Finally, we should start getting more money in our hands. See, we have all felt wealth effect, but what is missing is the income effect, especially in the unorganized sectors. So that income effect has to come back, and that will be the revival of consumption.
Maybe personal income tax cut also, right? Who knows? Possible, right?
I know, a lot of things. I mean, right now talking about capital gains tax gives us jitters because normalization will essentially probably mean that 1 year becomes 2 years in terms of long term. But I think there is a lot of scope for rationalization on the dividend tax, on the income tax at the higher end at least. Let's see. We are all hoping.
Valid points, Ravi, but we need to slip into a very short break. On the other side, we decode the week on Dalal Street, and we'll also put the spotlight on the India wire and cable companies. Stay tuned.
Add to the cash surplus that the government is sitting on. This could very well go, above 5 trillion INR, and therefore some sort of a reduction in the borrowing, could happen. Again, the details of this are likely to get announced in the budget. And as Somiran was saying, it's really positive from a demand-supply environment. So our own forecast is that the 7-year as well as the 10-year bond yields could drop to 6.75%.
We were putting out in our notes saying that there is a possibility that the RBI dividend will be significantly higher than what the government has budgeted for. And so that way, it's not that big a surprise for us. Yes, it means that the government has three options in some sense. One is that it can reduce the fiscal deficit, 0.
Welcome back. You're still with us here on Editors Roundtable. Now, we've been talking about all kinds of sectors. One specific sector, very India-focused, local-focused sector, is the wire and cable sector. Right? You think how large can companies be? But guess what? Companies like Havells and Polycab, as Nimesh is going to tell us, have not just done the best within their sector here in India, but are now some of the largest companies by market capitalization, market values in the world. Nimesh, that is eye-opening.
So, guess what? Havells is the second highest market cap company in the world. Polycab is the third largest market cap company in the world. So Indian companies have now actually taken pole positions as far as this particular space, the cable and wire space, is concerned. Again, we've seen a big rally in both these companies. And I was just looking at the top 7 companies globally in the cable and wire space. The first name is there is a company called Prism Group that owns a market cap of $18 billion. It's a combination of they themselves having $15 billion and they've acquired a company which is worth $3 billion. So that's the first company which is having a market cap of $18 billion. Havells, as I said, is commanding a market cap now of $14 billion. Polycab at $12 billion. There is a company called Nexans which has a market cap of $5 billion. And there is a US-based company which is having a market cap of $4 billion. There is one private company called Southwire that commands a market cap of close to $9 billion, but it's a private company. Now, as I said, they've done really well in terms of stock price. But even if you look at the earnings for the last 5 years for these cable and wire companies, everyone has grown at least in double digits as far as the revenue CAGR is concerned. I'm talking about 18% revenue CAGR for a company like Polycab. Havells has grown at a 14% revenue CAGR over the last 5 years. But what is more interesting is the PAT growth. The PAT CAGR for someone like in Havells is 10%, but for Polycab, the PAT CAGR has been 29%. So every company in that space has done really well, both in terms of revenue as well as PAT as well. So it's been a dream run for all the companies, but it was an eye-opener for me as well that the 2 Indian companies now are among the top 3 in terms of world's largest market cap companies. So that's the data for you in terms of cable and wire companies. Ravi, I guess you've invested into one of the cable companies recently. What's your take on this space? Is there room for growth further?
See, we tend to think it is actually only a domestic sector, but that's not the case. Export opportunities opening up. There are 2-3 parts to this. One is infrastructure demand, which is basically all the capex happening, and there's a lot of wire and cable required for that. Second is the real estate demand. That is the more domestic oriented sector. But the third is the power related. For the cables, it's the power related demand, and that power related demand has export angle to it as well. So there has been, if you have been following Elon Musk, you would have seen that there is a shortage of power transformers that's coming through, and that is essentially the kind of focus that the power transmission space is getting, because we need to do this power transmission capex for our energy transition to succeed. If we don't have power transmission in place, then we will not succeed. And wire cable is actually a play on that as well. And even US, China, India, Europe, all the geographies need to spend money on transmission. And cables might look like a very commoditized product, but you need certifications, and those certifications are not so easy to get. They take 2 years, 3 years. So companies that have been ahead of the curve, invested in capacities and have these certifications are gaining a lot of market share. There has been a structural change in the kind of EBITDA per ton that they have been making, and that is because the export is far higher realization. Now they have decided not to buy anything. I mean, the US markets have decided not to buy anything from China. So that is leading to a lot of demand coming from for Indian players, and they are getting better realization and margin. This is a window of opportunity. We don't know how long it lasts. So that's the thing. And one more just to add to it, copper prices have gone up.
Yeah,
and
that's
copper prices actually act as a tailwind because the absolute EBITDA per ton that these companies make goes up. So that's one more trigger that has panned out very recently.
Sure.
All right, final question, Ravi, not market related, since we started by IPL and the World Cup. What are India's chances in the World Cup, and what about who's your favorite for the IPL finals? Who's going to lift the cup?
No, I'm not going for the match. But I think IPL, I think we should. I really hope SRH comes through, but who knows? I think they have a really new brand of playing, and I think they deserve to win. But let's see.
And India's got enough to lift the cup?
It's always been the case because we see IPL so closely. We always feel we are such a talent pool, but honestly, we don't have a sense of how the competition is playing. Even a country like West Indies, we have been ignoring since long, but they are very strong on the T20 side. And we don't have no idea how the pitches are going to play in US.
Okay.
So let's see how it pans out.
Nimesh, you want to go for a guess? IPL, who's going to lift the cup?
I don't think. I mean, I've not been following this year too much of it.
Any of you guys?
KKR.
I think KKR.
KKR. Safe.
My son said KKR. KKR. All right, let's wrap.
All right, thank you. Ravi, this has been a great conversation.
Thanks
Look forward to seeing you more often in the newsroom. With that, guys, it's a wrap on this edition of Editors Roundtable. Enjoy your weekend.
GDP, as you mentioned, what the initial thought process was that the government will do only somewhat marginal tweak to the interim budget numbers because the interim budget itself was quite detailed. Now, with this more than 1 lakh crore extra kitty, the budget maths will have to be reworked and it will become very interesting and the market will keep on speculating till it's actually announced.
The pressure is building on Israel. In a historic move, not one but 3 European countries, Norway, Ireland and Spain, have announced that they will recognize an independent Palestinian state. The announcements were made in quick succession and in a coordinated manner in the hope that this will help bring peace with Israel. The formal recognition in all these 3 countries will be made on May 28th. However, an angry Israel immediately called back its ambassadors from Norway and Ireland, warning that such a move will fuel extremism, terrorism and instability. With the rising civilian death toll in Gaza and the International Criminal Court evaluating the application for arrest warrants against Prime Minister Benjamin Netanyahu and Hamas leaders, all eyes are on Israel's next move. Let's try to understand why these countries have done this. Norway's Prime Minister said, and I quote, "There cannot be peace in the Middle East if there is no recognition." Spain's Prime Minister also reiterated that it's essential that the two sides, Israel and Palestine, negotiate for peace, and it's for this reason that we recognize Palestine. While the Irish Prime Minister said that Palestinians in Gaza are enduring the most appalling suffering, hardship and starvation, and permanent peace can only be secured upon the basis of the free will of a free people. So what exactly is the significance of recognizing Palestine as an independent state, and what is the two-state solution? Simply put, the Israel-Palestine conflict is one of the oldest and persisting conflicts in the whole world over who gets what land and how it's controlled. And a two-state solution hopes to resolve it. It's fundamentally about how or whether to split the country's territory between the Jewish and Arab population, Israel for the Jewish people and Palestine for the Palestinian people. Some 143 out of 193 member states of the United Nations recognize a Palestinian state, including India, that supports the two-state solution. In 1988, India became one of the first countries to recognize the Palestinian state. However, countries like the United States and the United Kingdom don't.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on... Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening: it's a day of volatility on Dalal Street as mixed global cues and fourth quarter earnings reports dominate sentiment. The Sensex and the Nifty end the day flat, both indices failing to hold on to their record highs hit in intraday trade. The Supreme Court refuses to direct the Election Commission to disclose final voter data within 48 hours as a hands-off approach is needed in the midst of elections. Also questions why the petition was being pressed when elections are underway and only 2 more phases are left. In earnings, Hindalco's net profit triples in the fourth quarter, aided by robust sales and low input costs. Ashok Leyland delivers a robust 20% jump in net profit. A strong demand for its medium and light commercial vehicles offset a one-time loss of 70 crores. 58 seats across 8 states and union territories go to the polls tomorrow. This includes the high-profile constituencies of Delhi. 889 candidates in the fray. Polling will also take place for 42 Odisha Assembly seats. High inflation and elevated interest rates hurt credit uptake in rural India. CNBC-TV18 analysis shows loan growths have declined in the second half of FY24. Microfinance institutions and small finance banks also report a rise in bad loans.
Neither Tesla nor I asked for these tariffs. In fact, I was surprised when they were announced.
Tesla CEO Elon Musk says he does not see the need for the Biden administration's 100% tariffs on Chinese electric vehicles. Also disagrees with the need for tax incentives for EVs, says Tesla competes quite well in the market in China with no tariffs or differential support. The world may not get a digital dollar soon. The Republican-dominated U.S. House passes a bill prohibiting the Federal Reserve from creating a digital currency without Congress approval. The bill now heads to the U.S. Senate, where the Democrats are in majority. Leela Hotels is likely to hit the IPO market in 2024, says Brookfield Asset Management's Ankur Gupta. Also adds Brookfield aspires to make Leela a global brand, bets big on the luxury segment. That's a CNBC TV18 exclusive. NP Singh to step down as the MD and CEO of Sony Pictures in India, says he will focus on social change and advisory roles. Adds he will continue to lead the company till his successor is identified and takes charge. A series of RTI replies reveals a grim picture when it comes to IIT placements. Over 7,500 students across 23 IIT campuses yet to find a job this year as both domestic and global giants hold back on offers. IT Madras Placement Cell Advisor says nearly 20% of the students who applied for placements are yet to be placed. The death toll in the chemical factory explosion at Mumbai's Dombivli climbs to 10. Rescue operations underway as it is feared that more dead bodies remain trapped under the debris. The police has booked the owner and senior officials of Amudad Chemicals under charges including culpable homicide not amounting to murder. China tests its ability to seize power of Taiwan by encircling the island chain. Warships and fighter aircraft stage mock missile strikes as China's military drill enters the second day. China's defense minister says Taiwan's leadership is pushing the country into a perilous situation of war and danger, warns China will go further if provoked. But before we get to all of these stories, let's take a closer check of the day's market action. It turned out to be another choppy day on the Dalal Street as mixed global cues and Q4 earnings dominated sentiment. Indices rose to fresh record high levels during the day, but then failed to hold on to those gains, eventually ending the day flat. That's the Sensex absolutely flat, 7 points lower. The Nifty also closing flat, but in the red. The Nifty Bank, though, 200 points higher, and the Nifty Mid Cap closing flat, but with a green tick. However, for the week, the markets have managed a healthy 2% upswing, and this takes the total gains over the last 2 weeks to 4%, making this the largest 2-week gain in the last 5 months. So good story there as far as the week is concerned. Prashant is standing by now to take us through the market action. Prashant, a week done, gains coming in for the week, volatile, and of course we're heading into a big week up ahead.
It was an interesting week, and I say that because the market did come up quite nicely after dithering moving sideways and being largely lower. I mean, actually, the move started towards the middle of the previous week, and it kind of continued this week as well. So with a holiday in between, of course, you had, from last Friday to this Friday, the Nifty up 2%, the mid-cap, the Bank Nifty up about 1.6%. The mid-cap index was up a full 1%. The small-cap index, though, was down about 0.75%. So not very large changes, but a welcome relief. And of course, in the midst of all of this, we made a new all-time high. The Nifty hit 23,000 and so on and so forth. The Nifty Bank, of course, is still lagging. And, its date with that 50,000 mark, which is pretty close to its previous all-time high, still is pending. What else happened if you were to qualitatively look at this? So FII selling intensity reduced. And this especially towards the end of the week. On Thursday, there were buyers of some 4,600 crores. It's the largest number we've seen in the month of May. In 2024, just to give you context, FIs have sold now about 1.2 lakh crores in cash markets. They also cut their short positions in F&O, index futures, by half, and that's pretty large. All eyes, of course, on election results, 6 trading sessions away. Earnings season is in the fag end now, and by all account, looking at the full year number for FY25 and how that has changed, markets are on track for about a 15% earnings growth estimate. What were the big gainers? It was the PSU space. The index was up 6%. Metals at number 2 position with a 5% pop. You have the PSU a bank space, which was up 3.7. Autos as a space was up about 3% as well. Top gainers stock-wise, long list of defense names. Cochin Shipyard, Garden Reach, they're up on your screen. BDL, BEL, Mazgaon, HAL. I mean, anything between 15 and 25 to 30%. Hindustan Zinc, Sirma and Idea were some of the other large movers that you have. All in all, a pretty good week to end as we sort of wrap up this Friday. Back to you.
Yes, pretty good week. But as Prashant was pointing out, we're heading into a big week with counting day coming right up. But news just coming in. Adani Ports will be included in the Sensex from the 24th of June. Now, it will replace Wipro on the index. This was expected. This was a story that CNBC-TV18 had been tracking yesterday. It is now official. The Republican-controlled U.S. House of Representatives has passed a bill to ban the Federal Reserve from creating a central bank digital currency that was called the digital dollar. The decision was proposed by the House Majority Whip Tom Emmer as a CBDC Anti-Surveillance State Act. It is a crucial amendment to the Federal Reserve Act, which governs America's central banking system. The amendment states, and I quote, "The Board of Governors of the Federal Reserve System and the Federal Open Market Committee may not use any central bank digital currency to implement monetary policy," end of quote. However, the bill has a long way to go before becoming law, as it needs to pass a vote in the Senate and also needs the President's assent. Tesla's CEO Elon Musk has said he does not support US President Joe Biden's recent announcement hiking tariffs on electric vehicles that are imported from China. Now, remember, the Biden administration has just hiked tariffs on China-made electric vehicles from 25% to 100%. Speaking at a conference in Paris, Musk said that Tesla competes quite well on its own without having to rely on tariffs or any other kind of differential support. He also said he does not support incentives for electric vehicles. Take a look.
Neither Tesla nor I asked for these tariffs. In fact, I was surprised when they were announced. Tesla competes quite well in the market in China with no tariffs and no differential support. In general, I'm in favor of no tariffs. I'm also actually in favor of no tax incentives for EVs, but provided that there are also the tax incentives for oil and gas must also be eliminated. So I'm in favor of no tariffs and no incentives for electric vehicles or for oil and gas. And if they're all taken away, I think that would be for the best.
A level playing field, that's Elon Musk on EVs. Sales of Tesla's Cybertruck in the US, by the way, seem to bear out Elon Musk's stance, even though the general EV market is slowing down. Data from the research firm Finbold indicates that in the first quarter of 2024, Tesla sold 2,800 Cybertruck units. That works out to an average of about 31 units per day in 2024. However, it should be noted that despite these numbers, Tesla is still far behind rival Ford in the electric pickup category in the US. Ford sold over 7,300 units in the first quarter. NP Singh will step down as the Managing Director and CEO of Sony Pictures India. In an internal mail to employees, Singh said that he will lead the organization until his successor is found, following which he will transition to an advisory role. Singh had joined the company in June of 1999 as its Chief Financial Officer. Has been a long innings. The Hinduja Group has approached the National Company Law Tribunal seeking a 90-day extension to complete the resolution process of bankrupt Reliance Capital. It wants this window to begin from the 27th of May. The group has told the court it needs this time to secure a few regulatory approvals that are still needed. The NCLT will take up the case again on the 6th of June. Meanwhile, it has directed the Committee of Creditors to not take any coercive action against the Hindujas until the matter is disposed of. Leela Hotels, the luxury chain, is likely to go public this year. That's the word coming in from Brookfield Asset Management's managing partner, Ankur Gupta. In an exclusive conversation with CNBC-TV18, Gupta said that the company wants to make Leela Hotels a global brand, adding that Brookfield is very bullish on the housing space in India and is investing significant capital in the country. Take a look. How soon can we expect partners in the public market as far as the Leela story is concerned?
Look, if I'm allowed to talk about it, I would say the business is at that point where the growth that we are seeing will ensure that some amount of activity will happen sooner than later.
25?
2024 we are in, right?
Yeah. So until 2024 or 25?
No, I would always say that it's better to do things today than to wait for tomorrow.
Okay, so 24 then. Okay, that gives us clarity.
I think it's time that India creates its own luxury brand that's recognized world over. So that's something that we've been trying to do.
So that's the aspiration.
The aspiration is always been there.
And taking it global.
Yes, I would say that we've taken early steps towards it. And in a more methodical manner. Look, Brookfield is a global investor.
Yeah.
We invest in 30 countries. Our LPs come from all across the world. So today the recognition of Leela with the investor community is very high. The US commercial real estate space is $20 trillion. India is less than $500 billion right now. So there's a lot of real estate to be built and to be institutionalized. And we believe that as the largest real estate firm in the world, we have a big role to play in that space. The Bharti Group has endorsed taking units at 300 rupees a share, which is slightly below the net asset value. So on an accretion basis, it's still positive for unit holders, but it's significantly at a premium to the current spot trading price. So it shows the path for other investors that there's significant upside in our stock price of the REIT right now.
Well, that's Brookfield bullish on Indian real estate. In earnings, Hindalco posting a strong Q4 performance aided by robust sales and low input costs. Hindalco's margins from its India business beating estimates. Meanwhile, higher shipments have boosted the metal major's aluminum business. The company's copper business beat street expectations on account of higher volumes. Mamaearth, the parent of Honasa Consumer, reported strong earnings in the fourth quarter. The company clocked its highest quarterly net profit of over 30 crore rupees as compared to a loss of 16 crores in the same quarter last year. The profit boost comes on the back of improved market share in the face wash and shampoo segment. Meanwhile, its EBITDA margins also improved by 780 basis points on a yearly basis. Ashok Leyland's fourth quarter performance in line with analyst expectations. This as the products in its medium and light commercial vehicle segments have witnessed strong demand growth. Net profit grew 20% when compared to last year despite a one-time loss of 70 crore rupees. However, revenues fell 3.1% on a year-on-year basis. The Supreme Court has refused to pass an interim order asking the Election Commission to disclose booth-wise voter turnout data. A plea was filed by the Association for Democratic Reforms, which asked for the Election Commission to publish the station-wise voting data on its website within 48 hours of concluding the poll for each phase. The Supreme Court, while saying that they would like to have a hands-off approach while elections are ongoing, also questioned the timing of the petition. Ashmit joins us now with the latest. Ashmit, take us through what the court has said in this matter.
Well, the big takeaway clearly is that the Apex Court not granting that interim relief that had been sought, not directing the Election Commission to start disclosing voter turnout data as per individual polling stations, saying that it will have a hands-off approach given that the elections are currently underway. Now, the Election Commission opened the arguments today, and even before going into the merits of the case, they questioned the maintainability of such a petition, saying that the petitioners in question, that's Association for Democratic Reforms and Mahua Moitra, have a history of filing applications that seek to cause chaos and confusion confusion with respect to the electoral process, that the Supreme Court needs to send out a strong message by dismissing these applications outright. Now, adding to these submissions, the Apex Court made some very pointed observations aimed at the petitioners. Firstly, asking as to why this application filed in 2019 is being pressed now in 2024. Also raising the technical question that the interim relief that has been sought is the same as the final relief that has been sought, and that is not permissible even in public interest litigation. Also going on to say that the Election Commission, of its own violation, voluntarily does release voter turnout data on its own application. It may not be entirely accurate, but does give a broad trend as to the way things are headed, and that this should in fact be welcomed by the petitioners. And finally going on to say that some amount of trust does need to be reposed in the authorities, and that the Apex Court will have a hands-off approach, given that of the 7 phases, 5 phases are already over, just 2 phases are left. So with that, the Apex Court refusing that interim relief and saying that this application will get taken up in due course, and that's after the summer vacations of the Apex Court.
All right, Ashmit, many thanks. Now, 58 seats across 8 states and union territories go to the polls tomorrow in the 6th phase of the Lok Sabha elections. These include all 7 constituencies in Delhi and all of the 10 seats in Haryana. Post this phase, 57 seats will vote in the final phase, which is June 1st. Parikshit standing by now. Parikshit, so who votes? What's the significance of this penultimate phase?
Well, over 11 lakh voters will be casting their votes in phase 6, Shireen. And yes, as you said, 58 seats are in the fray. The BJP won 40 last time around with a 47% vote share. So they gained a lion's share of the seats. The highest numbers actually coming from states like Haryana. Remember, they won all 10 seats in Haryana last time around. This was on the back of the Pulwama attack. There was considerable support for the Prime Minister and the BJP. This time around, the BJP is facing certain cracks in its alliance. They don't have an alliance with the JGP. It broke just a few weeks back. So there are questions whether the BJP can repeat that performance. Remember, in Haryana last time, the average winning margin was 350,000 votes. Some of the key fights that we're looking at is ML Khattar, who is standing from Karnal. He has been replaced as the Chief Minister of Haryana with Naib Singh Saini, and Manohar Lal Khattar has come to fight in Karnal. In Kurukshetra, you've got Naveen Jindal, the industrialist who has left the Congress and fighting on a BJP ticket this time around. So let's see how the protests against farm laws, the Agniveer scheme, actually impact the voting pattern. Here in Jammu and Kashmir, you've got Anantnag, Rajouri, which is going to polls, an important constituency which will decide the fate of 20 candidates, including Mehbooba Mufti, the president of the PDP. Let me come across to Uttar Pradesh right now. Now, constituency number 39, the green one that you see here, is Azamgarh. This used to be a bastion of the Samajwadi Party of Akhilesh Yadav, but it was won by the BJP. Dinesh Yadav of the BJP, and he's up against Samajwadi Party's Dharmendra Yadav this time around. So let's see how the fight, the Yadav versus Yadav fight in constituency number 39 of the Samajwadi Party of Azamgarh really plays out. There were 3 seats which were won by the Bahujan Samaj Party, actually 4. So let's see how they perform. You also have Sultanpur, where Maneka Gandhi is contesting from, 8 seats in West Bengal, also 4 seats in Jharkhand and Odisha. Let's not forget that all 42 assembly constituencies are going to polls in Odisha, along with 6 Lok Sabha constituencies. The fate of Sambit Patra is also at stake here in Puri. Let's see how the party performs in Odisha, where there's going to be a tough fight between the Biju Janata Dal, the Congress, and the BJP.
All right, Parikshit, many thanks for joining us. So stay tuned to all the action. Right here, it's going to be a super Saturday as we bring you all the election action. High inflation and elevated interest rates have hurt credit offtake in rural India. CNBC-TV18 analysis shows that loan growth rates have declined in the second half of FY24. Microfinance institutions and small finance banks have also reported a rise in bad loans. Abhishek is standing by with more. Abhishek, what is the data telling us?
High inflation isn't a friend for the rural economy, and this is leading to pain in the rural sector, which has become visible over the past 2 quarters in the asset quality of lenders who are actually focused in the microfinance segment. And it's also showing up in the loan growth rate, which has declined in H2 FY24 versus the growth that they had in H2 FY23. Gross NPA of the lenders increased by more than 32% in H2 FY24 versus H1 FY24. This compares to a decline of of 32.5% in H2 FY23 when compared to H1 FY23. This is surprising as H2 is usually a better half for the microfinance lenders. For 70% of the lenders, the gross NPA has increased anywhere between 22% to 124% in H2 FY24. ISAF SFB, their gross NPA increased by 124% in second half of FY24. Credit Access Grameen, a top-notch microfinance player, saw its gross NPA rise by more than 83% in second half of FY24. The rise in H2 FY24 NPAs compares to a decline in gross NPA for most of the lenders in H2 FY23, like Suryodaya Small Finance Bank and ISAF Small Finance Bank. They saw their gross NPA decline by more than 60% in H2 FY23 versus the number of H1 FY23. Credit Access Grameen too saw a sharp dip in its gross NPA by 34% in second half of FY23. Rise in NPAs has impacted the credit cost of the lenders and provisions have increased sharply for majority of them. Provisions increased by 8.5% in H2 FY24 when compared to the number of H1 FY24. Largely in Q4 FY24, majority of the provisions have come in. Ujjivan Small Finance Bank provisions have increased by more than 94% in H2 FY24. ISAF Small Finance Bank, their provisions have increased more than 59% in second half of FY24. In H2 FY23, provisions for lenders has actually declined by more than 38% when compared to the number of H1 FY23. Satin Credit Care, Spandana Spurti had seen their provisions decline by more than 60% in second half of FY23. AUM growth rate has slowed down as well in H2 FY24 versus the growth rate that they had in H2 FY23. So H2 FY24 AUM growth of the lenders has been about 16.3% when compared to H1 number, and they had a growth rate of 22.8% in H2 FY23 versus the H1 of FY23. So growth rate has been impacted the most for Spandana Spurti, ISAF SFB and Equitas Small Finance Bank. The key takeaways are that high inflation and elevated interest rate may continue to impact the repayment in the microfinance loans. Some lenders are also showing high disbursements but lower loan growth, suggesting repayment issues. Hence, loan growth rate has started to slow down for majority of the lenders in the microfinance segment. Given this, pain in the asset quality can continue in the near future for small ticket loans.
Abhishek, many thanks for joining us. So microfinance lenders feeling some pain on account of the rural slowdown. Time for us to head into a break, but up next, a series of RTI replies reveals a rather grim picture when it comes to IIT placements. Around 8,000 students across 23 IIT campuses yet to find a job this year. That and more when we return. To get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
is high there, but their focus is squarely on the 125cc segment. Well, let's talk about the jobs crisis across India's 23 IITs. Nearly 8,000 IITians are yet to find jobs in the IIT 2023-2024 placement drive. That is 38% of those students who registered to appear for campus placements. Archana is standing by with more. Archana, take us through what the jobs picture looks like across IIT campuses. And of course, this data comes in via the Right to Information Act. RTI is being filed. Take us through what the data is telling us.
Thank you, Shireen. In India, it's often said, "Ek baar IIT chale jao, life set hai." However, a series of RTIs filed by an ex-IITian reveal a grim picture. The big headline is that 7,957 students across 23 IITs have yet to be placed in the 2023-24 session. Our team at CNBC-TV18 tried to dig deeper to understand why India's premier educational institutions are grappling with the job crisis. Now, IIT Madras has acknowledged that job offers have indeed dried up, especially from startups. For example, 85 startups made 183 offers in this year's placement, which is down by about 50% as compared to last year. If we talk about the overall India picture, as revealed by these RTIs, which have been filed by an ex-IITian, the drop in job placements is almost twice the number of students who were not placed in 2023 and more than double the number of 2022. The big question, why aren't these IITians getting jobs? Now, experts believe that there are not enough new jobs in the market. IT companies like Wipro and Infosys have already frozen their new campus hiring. They used to hire about 20% of the students per year. Even global companies are limiting their job offers due to AI and machine learning. Moreover, there's an overall drop in job offers in streams like mechanical, chemical, metallurgical, and civil engineering. Now, how much money are these IITians making this year? The median CTCs offered to these students this year is about 17 lakhs per annum. Now, critics say, and this is the most important part, that most of these IITs are masking the problem by hard selling the few crore rupee packages, but ignoring the main problem at hand. And aside of the drop in these placements, the spotlight is back on the poor mental health of students at IITs. Many students succumb to the stress and pressure of placements. There's anxiety and depression that's widely prevalent in these IITs. The rising case of suicides among IITians is also one of the reasons why these RTIs were filed in the first place. Earlier this month, an RTI revealed that 115 students have died in the last 20 years due to anxiety and depression. The situation is really bad, and it's so bad that some students are now being forced to take up job offers below 6 lakh rupees per annum, as companies are revoking job offers at the last minute. Now, how are the IITs coping with the placement crisis? Well, they are reaching out to companies and their alumni networks to get the remaining students placed. It's important to note that the absolute number may slightly vary as the placement season at IIT Bombay, IIT Delhi, IIT Kharagpur and IIT Madras usually begins in December, while other IITs start earlier in August, September. It's still underway in some places. My colleague Jude Sanat spoke to Professor Satyan Subhya, who's a placement advisor at IIT Madras, and he acknowledged that about 20% students are yet to be placed and the job offers from startups have also come down. Take a look.
As of now, we have placed about 80% of students, and we are on track to get 90% of BTech. So that remaining 10% or 20% students, yes, they are left to be unplaced. They still yet to be placed, sorry. And because of the increased number of admissions that we have had, that percentage translates to a significant number of students. The companies who typically come the previous years, they make more number of offers at the high package level. They have just made less number of offers. They have not reduced the salary per se. That's part of the reason why our average and median salaries have stayed the same. So they have made the same salary offers, but they have made less number of it. Compared to last year, if you look at the numbers from last year and this year, we've had a less number of startups who have come, and they have made less number of offers as well. So it looks like the startup has been affected. So they are sort of being, I would say, a little bit more cautious in terms of hiring.
Well, large companies as well as startups are holding back on significant hiring. That is what is hurting job offers at this point in time, including on IIT campuses. With that, it is time for us to wrap up this edition of Business 360. More news will continue right here on CNBC TV18. Stay tuned. We're back in a minute with more.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
I think my first investment was in 2000 in February. There's a pan wala. When I was having pan, he told me to buy the shares of digital equipment.
No way.
I stood in line because you had to stand in line to get papers, and I invested 10,000 rupees, which is all I had in savings at that time. And it went to 2,000 rupees in 6 months. Your expenses in 15 years are going to be roughly double. 12 to 15 years will be double. So in 30 years, you will be spending 4x. You're spending 1 lakh a month today, you're spending 4 lakhs a month there. Now my idea is that the money should suffice you to last all the way till you're 90. And if you're 60 right now, that's at least 4x in expenses. But if you're 40 right now, it's 8x expenses. I have realized that I'm incapable of understanding how markets will respond to elections. So
anything can happen.
Anything can happen. My fears are not that the government will change. My fears are more like whoever comes into power, whether it's this government or another one, is going to change the policy and make it like subsidy oriented. I would say I'd rather wait to see what this government will do. If it shows the wrong intent of doing, I will lose my first 20%. I know that. But I'm willing to lose 20% because if they do things right, I will get the next 100%.
Hello and welcome to I Did It My Way. Today, my guest on the show is an author. He's an entrepreneur. He is an investor. He runs a PMS and he wears too many hats. And he also has a best-selling book called Money Wise. He's a personal finance guru as well. Joining me on the show today is Deepak Shenoy. Deepak, thank you so much for being here.
Thank you so much, Sonia. It's an honor to be here, and thanks for all the kind words.
And what is the hat that you love wearing the most?
Honestly, I keep thinking that the hats that I used to wear, that I used to love, I've been a different set of things over the years. I think there was a time I used to be a programmer, and I used to love programming. I could program all night, and I miss that world. Sometimes I feel like I want to wear that hat again, and time and again the team reminds me that the world has moved on from whatever I knew, and therefore you're going to start from scratch, and I don't have that energy, or I will find that energy someday. I love writing. I still love writing, and it's something I discovered I love much after I had finished college and gone through. So I love the art of just sitting down and writing. Perhaps that comes out in a little way because I'm very noisy on Twitter, and therefore, it's like my thoughts go unfiltered into the ether.
But
But
that's
then
worked really well for you.
it has. It's surprisingly, it surprisingly has. It's like almost like I thank the stars every day that the audience still wants to listen.
You know what I love the most on your Twitter handle is when you do live tweeting of big events like the budget. It helps everyone. I'm sure it helps a lot of people, but even people like us who comment on the budget, right, live. I mean, these kind of threads really work. But you've seen that evolution of the ecosystem, right, from TV to blogs. You had your own blog as well, Capital Mind, which is now turned into a money management business. Tell us about that.
Yes, it's been an interesting journey. So we now a PMS, a SEBI registered PMS. We've applied to become a mutual fund, and that's application in progress. We manage about 1,900 crores. And very interesting because we're in Bangalore. We live in a place where, relatively speaking, people are less aware of markets. Of course, that was when I started. Now I think everybody's aware about markets. But then the other part is it started out in a very different way. Capital Mind was a hobby. I was a programmer. I was running a business in the software services space in Bangalore. And somewhere along the way, I learned the concept of accounting. It fascinated me. I think somehow, my father and all his brothers are bankers. I became an engineer. I was the black sheep in a way of that family. But then the whole thing came back to me, right? The finance and the accounting thing. And then it came back in the most weirdest way possible. No formal education, but then I learned almost, on my own. And somewhere along the way, I want to marry the concept of tech to finance and said we'll do algorithmic trading. In 2007, we set up a company called Money Yoga. Now that both are in fashion, but at that time we got the domain name.
The two things I love the most, money and health.
Yes. That's, and I should do a lot more of the latter than the former, but unfortunately, here's where we are. But here, the concept was to kind of build an algorithmic trading platform, or at least trading strategies that will allow people to, and we didn't actually want to manage money at the time. We just wanted to build the software.
There's one thing that I really want to talk about. It is this book that you have written, right, Money Wise, and it is a great book on personal finance. But I want to start by asking you, what is your own relationship with money? How has it changed over the years?
Honestly, Sonia, I'm the worst person to even perhaps write that book in terms of my own personal life. What did I do? I never took a steady job. 2 years into my career, I started a business with nothing. I mean, I had 30,000 rupees and that's what I put into the business, and 4 of us put that and started a company. We built a decent, business, but I never saved any money. So I was bankrupt at the age of, just about when I was getting married. I'm so happy my wife married me at that time, and I mean,
What did she see in you? No, I'm kidding.
No, but so it was interesting because I mean the business that I run was okay, but I was going to get out of it, and I was moving on to a job. We were trying to buy a fridge. I bought a lot of stuff. We set up our house, and then I didn't have enough money to pay for the fridge. The check came back, and the banker called me and said, "Deepak, this check, you don't have enough money in your account." So then I had to take money from my wife and then pay for this thing. So it was not rock bottom. I mean, I think I've seen other people hit rock bottom, and I don't think I was that bad. But I know that it was the time when I realized you cannot have this level of lack of money. So I thought,
were you investing at that time also?
I think 2002 is when I started investing per se myself, because that's when I realized there is some value to this. I have some hilarious stories of my first investments. I think my first investment was in 2000 in February, when I was convinced, and I hate to say this, but this is me. There's a pan wala, and I was having pan. He told me to buy the shares of digital equipment.
No way.
And my mother already owned digital equipment.
That's the story for the books.
This is, interestingly, never before that had he ever talked to me about investments. And never after that has he talked to me about investments. This was February 2000, and I heard him, and I went back and I said, we should buy some digital equipment. I convinced my mother to buy digital equipment, and I went and applied for a fund called the ICICI Prudential Technology Mutual Fund. I stood in line because you had to stand in line to get papers, and I invested 10,000 rupees, which is all I had in savings at that time. And it went to 2,000 rupees in 6 months.
Your 10,000 rupees.
My 10,000, 2,000 rupees in 6 months. So, because this was a dot-com bust and you happened right in front of you, and we could see this happen, and you're like, okay, what possessed me to, I mean, it was not a large sum of money, but even then
But
losing.
shouldn't it work the other way around? Your panwala should be asking you what to buy, right? Rather than
I mean, yes.
taking
In
his
fact,
advice.
this is now my sign of this, the bubble that we keep talking about, is that when people who normally would have to ask you for advice start telling you what to buy, that's when you're going to walk away and say this is a bubble. And honestly, that's not happened so far, which is why I'm confident we're not in a serious amount of bubble right now. In 2007, the markets first went up 50% and then went up another 45% in like less than a year and a half. I think it was just crazy. In 2007 I was new to the markets, right? So when I told met my family members who were in stocks for the longest time, they've seen the Harshad Mehta time frames and all that stuff. They're like, if Deepak's into stocks, we need to get out. So I'm like,
I can't believe that.
Yes, I mean, this was unfortunately because I was this guy who was like, I am buying when the stock hits an all-time high, and I'm going to keep buying on the way up, because I loved the concept. I mean, when I was programming, I was looking at everything, and the thing that seemed to be most working was when the stock hits a new all-time high, you buy it.
So from someone in 2007 who had no clue how this market works, to here you are sitting today who's written a best-selling book on personal finance, how did that happen?
Over a period of time, you realize that teaching, or the attempt to teach people, is the best way you learn. So when I'm trying to, say, okay, this is what happened, and I'm trying to write a blog about it in a way that says, I want to educate you about X, by the time I've written it, I know more about it than I did when I started off writing about it. I mean, did you know, for instance, that there are 3 layers of plastic in every Lay's, chips packet, and the 3 layers, the one layer in which, and the enemy is oxygen. So if you have oxygen inside, it ruins the chip, it makes it soggy. So you want to take out oxygen, so you want a preventive layer, and one is made of BOPET and another one is made of BOPP. And why do I know this? Because the prices of these companies making BOPET in India were going up like crazy. And like I said, I like all-time highs, but this stock had gone from X to 3X.
Which one was it?
I think there was Jindal Poly. There were 4 stocks at the time, or 3 stocks. Jindal Poly, there was Polyplex, and there was Uflex, I think. And they were going up like crazy. So why do I think about it all the time and say, why do I even need this information? This is like Fourier transforms at some point. I know it's useful for some people, but
very useful information, especially while picking stocks, right? I mean, that's how some of these things really work, and that's how you pick multi-baggers. There is this big income divide, right, in India. I mean, this K-shaped recovery, as everyone's talking about, that's not necessarily a good thing in the longer run for any economy.
I agree. I think there should also be a massive recovery at the bottom end. Which is
just not happening.
It's currently not happening, but it's changing. The contours of it are changing. I think after the elections we'll find out that a lot of money has now moved away from the cities to the villages just for the elections, because people are getting money. So those people now, when they have money, they will be able to find avenues to spend it. If you're in a village, by the way, it's not that you don't have any money. It's that you don't have avenues to spend it. A little while ago we were talking about Bangalore and the villages of Bangalore, if you may. And there are times when you can have money, but there's nothing you can do to spend it. So what happens is either you save it, you hoard it, you buy more real estate, and so on. This is how I think the structures we find, for instance, in the PMS, that we get people from the strangest named places who call us and say, we don't even want to meet you, we'll give you our money. And I am surprised out of my wits, because I'm thinking, because we are 50 lakhs plus, that's the minimum you have to invest with us. But they don't mind, because they've seen us over years, and they said we've formed a trustworthy bond with you, at least online, and we want to be able to communicate, and we can do this over email, we can do this over a phone. I'm surprised because I'm thinking first, it's a large sum of money to give to someone they don't know, but also, how come they have so much money in this little place? or a place like Sulya near Karnataka, near Mangalore in Karnataka, or a place, a small tiny village whose name you can't even pronounce from Kerala, which is amazing because I mean there is a lot of small town India that has a lot of money, and because there are no ways to trickle it down. So for instance in Bangalore or in Bombay you find that the people who are in the lower income sector here are actually high income for a village in comparison, because just that they have high expenses, so they have very little left. In the villages the problem is that there's no trickle down. If the rich have money, they keep it. Since there's no avenue to spend it, nobody else gets to participate, because it's when the rich spend is the poor make money. Unfortunately, this phenomenon
flow is not happening.
There's no flow.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
The margins continue to be under pressure, and I have said in the last interview also that it's still inching down, and the needle coke prices are also coming down with a lag. So that is why the margin is under pressure, and it's likely to remain so for next 2 more quarters, it seems. For the last, since we declared the expansion in November 23, it's only the last quarter of Jan to March that we got this capacity. So on that capacity, our total utilization was in excess of 80, I mean between 80 and 85. Going forward for 24-25, we expect to be around 75% of the new capacity of 100,000 tons.
It's a substantial fiscal bonanza that has come in. We think the government could therefore choose to reduce the deficit marginally when it presents the final budget in early July, which is what we're expecting, but also leave some cushion for any unexpected shifts that might happen on the revenue and the expenditure side. This is actually going to add to the cash surplus that the government is sitting on. This could very well go, above 5 trillion INR, and therefore some sort of a reduction in the borrowing, could happen. Again, the details of this are likely to get announced in the budget. And as Somiran was saying, it's really positive from a demand-supply environment. So.
Everybody's talking about FIRE, right? Financial independence, retire early. Now, there are two aspects to this. Retiring early is also a choice that you want to make. But financial independence is something that is a need, I feel. Because, as you said, we don't have any kind of social security at retirement, etc. But what is your definition of FIRE? I mean, do you believe in the concept? And a lot of people are talking about financial independence, retiring at 40. You think it's advisable?
So I am way past 40, so and I'm fine. But maybe I'm a workaholic and in that way. But I think.
Are you financially independent?
I think I am now because now we've got a business which has profits and things like that. So there's a decent amount of income that comes my way, but. I don't think I'm financially independent yet in the sense of the numbers that I'd like to reach. The numbers that you want to reach is roughly 30 times your annual expenses. So you're spending 10 lakhs a year, you want 3 crores plus a little buffer, 3.5 crores. So you're spending 1 lakh a month, you need 4 crores today. And that reason you need that today is not because...
That 4 crores is excluding your major expenses like children's education, children's marriage, all of that.
Yes. So all of those are separate goals. So you have to compartmentalize your few corpuses into what I'm going to save for my retirement, what I'm going to save for my kids' education. So your expenses in 15 years are going to be roughly double. 12 to 15 years will be double. So in 30 years, you will be spending 4x. You're spending 1 lakh a month today, you're spending 4 lakhs a month then. Now my idea is that the money should suffice you to last all the way till you're 90. And if you're 60 right now, that's at least 4x in expenses. But if you're 40 right now, it's 8x expenses. So that means you're going to have to meet that much towards the end of your, or coming closer towards the end of your life.
When did you start investing in equities? And what was that turning point for you where you decided that, you know what, I need to start investing so that I can build a corpus for my retirement?
I think 2005 is when I really started putting money in, because that's the time I really started getting